Ripping it back over 630. Oh, they're just gonna take it. Nice. Nine shit out of luck.
Marvell is ripping here.
Let's go.
Ivan, that might be a headline. MRBL. Yeah, there's an SEC form here. Chief Financial Officer acquired 132,000 shares. No, that's the value. 3,400 shares at $78. So CFO insider buy for Marvell. I will be posting that shortly.
My algo is trying to tell me to go long SPY right now, but I don't know how I feel about it. Don't
Just
like it.
trust. Just trust.
There's one thing I don't trust during chop is honestly most indicators or algos. When you have like good price action and good setups and you see those things come in for the confluence to signal it, I think it's great. For SPY, like I see why it wants to long, but risk to reward, I mean,
Ooh,
every
real.
time SPY comes up here, it's just a slap.
So it was 4 insider buys: CEO and chairman of the board, president and COO, president of the data center group, and the CFO, all at the same time reported their insider buys.
QQQ new high day. It's not unusual to be loved by anyone. Oh, the long signal's going away. They got a minute and 10 seconds.
Rawr.
Marvell is popping.
Damn, the amount of plays I fucking sold early today is unreal.
Yeah, I'm kind of bummed about waking up late because there was a nice play this morning after the sell-off. I wasn't coherent enough to do anything, to be honest. Like, and I'm not just gonna hop in a play like that. But I wish I
Oh,
did.
APP's trying to do
These
it again.
these NDX calls that I grabbed at 590 are up $40 a contract. I
Oh,
sold
damn.
them for fucking $5 a contract.
My algo is about to close a long signal on this SPY candle.
Or
Yeah, we're ripping here. 708, 200 SMA, and a resistance area.
again, I mentioned the 668.50. If we can be trading over this on NQ with momentum, I like us to trade back to 713.75. It's the next spot I have for potential rejection. Then above 718.25, I don't have anything till London high. So see what we can do here. Just trying.
Oof, Marvel's still going.
Yeah. She popping.
I think we might have been first to that news. I'm not seeing anyone else report that yet. Trump going live, greeting Turkey as a Prime Minister Erdogan at White House. Yeah, they're doing that in front of the fireplace style press conference with Turkey right now. It's about to start. So I think he does take questions in these typically. Spoos, new high day, Casey. Should have gone long.
I did. I took
Okay.
I took SPX when that candle closed with the signal.
Those NDX calls are $60 a contract. I might throw up.
Throw up.
Won't throw up.
No, I might. God damn, that is disgusting. I don't even want to know what these. Hold on. This is gonna be even worse. Oh, it's worse.
I just took a trim on SPX. We're fucking pumping. Let's go.
I bought when I bought it at 420, like, oh my god. Oh,
You
oh.
paper handed bitch. Let's ride. Let's go. We're ripping.
I scalp with the NDX, but I don't know. I may have to like let one ride going forward. Those contracts from like near the bottom are up $190 a contract.
I just got filled at
Holy
770
shit.
on these SPXs from 660. Oh, now they're 800, 810. Let's go. Algo signal. Ah, finally something decent today. Jesus Christ.
Mita hit orb high. Probably no best spot to lock that in.
All right, let's move my stop to entry on SPX. It can hold here and not pull these contracts back to stop me out. Next target above is 650.65 up to 660 on SPY.
Ooh, Nvidia not stopping.
Yeah,
Once in
yeah.
50.
Nvidia's on a tear. Marvell's still going. Just broke $82.
Yeah, we had that news quick.
Yeah, that's a good one. APP is about to go make a new high day. I'm pissed.
He's
Oh,
pissed.
Fucking angry.
Oh, fucking pissed. Amazon green. Google high day. Ooh, Meta actually turned all the way around. Hit new highs. Rivian, $16. The fucking goat. The goat. Oh, come on. It's 708, then you could drop a little bit. Onto this bullshit. Yeah, there we go.
Just let it rip, huh? Let's sit here all day and do nothing, eh? Shit.
What a day. Oh my God.
Rivian 16.
Yeah,
Oh.
the goat, baby.
Market follower Rivian.
What?
Second place. Market second place runner up Rivian.
What's the first place?
Intel.
Dude,
Boom.
how dare you disrespect Walmart with 2 tickets?
No,
You
Walmart's
ever
not even in
disrespect?
conversation right now.
Don't you
Walmart
ever
about to
disrespect me?
lose its all-time its high revenue spot to Amazon.
It just took it back.
No, that in quarterly, but I got a feel.
It lost it for 2 weeks. It took it right back. What a
Well, he did
hater.
an Arnold
Lux Algo.
Schwarzenegger. I'll be back.
Lux Algo, great indicators. A lot of hate.
Indicators a lot.
That's fucking funny.
That was
Uh-oh.
pretty good. Dude, I got tossed around like a washing machine and finally got green on. I got ran over twice, got it back, got green on one account, closed that one out. Oh, got my other account going, got ran over, and then got it all back today. Dude, this price action has been terrible. I just took my first trade intraday watching SPY. It was for this long. But before that, it was just, God, so back and forth. If I would have been a little bit more patient, size down just a little bit more, I would have been so fine. I was watching SPX 6600 has been the huge key this morning. Huge key. If you're on SPY, it's like 657 and a half, 657.40.
Yes, sir.
I know you've got
Yep.
it marked, yeah.
6. I have a zone right there.
the bottom is 657.20, the top is 657.55. The midpoint's around 657.4.
That
That's-
second,
that's exactly right.
That second pull down was so nasty. It was so nasty because we got that huge reaction off of it. And I was like, okay, I'm gonna buy the little pullback here, buy red. Boy, it kept getting red.
Buy RED.
Just kept getting red. I was like,
It was just
"Ah."
arrows just raining down on me. No, and I just got back green on the day. It was just straight back red. No.
Ooh,
But,
and the money Walmart puts coming in here, 110s.
I bought
Uh-oh.
110. I bought 110 calls for next month.
Let's go look at the Wally Worlds.
Boeing getting a pop. Trump says they're selling a lot of equipment to NATO. That's a new high day Boeing on that.
That sucks because I cut my calls. Watch it just rip straight through 220 now.
The last thing I really want in these longs is ES and SPY to get to previous day's low. I'll be a pretty happy camper. If it really wants to get to the EMA 9 from the underside, that would make me even happier camper. The biggest fumble was right at the low of day. I should have taken a shot long when I saw double bottom and the EMA 21 on SPY. It should have just closed my eyes and taken the shot.
Oh yeah,
I
my
even
NDX
bumped you on
calls. I just looked at them. They're up $190 a contract. Disgusting.
What did you buy for?
1 second.
The
I'll get
timing
you
on
that,
those
sir.
things. The timing on those things is so like, and not difficult as much as it is just really key, because like it's like SPX on steroids.
I
So,
just
like,
I scalp.
Like I did SPX yesterday for that bounce off low of day. That was like a fucking sniper. And it's situations like that where I'll take advantage of it. Just to capitalize on it more. But I feel like NDX is like, yeah, that's
It was 24,210 calls for today at 73.15. At the high, well, it shows the high is 216 because there's nothing traded on it. But when I looked at it a few minutes ago when we were higher, it was at like 260 or 270 just about. So it was almost $200 a contract. Now it's 240.
how much did they cost per contract?
73, so 7,000.
You're in fucking insane.
It's better than doing Qs. I'm just playing
Oh,
my level to level.
I know, but like I feel like that is
1 to 2. Yeah, I do 1 to
insane.
2 contracts. I get my 500 to sometimes $3,000 scalp, and I'm out.
What if
The
what
hard
if you
thing
did
is-
that same size, but you did 10 contracts of SPX?
or Qs. That's the hard thing with NDX is like it's you have like to be able to leave it because the size is so big. Like to be able to leave runners is really tough, and you have to do
I
it
know.
once
That
because,
is-
That's what I'm
like, the
saying. The
spread-
I know.
size that you're putting on for NDX. I mean, I know SPY and Qs have divergences, but like right now, if you look intraday for like this long on SPY and Qs, they're relatively almost identical. And like those $7,000 on each contract, like these SPXs I bought were less than $700. Like you could have bought 10 of those bad boys.
Yeah, but I just
And
know NQ so much better, and I
Yeah.
just
that's
watch.
the key, right? So
NQ.
NQ or QQQ. Like a lot of times I do like calls or puts on QQQ based off of what I'm seeing on IndieX because I trade NQ off of IndieX a lot of times,
Yeah.
or SPX.
I do the same thing. I trade SPX and ES off my SPY chart.
Yeah, exactly. Well, and so a lot of people, 'cause it matches up, right? Like it'll there's a little like a small divergence, but I mean, SPY is based off of SPX. ES is based off of SPX. SPX is really probably the king of the whole market. IndieX is probably a close second. So QQQ and NQ are based off of that.
Mm-hmm.
So it all comes back to the same thing. That's why I look at those charts so often. I look at SPX probably more than other than NQ and ES. I'll probably look at SPX more than any other single chart in the market.
Yeah, I feel like with SPX, like I don't think I could ever do NDX. Like that's crazy. But like scalping it, right? Like you get like 150 or like $200 like per contract. Same kind of move on SPX, and you're still going to use the same size, but the difference is that you're going to be able to have more contracts. I think you would profit a lot more if you flip that from NDS to XPX by taking still using the same size, same risk and everything, but the amount of contracts you're going to have, but still get the $100 to $200 per contract gain, but you're going to have more of them and you can stay in the trade a little bit longer and not have to you initially do it for the scalp, for the reaction to see if we get it, but then it allows you, if it keeps holding up and they don't slam, it consolidates and makes that next leg. You have those contracts to let ride. I think you should fucking do the same thing, but do it with SPX. Get those more contracts. You're probably gonna fucking make a lot more doing that way.
The only problem, like you're right in the fact that you're going to be able to hold, trim and hold and manage a position better. In this case, the IndieX move was much more explosive than SPX because we barely made a new high here on the S&P, but we made a really nice push on the Nasdaq.
Yeah,
I think
So like
pricing
that's the only difference. Go ahead, PK.
premiums for NASDAQ contracts tend higher just because it is historically more volatile.
Yeah, and the spreads are different. Obviously, the value is way different. You're talking about 24,000 point instrument versus 6,500. So a lot of factors. Where's Jordy at? What's up, Jordy?
I'm right here. What's up?
Jordan.
I'm getting ready to maybe take a long on the ES midpoint.
Trump is still speaking, but I'm gonna head out to lunch now.
Heard that. Yeah, getting into lunchtime. I don't typically like to trade during lunch, but this is
are we
different
about to be in the
strategy, so,
lunchtime?
yeah.
Yeah.
Holy shit! It's noon.
It's
Yeah.
Oh, that's disgusting.
Mm.
Yeah.
How many contracts?
That
Bulls
that
trying
twen-
to Bulls
that
trying to
21
defend.
day 21 day on the SPY has been absolutely defended since April. One closed below it, and that was on August 1st. I mean, they have been defending that nonstop. You look at that trend, and it's just that's why as we came into it, I'm like, I'm getting out of short. I'm not looking to short into this.
Yeah. See what the day holds. We tapped into this big daily spot I had yesterday, and we held that. And I was thinking we just kind of continued higher from there yesterday into today, but then we sold off more, which threw me off. So I was like, okay, but we're reclaiming it all again. These bulls, they just don't give it up. Did you have any thoughts going into like Rosh Hashanah that we were gonna sell off? I mean, I know a lot of people kind of have that thought process.
Yeah, I did. I'm big adage of the old Wall Street saying, sell Rosh Hashanah, buy Yom Kippur. And I'm pretty sure Yom Kippur is on Wednesday. Don't quote me next week. So Monday I thought was a strong day, and I was kind of expecting some weakness on Monday. We didn't get it, but I guess it didn't start. I guess Rosh Hashanah doesn't start till 6 p.m. that night. So, they sold us off on Tuesday. That doesn't mean we're going to sell the whole time. I mean, and you got a strong market. I mean, we're not even, we just got below the 8 day. There's no real huge selling pressure in this market.
Yeah. guess no real longs until then. No heavy swings.
I'm still sitting some Apple calls from last week.
I've been in Circle. I'm not trading options on it. I'm trading 2x leverage, but same idea. Actually, I haven't been very
Trump just
bullish on
said we should
Circle.
have a
But
major announcement today. Just
wait, what's
wanna-
that?
They just said Trump said there's going to be a major announcement today.
Oh,
We'll see what that means. Last time it was
Yeah.
nothing, but
what that means.
I have a major announcement to make.
Mhm.
I'm going to play golf this weekend.
Yeah.
I have a very important announcement. Cannonball.
Yeah, I'm long 2x leverage Circle right now, though, Mike. I don't know if you like this name. I just like the setup that we have on the daily. I'm not an investor in this. I just want to play this.
I have to believe I don't understand Circle, what they do as well as some other names. I know they're into
don't ask me.
stablecoin. Yeah, I really don't
I'm just
understand that
trading it.
model. I thought CoreWeave was a better trade today. That honestly, I didn't take it, but
CoreWeave was a great one this morning.
you know, that was just incredibly strong.
Yeah.
I was actually debating. I have an IT position I bought back in the April timeframe and sold a whole mess of it into the highs of Bitcoin. I've been debating if I wanted to buy it back today or not. I decided to wait. I didn't buy anything long term today, but I was tempted because I'm like, this could be it. I mean, this could be as far as we see. But yeah, it's kind of, the VIX tried to pop and it got way up today, and then it just after 10 minutes, 15 minutes, just sold off right back down. Lows of the day.
What's up, Evan?
Yo.
Evan, I'm taking your job, buddy. I'm the new host.
I know. Call after call. Well,
Easy
good thing
enough
you
to
were
do,
there.
buddy. No
I
worries.
come back in and I hear you hosting. Easy enough to do. This
Well,
guy.
I'm like, well, somebody had to do it. I mean, I'm like, okay, I think he got kicked, so let me take over and help out. At least
Was that yesterday on Stocks on Spaces, Mike? He took over.
Yeah.
Let's go. Mike's a real one for that.
Dude, I was on stream. I looked down and Evan was like, "I got it." I looked down and Evan's not even there. I was like, what is going on?
I know.
I'm talking on stream. I couldn't do anything about it.
I got a call. I got looped into something. I was like, all right, fuck it. They'll figure it out.
Are we talking options here?
Yeah.
I don't know if our buddy from Unusual Flows are coming over, but I know we.
I'm trying to get that figured out right now, but we can absolutely get running with the options.
Talk whatever you guys want to talk about.
I want to ask a question real fast before we really dive in. I've been playing around with the options flow more, trying to get back as a tool in my trading. Options, Mike, I'll just ask you and anybody else, please chime in. But do you filter? Like, what kind of filter and settings do you use when you're looking at flow?
So I used to look at every piece of flow, and at this point, I tend to focus more on the flow alerts from like Unusual Flow and some of the hottest. They also have a sector shows the hottest option trades of the day, their picks. And the reason is, I think you can get so caught up in the flow, it becomes overwhelming. So, but one thing I would definitely do is I would set my minimum contract size to 250 options. I would also put a certain dollar figure on it. So if trade is under if a trade is under $10,000, you don't want to see it, right, or something like that. Why bother looking at it? I tend to take most of the ETF stuff out of it these days, except for big ones. So like, I don't want to see any ETF flow unless it's over $1 million or over $600,000. So pick a number. It's just because there's just so much of it, it just overwhelms you. So those are some things that can really help. Am I still here?
Yeah, you're here.
Yeah, you're good. I hear you.
Sorry. But with spaces, you never know.
No, spaces can be rough. Casey, I know you're using a lot of flow. Is there anything like in specific? Because I know you're calling out flow all the time. What is your strategy with that? Because are you just sitting there kind of, hey, big whales are doing this, I like the setup, I'm gonna follow it type of thing? Because I'm not really using that, so I'm curious what you're doing there.
Yeah.
I don't look at ETFs either. I don't look at SPY flow. I don't look at QQQ flow. There's a few things that'll come up for SPX. I mean, unless you see something significant, multi-million dollar trades on those ones, you can take those into account for flow. But it's mainly, you know, like your individual names that you want to see. And it's not so much the individual ones that you'll see, like someone buys, you know, $200,000 worth of these calls right here. Like just because you see $200,000 worth of, you know, Carnival Cruise Line coming in right here for these calls for January 2026 doesn't mean like that's really anything significant. There's two things that most people I think should look at. Number one is what we talk about all the time is the unusual. And for something to be usual, it's when the trade size is greater than like the opening interest. So you're going to see a lot of volume that's coming in on that specific options contract. And another big thing that I look at is one of the things that I have is something called urgent repeated flow. And that is when the same options contract is getting hit over and over again in a short amount of time. So instead of seeing one order come through where somebody buys
Yeah.
these calls for, you know, 200 or 300,000, you might see 7 or 8 different orders come through for 50 to 75 to 80,000, and you're going to see an order come in at, I'm looking at one right now. I see orders coming in at
I call it
11,
momentum flow. Same thing,
Yeah,
right?
yeah.
Momentum flow.
Yep.
The name has
Yep.
momentum. Yep.
Yeah,
Great point.
absolutely. So I'm looking at one right now, and it's that it was the ticker, the LAES one, and you'll see, just using this for example, you'll see someone bought position size for 164,000 at 1105. Then they come in again at 1106, 1108. And then there's another period at 1122 this morning, 1125, 1126, 1127, 1128, 1, 2, 3, 4. Like they're hitting the same options contract over and over again. It's almost like they're building a position. It's the momentum, or there's just again multiple orders coming in on the same options contract. If you put filters on to where you only want to see like 500,000 or plus $1 million flow, you're not going to see any of this. So hopefully you can, you know, play with whatever platform you're on, and they offer a way that can show, kind of like Option Mike was saying, momentum. For me, it's called urgent repeaters, and that is when you see a rapid repeat that matches the your filters criteria to show you that, hey, they're hitting this same call option right here over and over again, multiple orders. To me, that's something very, very important. Um, Instead of just seeing, you know, one giant order for $1 million, if you see 10 orders come in 3 minutes and each one's $100,000 each time, that's something to take into account. So that's one of the biggest things that I look at when it comes to looking at flow.
Yeah, some great points there. Vegas, I know you're on the stage too. I'm curious what you're doing in the flow area. I know you're always bullish. You're always trading long, which I love to see. But I'm curious on how you're finding some of your options plays and if you're using flow at all.
Yeah, similar to what some of the dimensions here, I think options Mike was mentioning, and Casey. I mean, I really like to look at various things. First of all, I like to look at the, um, premium size. I'm looking at the total dollar being spent as well, because I like to look for big money moves. And usually, when I look at that, the reason I like to look for that is because usually those have more market impact than a smaller retail trade. And I usually like to prioritize trades with premiums in the tens or hundreds of thousands. These usually will influence price action. So that's why I look at the premium size. And I also like to look at, the sweeps, blocks, trade frequency. Are these large orders broken into smaller pieces across the exchanges, or block trades, which are usually single large transactions? So sometimes frequent trades, like you mentioned, at specific strikes or direction can reinforce the signal. So usually when I see the sweeps and the blocks, that indicates to me institutional activity with better market insight. So usually I like to try to prioritize the sweeps with high premiums and consistent direction. So as one of you mentioned, I think a moment ago, was it Mike that mentioned it, or Casey? about like repeated call buying for stronger signals. So I really like to look at that too. So I really, if I see repeat, that gives me some, whoa, pay attention to me. That doesn't mean I'm going to take the trade. I'm going to look at different things. Sometimes I will look for, option flow trends across the sector, like tech, financials, SPY cues. I don't really worry, like, look at that. I mean, I look at it, but I mean, I don't really pay attention to the flow on that unless I see some really crazy size coming in, then I'll pay attention. But usually, that you can just trade on your own without having to look at an options flow scanner. And then also, I look at the time of day and liquidity, the flow activity during peak trading hours, between 9:30 and 11, and then again between 2 and 4. I find that usually that time of day, the liquidity is usually highest. So it's really important to avoid over interpreting low volume flow late in the day. And usually high volume periods reflect stronger market participation and more reliable signals. So I usually try to focus on flow that come in during those hours of the day as well, because it helps me personally to filter out the noise from low volume periods. So, I just, watch, and I don't chase anything. If I see something and I'm interested and I'm like, oh, you know what, I love to be in that contract, but it's like $8 right now or it's $7 right now, and I have time on it because it's, let's say, expiring in November, for example. I will take a note of it and I'll take a look at the chart and I'm like, oh, you know what? I really like this chart. It's a nice chart, good, nice weekly chart. I like, let's say from a technical angle, I like it. But I will not chase that contract. I will wait and I will take note of it and I will see if I can maybe buy it at a cheaper price. So I'm not going to chase it just because, John just came in with it and bought, $1 million worth of it or $500,000 worth of it. So I'm going to wait. Maybe I want to participate, but I want to wait and get maybe a better entry. So I just track the price and track the contract. So I follow the contract, even though I'm not in it. I will follow it for the whole week to see if this can actually, pull back so I can get a better entry. And then if I can get a better entry, then I can actually get add some size as well. So I will watch those contracts because we've seen so many times, depending on what happens in the market with news and headlines, like IV crush can happen so fast. Even if you have something with time on it, I've still witnessed IV crushing. So I will track what I like, and then if I see pullbacks, I will take advantage and jump right in. So there's different strategies that work for me that may not work for someone else, but that's just like one way that I like to do things too. Is I will track the price action on the contract, and I'll monitor it. So I'm constantly revisiting that same strike, same expiry date. I'm like, holy crap, it's now, $3 and it was like $6 the other day. I think I'll take advantage of this pullback. And then I'll double check the chart and I'll make a decision if I'm going to take it.
You know what I love about Unusual Flow? You can bookmark that flow and it'll save it for you. Just go look at it real quick. That's just a real nice little feature when you're using them. You can go in and you can bookmark that actual flow and then watch how it's trading there, and then so you don't forget about it.
That's actually nice. I've never
great feature.
heard of that.
Which app is that on? The bookmark.
That's on the Unusual Flow.
On the Unusual Flow, yeah. Okay, got it.
Yeah, I'm curious how you guys are risking, because I know with options this can be a little harder than maybe trading futures or just trading like traditional shares where it's very just based on price, whereas with options it can be time based as well. So I'm curious if some of you guys might be, are you sizing for zero? Do you actually have like stop losses set for options? Because I know it can be a completely different type of trading. So maybe options, Mike, I'm curious on how you're risking your positions there.
So first off, I'm in front of my computer, so I always have a mental stop of it 50% at worst. So I always put a 50% in. I almost never anymore, and I used to all the time, let options expire worthless. Do that. There's no reason to let it go that far. And once I've had a big move, I'll get out and look to get back in. So if you're swinging options, it's different, right? Swinging them is fine, but when you get in on a day like today and you're not really sure, you may not want to just sit in it. So when NVIDIA, when I got in this morning as it came off the lows, and I trimmed a bunch into the early morning highs around 11 o'clock. Then it had that wicked little pullback where it dropped about $1.50 in 2 minutes, and I said, okay, let me get out of here for now. The last couple contracts I had, and I unfortunately forgot to get back in. But I think you'll always have some type of stop loss, and it's whatever your pain level is, and it's part of managing it. So one of the biggest mistakes I see people make is, they go out and they have a small account and maybe a $30,000 account, and they buy $10,000 worth of Tesla options, and they can't take the pain, right? If you have 10 contracts at $10, you can't take that pain. You're oversizing your position. So the first thing you have to learn is to size your position right. Maybe have one contract, right, on a $30,000 account, or maybe two, and then and then set how much you're willing to lose. And it can't be something silly, because you have to recognize a name like Tesla, that stock moves $1 a minute. If you're in a option that has a 30 or 40 cents delta, you're going to be down 30, 40 cents on your options within a minute when that thing works against you. So you have to be realistic on where you're willing to go in and where you want your losses to be. So for me, I go in, I decide what I want, and I usually have a pain threshold for money where I get out, and then I look to get back in, but never more than 50%.
Yeah, I love that. I know last year when I was trading a lot more options, a lot of the time, like, it was hard for me to get out, and so I would literally just size every position for zero, and maybe that helps somebody in the
And
audience. I don't know.
that is a viable thing. I'm taking this. I'm willing to
Absolutely,
lose
yeah.
it all, but I mean, you have to size it for that, and then recognize it that you're okay with that.
Yep. Yeah, that little thing helped me a lot. And even though it's essentially the same thing, right? Even if, like, I'm risking the same amount of dollars, right? I'm risking $500 on this play where I have a stop, or I'm risking $500 on this play where I don't have a stop. Either way, I'm still risking $500. It's just like mentally, it's always. I know a lot of people have a hard time taking that stop, especially on options, and that's something that kind of helped me in the past there. So
I just have a
yeah, some
question
good
for
stuff.
option Mike. So Mike, like if you
Yeah,
have
go for it.
just for clarity as well. So if you have an option strike that expires, let's say 2 months down the road, let's say November, and you're down 50%, even if you took 2 contracts or one, will you actually cut it at that point, or will you just leave it and see if it reverses, or will you maybe say, I'm down, let me add one and see how this can play out, or do you just like, nope, it's down 50, I'm following my rules, cut the trade? Because a lot of traders love to do that and follow the rules.
I generally stick to my rules. I very rarely add to a losing position unless I really have incredible conviction that it has to be huge, right? Really has to be like, the market's got this wrong, and that's always a dangerous thing to say, right? Because the market's right all the time. I'm the one that's wrong, but I really just have faith in it, and I'm just watching the shenanigans go on. I almost always will bail out, and I'll usually bail out before 50%, but I'm in front of the computer all day, and a lot of people aren't. The thing I'm also doing is, to be honest, I'm looking at the technicals. If we're losing key levels, right? Like, the SPY's under the 8-day and hit the 21 today. If we're losing levels like that, and I'm not near and I'm not close to my 50%, I'm going to bail out now. If we're losing it, if we're losing it and I'm below 50, I'm going to look at technical levels on stocks and make a decision from there. But honestly, I very rarely add unless I start a position with room to add, which I will do. There's times I will say to my room and say, hey, I'm taking a starter position here. I'm not going full size because I'm not sure if I might be getting into this early. Did that answer it?
Beautiful. Thank you so much.
Thank you.
Yeah, Vegas, maybe we can deep dive into how you're risking a bit more too. Is it a similar style to
Yeah,
Mike?
you know what? Well, sometimes like the thing is like a little bit similar, but I'm a little bit different in a way that if I have time on it still, and I'm like, okay, this is down. Why is it down? So I'm gonna look. I'm gonna dig a little bit first and say, okay, let me look at the chart. The chart's still intact, like it's holding support. 8 and 21 for me. I really look to that. It's 21 days fine. So it's holding support, and I'm like, you know what? I might actually add one. Like I'm not gonna add like a whole bunch at all. Like I'm just gonna add maybe one, bring my average down a little bit because I still have, let's say, 2 months on the contract. But I mean, if it still pulls back at a later time, I'm definitely not gonna keep adding. I will just, suck it up and take the loss. But I am a little bit like I'm not just gonna take the loss instantly just because I'm down, because I've done that before in my personal trading. And then the next thing you know, like 2 weeks later, this thing turns around. Had I, and I looked at the chart, I'm like, oh, but the technicals are there. I know, but you're down 50%, just cut it. And so I should really have tried to let the chart direct me, because the chart's showing me that, what, there's still a good setup. It's just down for, maybe it's market headlines, or, comments from, Fed speaker made a comment and the market's pulling back. That doesn't mean the chart, like, to me, the chart's not broken. So if the chart's not broken, I will consider adding to the position, but not go crazy and double it up or anything like that. No way. That I'm not doing. So that's how I like to do it, as long as the chart's not broken. But if the chart's broken, yes, take the loss and move on, because there's always going to be something else to trade. And I actually don't want to babysit a losing trade. Like, if I'm losing, I take the loss, move on.
Yeah, that's a great point. Are you guys doing any options selling at all?
I don't know, but I should do more of that. Because
I
you can
hear
make,
that a lot
I
from
keep
people.
hearing like good people telling me, like, you can make some really good money selling calls or things like that. I don't do that. I should.
I will sell calls if I don't want to sell my position in stock against it. I'll do cover calls, and I think we're heading into a little bit of a downturn or sideways market. But other than that, I really just don't tend to do that. I tend to just do straight puts and calls. I used to do spreads more often, but I find spreads are just so tough to get out of. They get wide. You have to get both legs to move the right way. Kind of just stick there with just regular puts and calls, straight direction at this point.
Yeah. Do we have Knots in here? Knots, you here? Maybe not.
I see him.
I do see him, but I know he's doing a lot of option selling throughout the day. He does spread specifically, like you're saying, and he does really well on them. But he has been doing it for a while, and I know it's not as flashy as directionally trading, but definitely a good thing and something that's super consistent. I mean, I see him. I think he took a loss yesterday for the first time in like months, literally. And the losses are usually pretty big, but when the win rate's so high because you're playing as the house, it's very beneficial there. I'm curious how we can use
Someone say
the
spreads.
flow to. Oh yeah, I did. I was
Ooh.
trying to get over to you, see if you see how you're doing your
All
spreads and
cups,
stuff,
say
and if you're
magic words,
using
say
any.
spreads.
Yeah.
Ooh.
And I'm curious, like, are you using flow to like? Can you use flow to help you in those positions, or is that more just like directional? I guess.
You probably could. I haven't. But for me, it's just directional. Wrong. If we go one directional and we're down a certain percentage, I usually play that side and look for the reversal ups to the upside. It all depends. Like, it sounds weird as I'm saying it, but like once you do it for like a month, you'll understand exactly what I'm talking about. Like yesterday, I lost initially on a put spread, and then I reopened another one and made back. Sorry. Yesterday, hold on. Let me see. Yesterday I did not lose. On Tuesday I lost.
Gotcha. That's what it was. Yeah.
Yeah, Tuesday I lost. Then I reopened another one, made half of it back, and then yesterday I made the rest of it back. And then now I'm looking to be green if I open one today from that Tuesday trade. So you always make it back within 2 to 3 trades with how I'm doing it specifically, with the stop loss I have in play. So yeah, that's a little bit like today. I wanted to do a put spread because we were down about 1%, and I should have did it. I didn't, and I may just honestly go the day without even opening one because I kind of missed the best opportunity that I really wanted.
Yeah, who's been doing a lot more options trading too is Evan up here. Evan, I don't know if you're here
I
able
got
to
nothing
talk,
for you
but
on this one. Nothing smart to share. I'm listening,
no, but
not
I'm
talking.
curious if you have questions for the
I have
panel
no idea
today.
how to
Got
use
a bunch of
options
great
flow at
options.
all. I don't know how you can tell what's between buying and selling and stuff. I know people talk about buying at the ask versus whatever seems to be something that's important. Yeah, I haven't looked too deep into options flow, so I have no idea.
Yeah, you can't really tell which your buys or sells, can you?
It takes a long time to really determine. It's
Yeah.
kind of a little bit of an art. We have these programs that do a nice job of looking at stuff, but really it's still an art. It's still trying to figure it out, and it's interpretive. There is no definitive on what's going on because Funds especially love to hide what they're actually doing. They don't want you following. So they will absolutely leg into things, hide what they're doing. You don't know what it's tied to. So it really is a little bit of an art form to figure it out.
Emp, you want to pop in with any thoughts?
Yeah, I mean, the understanding side of options. I mean, I love picking people's brains on the flow and different stuff like that, and just like options trading in general. The spreads conversation I think is very interesting because I think a lot of new traders get into options trading and they see, oh, I can buy these options and they go up hundreds of percent. And if I lose, they only go down 100%. Like they love that aspect of things, but the spread side of things, the option trader's worst nightmare is the sideways market, right? Unless you learn, like Knots was talking about, to sell things, and you can sell the premium as much as you can buy the premium. So I think that piece of the conversation is really interesting to me. That's one thing that I really want to add to my tool belt. Like I've learned the pieces of it, but I just really haven't dove in fully. And honestly, Knots is really good at it. Casey's good at it. I'm sure the other options traders up here are solid at it as well. Just those are the two I'm more familiar with. But that's the one thing that I think about futures because that's what I trade the most. And I think, okay, well, futures, I don't have to worry about if, I mean, we can go sideways for 3 hours. I haven't lost any value in my position. But there's a lot of times where I would love to look at a market and say, okay, this market probably needs to go sideways and consolidate. What can I do to take advantage of that? And that's kind of what Knots was describing there. I think that's a very important piece of the options education stuff here.
I think what most people don't realize is the options trade is a rigged game. And what I mean by that is you're trading against big funds, right? They're allowing you to use these options to create leverage, which is awesome, right? Which is why we're all attracted to it. It's cheaper than buying the stock. It works really well for small guys, especially again, it works well for any size. But you're trading against big funds and stuff that are and market makers that are trading against you is really what they're doing. And when you buy it, they're betting the other side of it, right? They're saying, "Well, we think we'll sell you this call because we don't think it's going anywhere," right? It's really what's going on. And it's all good, but you got to recognize that the spreads, the implied volatility, the way that the options work, the decay, it's all designed to work against you at the end of the day, and to make it difficult to sit in and to really make money. That's why premium selling is so big because you sit in and you just feel comfortable as long as you're good with that.
What are some trades you've taken recently? That could be a good direction to go about here, Jordan. Anything options, right? What trades were taken? Any interesting flow we've seen recently? I always see the people talking about it. There's always that tweet that people love that everybody knows one, but I don't know how much people are actually looking into it. It seems like all these big moves have some options flow. You can kind of look back in retrospect, but I don't know how much. I don't know. I feel like anyone can say that
Well,
about anything.
Nvidia today was one of the reasons I got long it because it was smothered in call buying off the lows. And so, it was acting a little stronger off the lows and it was smothered in call buying. So I jumped on that one. The other reason I jumped on Tesla short with puts out of the gate because it was smothered in some put buying out of the gate and it just looked vulnerable. And that's kind of what I look for. I look at the chart. I look at how it's moving. Like, they came in today. Yesterday they were hitting bull calls, and the stock kept dropping. So I just looked at that and said, I don't know what they're doing here, but this is not for me. Right? You have to take a second and look at it. Just because there's call buying on something or put buying, if it's not going with it, doesn't mean you necessarily should take it. You should look and see how the stock's reacting. Price action is king.
Is there a specific way you're picking these contracts? Because I know when I was trading, like, I don't know, when I would be like swinging for a few weeks or so, I'd always be going about a month out and wouldn't really be trying to go too far out the money, right? I'd be trying to find those contracts that are maybe just out the money, fairly cheap on the premiums, and that are worth the squeeze in terms of IV. So is there like a specific way you're doing that, Mike, or anybody else we
Yeah.
can get over to Vegas too?
Yeah, I mean, for me, it's very simple. I like to go at least a month out most of the time, unless it's an expensive name like Tesla or Meta. So for Tesla, I was trading next week what puts? Hang on a second. Pull that up for you. I was trading Tesla the 410 puts for next week. And I'll typically go, it depends upon the stock. I'll look at how far the stock moves on an average on a day, right? That's the average true range of the stock. And then I'll size my options accordingly and where I go. If it's a name like Tesla, which is moving like 14 bucks a day, I could be 20 bucks out of the money and make great money. If it's a name like Open, which moves maybe $1 a day, you got to be real tight to the money. So you have to take that into account here. You can't just go looking at it and say everything's the same. Names that have a bigger move, you can go further out of the money, and that means less risk. You don't have to be right at the money.
What about you, Vegas? How are you picking these contracts when you're looking to, especially like intraday trading? How are you picking these contracts?
Well, usually, like for weekly contracts, I will take a look at the actual charts and I'll look at the money flow because I like to follow dark pool money. So I kind of take a look if there's been any dark pool money on the actual stock. So if there is, then usually those ones there, I'll take a swing trade. For weekly trades, similar strategy, but I will take a look obviously at the chart and obviously look at the volume because that really, is instrumental to the options in my opinion. But also take a look at the volume on the actual stock because there could be like good activity on the option, but if the stock doesn't have a lot of volume, maybe it's not suitable for a weekly. You need to take something that's with some time on it. So. Um, I will just determine, like for example, Marvell. Obviously, you guys commented or pinned up here the insider buy. So I did see the news on the insider buy. I love that the CEO put in a little over $1 million in the actual stock. Um, so I thought, okay, you know what? I'm going to trade Marvell. Let me look at the chart. I looked at the chart, and I did it really quick. Like I pulled up the chart, had it all already like labeled and everything. So I'm like, oh yeah, it's holding up the support levels, perfect, it's ready to go. But I didn't want to take a weekly because sometimes the move doesn't always happen right away on a weekly. And I said, I have to see that the market's going to like this actual news with the insider buy. So what I did is I just went into something for October 3rd and I took the $85 calls for October 3rd and around, I think it was like 58 cents around there. So I took that one and thinking, it's going to take me maybe sometime next week, I'll hopefully get in the money on these 85s. And of course, the market loved the news. Everybody was jumping on this contract, not necessarily my contract, but they were buying maybe weeklies. And obviously the one I have now is doing really well and the stock's doing is performing well, but I didn't want to take a weekly because again, I don't really know if the market's going to participate in the trade. They might like the news, but because it doesn't matter what I think. I could be like, oh, the chart's so nice, I like it, I'm going to buy it. But it's like, what is the market thing? Is the market liking this news with the insider buy? And clearly with Marvell they do, because the buyers came in and the action's there. So that's a good one to make a decision. Okay, fine, maybe I will do a weekly. But in my case, honestly, I did the one for next week also because it was cheap at the time. Like it was like 58 cents. So I'm like, you know what? That's a really good deal for something further out from the money. But you know what? I have time on it. So I don't want to babysit this trade. So obviously the trade's printed really well. I'm going to take my money. It could go much higher for sure. I have a target on this one around 80. Our target is like $87 here on this one. Um, so let's see what it's going to do. But I mean, I made good money, so I don't need to keep holding and hoping that's going to go more and more and more and more. Uh, so that's how I like to decide. But again, the market makes a decision too because it's a great trade. But as the market participants, are they going to show up? And obviously, in this case, the answer is yes. Now, I'm kind of thinking, damn, I should have taken a weekly because they were like the $80 calls in the money at the time. I think they were $1 when I saw that news. And I thought, oh, it's $1, it's a weekly, tomorrow's Friday. Do I really want to buy this right now and it expires tomorrow? So I'm like, no, you know what? I'll just do one for next week and I'll just pick a different strike. So, hence, those contracts are now over $4. For $1. But I don't care. I don't regret it. I was able to size more on the one for next week because it was like almost half the price of the weekly. So obviously further from the money, but now as the stock's moving, I'm getting closer to being in the money soon. So I'm not regretting that I didn't take a weekly, but it was a great trade. So that's how I like to decide and go go from there. Weeklies don't always work. That's the thing. The only good thing is that it's cheaper. but I mean, it doesn't mean that it's going to work for you. So sometimes with weeklies, I will watch my size. Maybe I won't go as heavy because it's not, it's you only have 5 days, and I'm not looking, may not look to hold for 5 days. I want to maybe hold for 2 and then grab my money. Or maybe I don't want to swing, and if it prints the same day, sometimes I'll just grab it. So it just depends.
What's an IV percentage that you look at and you're like, okay, there's no way I'm trading this. There's no way I'm buying these contracts.
Anyone? Who's that for?
That was for Vegas, but I mean, you could chime in, Mike. Yeah.
I'll let her go first. Go ahead.
She might have stepped away or something. I don't know. Yeah, go ahead. You're good.
I don't have an IV percentage per se when it just looks bad. So, like I traded open a couple weeks ago, and I made a ton of money on options on that thing. Not that the stock went up much, because the IV kept exploding as the options kept coming into it. Whenever you see IV above 100%, you have to start to ask yourself, should I be in this? And then when you see names like get to 200 and 300 and 500, you're asking to be hurt. It could go up and you could make a lot of money, but chances are if that name starts to drop, the IV is going to come crashing in. You're going to get double hit on the name dropping, the delta going against you, and the IV going against you at the same time. The only difference is when you're looking at earnings. So when a name has earnings coming up, they'll start to see the IV go up. It typically doubles. IV typically doubles on a name going to earnings. That's the market maker's way of making you pay to play. So the higher the IV, the more expensive the contract. And before the market opens on the following day, they'll start draining the IV. And so that'll be gone from the contract. That's why you have an implied move that you need to hit in order to season about 2 weeks ago.
Yeah, that's when things usually get really crazy with the IV. A lot of the time, you'll hear like Paper Gains up here. He'll say, "Oh, this play isn't really worth the squeeze. The juice isn't worth the squeeze," right? And that's because, like, oh, it might be a good setup, but in terms of how high the IV is and how much things really need to move for you to even make money, it's not even worth trying it, right? And so that's when you can move to other assets, right, and try to trade other things. That's why we love like leveraged products as well. So yeah, IV, big thing to watch out for. And all the Greeks in general, I feel like are looked over so much by new traders, right? They just want to get those cheap premiums on options when the Greeks are very important, and you have to be aware of those. I'm curious, Mike, like how important are all the Greeks when you're picking contracts? Are you sitting there like really worried about the delta? I know it depends on kind of what options trading you are doing, but is that play a big amount of importance in your trading?
So to me, the way I've set up how I look at options, I have delta, theta, implied volatility, open interest volume, and then mark and bid and ask are the important ones for me. Those are not all Greeks. Outside of delta and theta, I don't care about the Greeks. Just to be perfectly honest for how I trade, delta is important, right? Delta tells me how much the underlying options should move based upon a dollar move in the underlying equity, right? So if Tesla moves $1, I'm in an option that has a delta of 35, then I'm going to get a 35-cent move, maybe, in the name. Data tells me how quickly that option is decaying, right? So every day that goes past, if I have a decay of 6 or 10, that tells me how much I'm going to lose on that option if I stayed in it. And IV just tells me how much I'm paying. It also tells me what's going on. If I'm seeing the stock going up and IV is dropping, typically there's some type of problem there. So I'm keeping an eye on that. And if I see IV really spiking and I see my option going up with it, that's a great thing. It could also work against you. Sometimes the stock's going up, but IV is getting killed, and the trade's just not working because of that. So for me, those are the real important things to watch. I'm sure some other people look at different things, but for me, it's really delta, theta, and IV are the important ones. Open interest and volume are other areas I'd like to see. And obviously, I want to know what the damn spread is, because if the spread's too much, I'm not going to get into it. I typically like my spread to be about 3%. I love when they're a penny wide, and definitely don't like when they're more than 5%. And that keeps me from trading some names like Netflix I won't touch anymore. Just, it's too spready. Ulta, another one, some of these names that are just getting too expensive. Meta, I don't go in as often anymore because it's just the options are pricey and they're too spready. And for me, that's just too dangerous.
It's important to find those names that don't, perform well for your style of options trading and stay away, huh? And I feel like picking one name or picking like a little handful of names to focus on, whether you're options trading or just normally like any type of trading, I think it's going to help a lot, right, Mike?
It absolutely will. And I think the biggest mistake is people think, well, I mean, I just trade these. And so, you look like a name like, what's a good one? Like Lockheed Martin can be wide. Some of these names are just wide. Oracle, which I traded last week. I mean, look at some of the values on these things. They can be $1 wide at times, these contracts. That's a lot, right? When you have $1 spread on an option contract, that's very difficult to manage your risk, because if you have 10 of them and you're in on a $10 option and it's got $1 spread, you're down $500 to $1,000 as soon as you get into it. And if you try to get out of it, you're going to have to probably you're going to get killed on that spread as well. So that means, you're probably giving back, you're probably giving $1 back to the market maker on entrance and on exit. That's very difficult. You got to be so careful with that.
Yeah, definitely. Vegas, is there any options plays you're looking at going into the end of the day here? Maybe any swings that you're
Oh,
watching?
sorry. You guys were talking to me before, and I got a phone call, so I couldn't.
Oh no, you're fine. You're good. I
cut
assumed
off.
like something happened.
So
You're
I
fine.
apologize. Did you want me to
No,
answer
you're good.
the question, because it kind of cut out? I cut you guys off by mistake.
Gosh, what did I
What was
ask
the
you there,
question?
Mike?
Can you repeat it?
I think
IV.
it was about I think it was
Is it
about the
already
Greeks
covered? I
there.
don't want to waste anyone's time.
I think you were asking, like, is there any IV she wouldn't touch? Like, what's
Oh
IV
yeah,
was too
that's what
high?
it was. We were talking about IV percentages, and I was asking you if there was like if there's a specific percentage that you look at and you're like, okay, like there's just no way I'm gonna trade this right now.
For me, from buying the options, I'm looking for like less, less than 30 to 40. I like to look for stocks with low IV, but potential catalysts, like, if they're going to be earnings, FDA announcements, um, sometimes, anything with a rank of 25, sometimes I like as well. For sell, I mean, I don't do any selling, as you know, um, but obviously I know high IV increases the risk for sure, because if a major IV crush can happen. And look at, like, think of it like options trading. I mean, sorry, earnings plays. Those are like, I always size those honestly for zero, because I never know what the guidance will be. It doesn't seem to me that the market, if the earnings could be not the best and the guidance is amazing, the stock will move. So, sometimes the earnings is amazing, the results were good, but the guidance sucks. So the stock, pulls back. So I always size the earnings for zero. So I don't even care what the IV is. I'm like, oh yeah, okay, if this is pretty cheap, I'll take some size. But if it's not cheap, I probably won't even touch it. Or the most I'll spend is like $100 on a contract. So maybe I'll take just a few, like really small, because I know, like, I'm gonna lose, let's say, $200 max. Like, I'm not gonna gamble and take 10 and put in $1,000 in options earnings play. I'd rather just wait for the results and trade it the next day. But what I will do, if I really like the actual stock, uh, I'm, liking, let's say the option contract is a lot of money, because like we saw with Micron, it was a lot of money. But if there's an ETF available of the company, then I will trade the ETF as well instead, because I can sell it after hours and take my money, or close it and take a loss. So sometimes I'll do that angle instead, because I can still make money, and it's cheaper than the option. I don't have to wait till tomorrow. I can trade it after hours, and so I'll do that sometimes and just trade the ETF. That's risky, because it may not, the earnings, the guidance could suck. But again, it's about position size, and maybe I don't buy the ETF until the guidance comes out, and I'm like, okay, it's going. I'll trade the ETF and make instant money. If it doesn't work out, then it doesn't work out, because I don't short stocks personally, so I don't even buy, like, I don't short it. So if a guidance sucks, I'm not going to short the ETF or short the stock. So I don't do that.
The other thing with IV is you can use it to your advantage sometimes too, Vegas, right? So like when you're going to earnings, I don't like to hold options for earnings, because it's a crapshoot in my opinion, right? It just, you never know what you're going to get, and sometimes it doesn't pay no matter whether you're short or long, because it doesn't move enough. But the IV will keep going up into the earnings period. So if you buy an options contract that expires the week of earnings, typically you can offset almost all the theta decay in that name, which is pretty cool.
Yeah, that's an excellent point. That's really, really, I'm glad you mentioned it. That's excellent. So true. Like sometimes I've bought option plays, but I don't do too many earning plays as much as I used to in the past because I've lost more than I've won. Like I'm not doing these anymore. You learn along the way with this guidance. But you know,
Good. Isn't it
things-
scary that we all seem to learn more from our mistakes and our wins?
I know. Every time you get burned, you're like, I'm not doing that again.
Mistakes and our wins.
I know. Every time you get burned, you're like, I'm not doing that again. So now,
And then we do it again. And then we do it again. Then we say, I'm really not doing that again.
I know. Sometimes it's like, you know what they say, experience costs money. And the lessons, losing
Yes.
money is expensive. Like, you know, it's an expensive lesson to lose the money on trades. So sometimes you just tell yourself, you know what, just stay away from them, and you don't have the FOMO. It's like, okay, you know what, it's too bad I could have made really good money on this. And it's like, you know what, I don't care. You know, and also I keep reminding everyone, especially with the options, please look at the percentage gains of the trade and not the dollars that people post on social media, because sometimes the dollars, you're like, oh my God, the person made 50K. And it's like, okay, well, percentage gain was 25%. Like you can make that no problem on a day trade every day. Like no big deal.
See, I'm a believer of I don't care about the percentages, and it's a different philosophy. Is I want to make money. So if I go in and I make, you know, I have a long-term account and a day trading account. And my day trading account, I have a very simple thing. Everybody laughs, but I'm like, I look to make $500 a day. That's $2,500 a week. I can maintain my life based on that. I'm not killing it. And I make a lot more than that most of the time. But so for me, if I get that kind of money, I'm happy to take that out and then start looking for my next trade, or at least take most of it off at that point. I don't care about the percentage. That just doesn't bother me. To me, it's about money, and that's all that matters. But I understand what you're saying. You're right. You can sit in stuff and make more, but I don't care about the percentage. I care about the actual dollar amount.
Yeah, I mean,
Different philosophy.
I like both. Like, I like percentage gains. I like to measure the success of the trade. Oh, that was an amazing trade. Or, you know, to me, it depends on the size too, right? Obviously, the bigger the size that you're taking, the more money you're going to make. You know, so that goes hand in hand with each other. But yes, I like your strategy with the $500 a day. I don't really try to pressure myself to make, you know, I'm like, okay, let's see what I'm going to do today. And I try to give myself
It is really a goal for the week.
I like it.
But it's like, you know, it's a goal for the week, but you say, okay, I want to make at least $2,500 this week. And I tend to blow that number out. I'm not trying to say it, but you know, okay, what's in play today? You know, what can I make that money on today? What should I be looking at here? But you know, I think a lot of people, and then some days like today, I've actually exceeded it, but it was, you know, I've only taken 2 trades today because the market's screaming at me to be careful here. I really don't like the market this week. I'll probably like it a lot more next week.
Yeah, I think the market didn't like it the last 2 days, but I did love it this morning because I was like, oh, it's red. I'm like, okay, we could probably go red to green today and see a lot of reversals. And we did see a lot of reversals today in the market.
I still would love to see a move down to like the 650 area or lower. You know, come on, let's give us a little dip. Come on, we can do it, guys. We can sell something.
I'm with you guys. You know, I thought I was the only one a little bit, but I haven't loved the market entirely this week, even though there's been some nice moves for sure. I guess just in terms of like clarity and conviction for what I'm looking to see happen, like I just haven't had as much of that this past few days, but you know, market's changing a little bit. We're selling off pretty hard, so.
You know, something that worries me is, and I'm on the boat that we're going much higher and that there's nothing to worry about here. So I want to be clear about that. But everybody's on that boat. And when everybody's on the same boat, that's usually when trouble comes from nowhere. And I keep that little thought in the back of my head keeps saying everybody's on the boat that we're going to rage through the fourth quarter. And everybody understands tariffs, but me. I am the only one in the world that is smart enough to understand what a tariff is.
Boy, was that the time to buy.
Oh my God.
And it just goes to show, and it's not like, oh, that was a rarity. I mean, look at every catalyst that's ever sold us off. You know, that's how it was. COVID that day, that was the low. I mean, I remember people thinking, oh, it's never going to stop to the downside. I remember 2022 when we took that dip, and that was the low in October or whatever, November, I think it was, something like that. That exact day, it's like your timeline's just raging with blood, right? And
yeah,
it just goes to show to try and not follow the herd there. I wonder if dived into this, but I know Paper always talks about this. I know he's not on with us today, but we'll get him on one of these soon. Paper always he's always diving into the options chart itself. Are you ever doing that, Mike? Like
Yeah,
the actual options chart and trading off of that a little bit?
Yeah, I do that sometimes. It's so because once the stock starts to move, you're going to pay to play, right? The market makers instantly tighten the spreads and they start making you pay to get in. The time to sell is when the market's moving, and you can see that on the option chart, right? You can watch how it's moving. When you see this thing going ballistic vertical, that's when you want to have your finger on the button just to dump it as it's going up. Because if you sell into strength, the market makers are going to give you a much better price than if it pulls back. The next candle starts to pull back, they immediately widen the spreads, and they're not going to give you as good of a fill. So I'm always looking at what's going on with that and how the option's actually moving compared to what's going on. And you can also see sometimes, if you're paying attention, when you get big hits on a spread on a line, you'll see the option price jump on that. And that's because the market makers are hedging it off. And again, we talked about this last week. How do the market makers hedge off a trade? They a call buy, or they buy the stock. How do they bet? How do they hedge off a put buying? They sell the stock, right? They make sure they have the actual hedge in place. So it's interesting to watch. You can see stuff go on underneath the covers, but it's tough to watch that and watch the 5,000 other things we're all looking at all day long.
Yeah, very true. Yeah, some good points on that. I know I was getting in. I don't really trade many options anymore, but last year when I was last legs of it, that's when I was really diving into the actual chart on the options contract that I'm trading a little bit more. And I know it's more to look at and like a little bit more work for all you traders in the audience, but I definitely recommend taking a look at that because that is what you're actually trading, right? All the odds are just tied to the underlying, but what you're actually trading is that contract. And so sometimes you're able to see things in that chart that you maybe don't see in the underlying. And it's definitely worth it because I know Paper's doing it, and you guys know Paper's crazy moneymaker in the options world. And so I kind of always ignored it, and then he really got me on that a little bit, and it definitely opens your perspective a little bit more. Are you doing that, Vegas, at all? Are you diving into those options charts? I don't feel like you are, to be honest. And I know you
Which
don't need to.
chart?
You definitely don't need to. But the chart on the option contracts that you're trading specifically, like, are you going in maybe even before you're buying them and going, hey, like, what is the actual options chart telling me versus just the underlying?
No, I don't look at that at all. I just look at the chart and that's it. Look at the actual chart of the actual company. That's what I like to go by.
Gotcha, just the underlying. Yeah, I mean, you definitely don't need to look at the actual options
Well,
charts. I
sometimes I look at.
didn't for a long time.
I will say sometimes I will look at the option chart. It's because I want to sometimes go back and see. When my dashboard shows me everything, but sometimes I want to see like, oh wow, what was the low of the day on this option contract? What was it closed?
Gotcha. Yeah,
I will use the option chart for that. Or if I'm
that
looking
makes sense.
for, so I do find that that is handy to look at that, especially if you're like to do reversals like me. I always like to see like, oh, what was this yesterday? Take a look. So I'll look at the option chart that way. My dashboard always shows me the day before closing price of the option contract well. So I don't have to actually necessarily go to the chart, but I sometimes will look at it just because I want to see like how did this behave yesterday during the day. So I'll be able to go to like the historical just for the day before.
Yeah, that's good stuff. I've been it's been, gosh, I think the last time I placed an order for an options contract, Mike, it was the beginning of this year in February, I believe. I've been so out of practice in the options. I've been on these futures.
Have you been trading any of these leveraged ETFs?
I have been a little bit. I actually took a loss on my CRCG.
We'll get into some others.
Just
There's some
just
W's.
the other day, but
I took a little
It's a
trade as well.
tool. Options are a tool, right?
oh, for
Futures
sure.
are a tool.
And
Option
they're a
stock.
juicy tool if you know how to use them. Like, they're really good. I'm just not I haven't been in practice with
This
them as
tool
much
cuts you
lately.
though a little bit too much.
It's about learning how to use them. And it's about learning when to get in out of it. And like, so I surround everything I do with rules, right? So I mean, we can go into this maybe in the next episode if you want. I mean, I'll tell you how I specifically, go in and find the trades every day. This is why my room loves me. It's like I'm sitting here. I'm like, okay, this is now taking out this rule, and this looks good, and we'll go into it. It's based upon 5-minute rules. It's based upon looking at the moving averages, looking at the Bollinger Bands, and looking how things are moving. And boy, let me tell you something. A friend of mine, Gino, who was in my room, taught me about Bollinger Bands, and I've never looked at them the same again. Totally changed my view on them and how they work and how the market reacts to them, especially intraday. So, great guy.
I love the Bollinger Bands.
Watching them on the 1 and 5 and how they're moving tells you so much about what the stock's about to do. It's unbelievable when you really look at it.
It's funny about that. I have a strategy that runs just that's like a big point of confluence there. So I used to use them and I didn't know how to use them, and they can be a lot of fun for sure.
But it's amazing. I'm watching them on short-term charts, and how they're moving as the stock's moving will tell you so much.
Agreed.
By the way, we're teeing up why you guys need to come back the next time and listen to our next
absolutely.
options
This
call.
is going to be a deep dive into the next conversation. We're going to have Mike get his whole strategy going for everybody, and we'll dive in with Vegas too. We'll get Vegas on the next one. Hopefully, maybe Paper comes in as well, and we can get some thoughts from him. But yeah, fun combo, guys. I appreciate you coming on, and for the audience, we're going to keep things rolling into another conversation with direction here. I know we got Gav up here as well, but that was a lot of fun with the option stuff. Make sure you guys in the audience are following Options Mike up here, following Vegas. They're always coming up, sharing this value. They don't have to be up here, but they do.
A beautiful panel today, by the way. I really appreciated all the panelists from the options world being here. Great commentating. Thank you so much. It was a pleasure.
Always fun, and I was happy to deep dive a little bit more into it because I mean I haven't been in that world as much lately, so it's a nice little. It's kind of nostalgic, So appreciate you guys. But yeah, we're gonna get rolling.
Thanks for having us, and great
course.
Conversation. I'll catch you guys. I'll catch you at 3:00.
All right, sounds good. We'll see you then.
Later, guys. Bye, Vegas.
Perfect. Thanks, Mike. Thanks, Vegas.
Here with TF. Talk
Yeah, hang with us.
Hang out for sure.
I see that direction account.
Yelled at today.
Yeah, I see that direction account and hit that request to speak. That would be perfect, and I'll bring you up on stage. Gonna talk through a few items here. Oh, they are on stage. Okay, perfect. Sorry, it was glitching where it didn't show me. Do we have you guys? Are you able to unmute?
Yeah. Good afternoon.
Hey, Gav. What's up? How are you?
Doing good. I know we got both of you behind the account today, right?
Yeah, it's gonna be two on the same account here.
Fantastic. Well, we had a nice intro to Direction last week with Doug, who came on and shared a lot of his background and items from the firm. Want to give you guys a brief minute here to introduce yourselves, and then we're going to dive into some more topical market conversations here. Kind of top of the line for everybody, just as a little item of what we're going to go over here. Touch on the recent Fed meeting, direction of the rates. We're going to really go into the semi news, specifically talking NVIDIA, China, some of these different sagas. Touch a little bit on the Mag 7, and also maybe double back onto like this China revival year to date, and then hit on gold as well. So that's a lot of stuff that we're going to be talking about. So hang with us here for this next hour. A lot of good conversations, very pertinent to the market. Before we do that, we do have Jake and Ed on the line. Do each one of you want to just give a brief intro of yourselves?
Sure. I'm Ed Egalinsky. I head up global sales and alternatives for Direction. I've been with the firm 14 years, and if most of you know Direction, as hopefully Doug did a good job last week on the intro, we're mostly known for tactical trading tools for short-term traders that want to express a magnified view, whether bullish or bearish, and look forward to talking about some of the things today. I think you were talking about options in the previous segment, different ways to express a bearish view. Certainly inverse ETFs we can touch on regarding that, and the mechanisms of how leverage and inverse ETFs work, because they could be sharp tools, sometimes could be tools that may not be something that somebody should use unless they know how they work exactly. So we could just refresh people on that as well.
Yep.
Yeah, 100%. Be great to hear from the experts. And yeah, please go for it.
Yeah, I'm Jake Behan. I am head of capital markets at Direction. I've also been here for 14 years. Me and Eddie started right around the same time, fist bumping over here. I'm a PM on the desk. I manage the semi pair, the tech pair, biotech, Micron, and I'm also a freshly minted chartered market technician. So Jake Behan, CMT, very excited to say that publicly for one of the first times. So I try to, I think leveraged and inverse ETFs can be very well used against the technical backdrop for entry and exit points. I think that's the most, direct application we see. So I try to lend a little bit of a technical lens on some color I send internal to the firm and on what's going on. So excited to talk about the markets with you guys.
Amazing. Very excited to have a couple of experts here. If anyone hasn't already heard of Direction, maybe you're under a rock somewhere, one of the biggest ETF firms in the world, right around 60 billion AUM, and some of your favorite products. I'm sure one that we'll talk about today, SOXL, that is their Direction Daily Semiconductor Bull ETF. Because I do want to talk product specific throughout here, I'm going to read a quick compliance voiceover before we get started, just because this is important. So an investor should carefully consider objective risk, charges, and expenses before investing. Their prospectus and summary prospectus contain all that information about Direction shares. And if you want to get them, you can either call 866-476-7523 or visit their website directly at direction.com and carefully read the prospectus and summary prospectus before investing. Excited to be working with y'all, and just make sure everyone realizes we are going to talk product specific, but it's important that you research these products and understand them before utilizing them. And really, what a day, by the way. I just want to kick off for a second with SOXL here and talk about NVIDIA, China, and semis, because this has had a massive day. This was down 8% at 9:45 a.m. Eastern, and it is almost all the way back to green. It is down right around 1% at the moment. There's so much going on in this world of semis right now. So I'll turn over to y'all if you want to kick off with a little bit of insights in that area, as well as maybe if you want to touch on SOXL at all.
Yeah, sure. And on SOXL, of course, triple leverage bull. SOXS is a triple leverage bear. Short-term trading vehicles, as you mentioned. For those of you who are familiar with the ICE Semiconductor Index, maybe you're familiar with the non-leveraged ETF SOX. That's the same index that we track with our triple leverage ETFs. And of course, it includes a basket of 30 semiconductor stocks. Among them, of course, the NVIDIAs of the world, the Microns, which has had news recently. Semis are coming off record highs. There always seems to be headlines with the space. Look at Intel, for example, the recent news on the government stake, and NVIDIA taking a stake subsequently, and now possibly Apple even taking a stake as well. Also, NVIDIA, you mentioned also the expanding their partnership with OpenAI. That was just recently announced over the last couple of days. So always seems to be headlines to trade off of when it comes to the broader semiconductor space. And of course, NVIDIA is the bellwether for the space, as we know. The ongoing, and I know you mentioned this in the last segment, the ongoing geopolitical risks and the potential chip security restrictions come into play when you're talking semis, and also directly the impact on tariffs, what that might have on chips as we move down the road. Micron's earnings the other day also, it was mostly a sell on the news event, as most of you saw in terms of the price action. But one of the things I'll let Jake get into a little bit is on the technicals, particularly on the ICE Semiconductor Index and then NVIDIA as well. I think he has some interesting things to share on from the technical side.
Yeah, I'm just looking at the semiconductors right now, a little bit of a gap fill on SOXL right there. A nice bullish candle today. I don't think there's a ton of reasons here. People are going to want to buy any dips, right? Any kind of flush out you see, I think that's going to be near term bought. But what's interesting in the semi space, I think, to brush past SOXL or anything, but Micron specifically, we have a product, MUU, that's a 2x long on Micron. That was an interesting one leading into earnings, of course. We saw some really solid inflows over the last, 5 or 6 days into, and then really even after earnings, despite that sort of mixed price action, we saw some follow through on continued inflows. So people and traders responding, positively to what they saw from Micron. I think it feels like these headlines, every earnings announcement that comes through is just this revalidation of AI appetite, right? And so Micron, one of the last to announce earnings this current earnings season, and then we head into a fresh earnings season with the hyperscalers all announcing in mid and late October, so not too far from now. The space, I had some notes here. I think it's interesting near term. You do have some headwinds, right? Quarter end, it can be difficult. You might see with these near, parabolic moves. Quarter end, you might see some profit taking, and but like I said, it's interesting. Any dip feels like it does want to be bought right now. So we'll see what the price action is through quarter end and go.
For example, of course, you could use the broader index to trade a view, whether bullish or bearish. As Jake mentioned, though, we have a number of individual single stocks in the semiconductor space that you could trade either 2x bull or non-leveraged inverse bear, whether that's a Qualcomm or an AMD or as aforementioned Micron, Taiwan Semi, Broadcom as well. So either you could trade them a la carte in terms of if there's news specific to a single semiconductor stock, or you could trade the broad basket itself. One other thing I'll mention, and this is something that probably not many people know about as of yet, but we're going to be launching over the next week or two, the Titan franchise. This is a new franchise for us. And as the name denotes, Titan, these are going to represent the biggest names within each a given sector or industry. And these indices are going to be concentrated baskets made up of the 5 largest market cap names in different respective markets. And that could be biotech, for example, the tech sector itself, semiconductors, energy, to name a few. And these are indices that are going to be rebalanced on a quarterly basis. And the constituents, the top 5 is based on the largest market cap weighted stocks. They could also change on a quarterly basis. So this is new and exciting. So if you want to play the broader sector, which you can now, broader industry we have, you want to play some single stocks within those broader industries or sectors we have. Now we're going to have a sweet spot, something in between. The biggest names within those respective spaces, the Titans. Now you'll have the ability to trade probably those names that move the market the most in those respective areas.
You just mentioned the Titans, and we lightly touched on those last week, but we're able to share a little bit more color on them today, if you'd be interested in doing so.
Well, listen, right now, these products are scheduled to launch. All that I can tell everybody is to stay tuned. Hopefully shortly we'll have more news to share. What I can share is that the Titan franchise, we're going to have a lineup of products that are sectors and industries for the most part that are going to have the top 5 stocks from a market cap standpoint within each of those categories that you could trade in all cases bull, in some cases bear as well. And some of the first that are going to come to market will be the aforementioned ones that I mentioned, which were energy, biotech, tech, and semis.
Perfect. Understood. Want to dig a little bit more into the semi conversation before we move on to a couple other topics here. I've got Evan on stage. I've got a few others with him, Vegas as well. Evan, do you have any thoughts or questions here on this initial piece discussion around semis and SOXL?
Yeah, well, semiconductors are an industry that I am very interested in and excited about. If I'm being fully transparent, Micron's not the area that I'm like, oh, exciting. But Micron has been still doing pretty well. What I find extremely impressive is if you look at like the revenue history for Micron, take a look. It loves to go up and down, but this move this week is quite the breakout from what history has been. So there is definitely something going on there. Um, yeah, no, I'm curious. Are there other thoughts around that? Obviously, Nvidia is the one that we always sit here and talk about. If I had to ask a question, though, maybe one that we haven't talked so much about that I've been interested in and actually has been doing pretty well would be an ASML. I'm curious if you have any thoughts on an ASML and where it kind of fits into stuff, and then just in general, also I'll throw in like I'd be curious the thoughts on the Chinese semiconductor market and what's going on there. I haven't done too much of a research into it. There was a headline out, I think it was Huawei, but it was someone talking about like spending X amount of dollars to try and catch up to Nvidia in like a couple of years. The headline was out yesterday, so that'd be my question. We'll get it down to an ASML and the Chinese semiconductor market kind of going on there.
Yeah, in regards to the China market, let's start with that. Of course, there was, forgetting the recent Baidu and Baba news with the AI chips, which I think is an important thing to note. Really, the stage was set, I think, for a China market rally, largely part because of the DeepSeek news a couple of months ago, earlier in the year. So I think China continues to want to be a player in the space. Doesn't want to necessarily rely on U.S. chips exclusively. Look what's happening with NVIDIA right now with the H20 and subsequent chips that they have. So I think the Alibaba news and the Baidu news could be very interesting in terms of how much of a market share could they possibly take, and are those chips going to be competitive with what the U.S. has been able to do already in regards to being a leader there, especially in the likes of NVIDIA, for example. Micron, I look at more of the memory chips, so that's maybe a little different, but it looks like they're also getting a little more exposed into the AI, and I think the stock has reacted to that. In regards to ASML, we don't have a leverage product tied to that. So, in terms of the technicals, maybe I'll let Jake talk about that.
Yeah, I'm not going to give any, explicit, views on whether I want to be long or short or anything. We just try to provide the tools to play these things. Like Ed said, we don't provide anything on ASML. I'm looking at the semiconductor index, a bit of a double top here. Interesting to see that. I think, we have to look for what the next catalyst here is for semis, right? With Micron having just announced, like I said, that's one of the last earnings announcements for this quarter. But what's going to be interesting to me as the next driver is what's been a big story is hyperscaler CapEx story. So, we get all these names set to announce in mid October. I think we start to see the big boys announcing earnings. So that'll be an interesting driver of what's gonna push the next stage of this move for sure.
And the other thing I'll mention in regards to flows. Now, we don't look at things long term. The turnover of our portfolios is pretty evident. They're very actively traded. SOXL, for example, is roughly 12 billion. I don't know where exactly at today, depending on how it's fluctuating. But you could have over a couple of day period the portfolio completely turn over, and that's what they're designed for, to be actively traded. But some interesting things, because SOXL, or rather the semiconductor space, has trended mostly higher, especially since the 90-day moratorium on the tariffs post the Liberation Day announcement. You've had significant outflows in SOXL, significant inflows in SOXS. Now, today and yesterday, with the environment changing a little on a short-term basis, you're seeing some inflows in SOXL. But from a year-to-date basis, because the trend has mostly been higher in the semi space, particularly from the beginning of April or mid-April on, we have seen some outflows in SOXL, and largely because people are profit taking there. On the SOXS side, I think a lot of the trade there has been that the semis are overextended. That trade has largely been not a good one if you've taken a bear thesis over the period of time that we're discussing since the tariffs, the moratorium on the tariffs were announced.
Yeah, it's interesting. If you look at the way we see flows on both sides of these leveraged ETF pairs, like Eddie said, we see, profit taking, we see mean reversion plays, we see quick hedges going on and off, and we've had these, like I said, parabolic moves higher, pretty prolific outflows on the semis year to date for sure, multi-billion-dollar outflows as we've seen that profit taking. But yeah, it's interesting. I think one funny or interesting thing I saw from Goldman Sachs was that the underlying volatility of individual stocks in the NASDAQ is like 2.6 times higher than the index level volatility. So that's really a great case for trading these single names or trading our single name pairs and being nimble with two-sided pairs that we offer.
I actually have a quick question off of that, and
Sure.
I'm going to throw it to Emp, who's behind the Wolf account. So, talking about trading pairs and how to utilize these, our audience, largely retail investors.
Yep.
How do you, from the firm perspective, envision retail utilizing these? Because I know that they're short-term trading vehicles. Is it catalyst-driven, technicals? How do you think people should look at them?
Well, first of all, I think it could be a combination of those factors. Some people use technicals, some use fundamentals. The one thing that you need to be cognizant of is how these work in terms of the daily reset of leverage. And once you own these past one day, these are path dependent, meaning the timing matters both from an entrance standpoint and an exit standpoint. So you need to monitor these on a day-to-day basis. You need to be staring at your screen to participate in trading these type of things. Now, on the bull side, why would you use a bull 2x or 3x product, for example? Well, one of the things is you want to express a short-term bullish view. Here's a way to do it without using margin, for example. A lot of your listeners out there have maybe trading accounts. Margin could be expensive. Here's a way to do it through an ETF wrapper where their liability is limited to initial investment. Necessarily don't need a margin account. On the short side, that could even be tougher for a lot of retail clients to get exposure, to do outright shorting. That could be very costly and you could have unlimited liability. So if you want to take a bearish view, outright bearish view, here's a way to do so where it's in a packaged ETF and your liability is limited to your initial investment. So we think these are cost-effective ways to get exposure where your liability is limited, but there is significant risk associated with this. These are high-risk, high-reward vehicles. Now, from a hedging standpoint, as Jake mentioned, especially with the single stocks, we have the pairs of 2x bull, but a non-leveraged inverse bear. So let's say you have significant profits this year in a Palantir or an NVIDIA. You may want to use to hedge your long exposure, especially in a taxable account. We don't pass merit on any of the tax ramifications, but if you have embedded gains and don't want to sell, you can maybe use an inverse 1x on such things like Palantir or NVIDIA. You still need to monitor them daily, and you still need to make sure whatever that hedge percentage you want it to be is in place. So you have to rebalance over time as well. But that's another way that you could utilize an inverse ETF, whether it's to hedge gains or an outright short, but both through an ETF wrapper.
Yeah, Gav, it's interesting when you mentioned catalysts, right? We're looking at a Fed who's really data driven right now. So what happens is these data releases end up taking on increased volatility and bigger reactions to jobs numbers, right? We have PCE tomorrow. That's going to be a market mover. We've got JOLTS job openings next week. I personally am looking at personally and probably everybody else, but non-farm payrolls on October 3rd is going to be a major clearing event, right? So those are the catalyst-based cases to stand ready to employ, short-term views for sure.
Yep, and you had the GDP today, the final for the second quarter, stronger than anticipated. Initial jobless claims, at least a little better than what they thought. So you actually have yields moving up a little bit today, especially on the 7 to 10 year and the 20+ year Treasury.
I'd love to ask a follow-up question on that, and then I've got another direction I want to ask your input on from both of you. Actually, appreciate you guys being on with us today. But the Fed piece of things, first off, very interesting. Obviously, a lot of people getting excited about home builders. I know you guys have Nail. I've seen a lot of people talking about that one recently. We saw a lot of those 13F filings come out where a lot of the big funds were buying the home builders as well. But now we have this kind of Fed that it seems like there's more uncertainty in the Fed now than there maybe has been in the past. I'm just curious, you guys' thoughts around what that trajectory looks like, if any, or if you do think maybe there's increased uncertainty with. I don't know if it's pronounced Miran or Moran, but the new Fed member there. He seems to be much different than what others were on the dot plot. It seems more dispersed maybe than normal, and it doesn't look like there's a clear path. Do you have any takes around what that picture looks like around the Fed and rates, and maybe specifically in that kind of home builder and rate sensitive type of baskets?
Yeah, the home builders are one of our more rate sensitive offerings. To your point, what's interesting, I think, and the hedge funds being validated, perhaps that you mentioned, we saw a golden cross where the 100-day moves above the 200-day. That happened today or yesterday on the home builders. So that speaks to a broader trend shift, right, and gaining some momentum. And also to your point, we've certainly had that divergent Fed speak where certain members are calling for big cuts, others are more reticent about the potential for cuts, and that's driven the recent pullback that we've seen after a pretty sharp move higher. Nail is one where we've seen a pretty significant inflows near term. I think something to the order of 150 million of inflows, on a month to date basis. So that's been a popular product for us. Go ahead, Eddie, if you have anything.
Just to add, I think KB had also earnings last night. So I think it's a little bit, sell on the news so far. If I'm looking properly, I don't know. I didn't look up the stock right now, but KB Homes pretty flat right now. I don't know if so that's one that, is a bellwether for the home builder space. I think from a broader interest rate perspective, you certainly have not exactly uniformity with the Fed, but also keep in mind the Fed fund futures there's a high probability on a cut at the next Fed meeting. And based on what Powell said yesterday or the other day in terms of maybe the market being a little ahead of its skis, so to speak, the equity markets, and the fact that this PCE number tomorrow, if it's stronger than expected, I'm not so sure maybe that the Fed that you could bake in another 1 or 2 rate cuts this year. And certainly the bond market is indecisive right now too, considering it's creeping up a little higher in terms of yields the last couple of days. We're certainly seeing this indecisiveness with the traders trading our treasury ETFs, of course, our most popular pair. Some of you might be familiar with TLT, which is based off the 20-plus year treasury. We have the triple leverage bull and bear, TMF, TMV. We've seen a lot of indecisiveness. And since there's been no clear direction in interest rates, like you said, people are trading both sides of that. The other thing I'll talk about is critical levels on the 10-year treasury. I think Jake could allude to this. 4% has been really some critical support, bounced off that, maybe a little below. Now has increased again. Yields are about 4.17, 4.18 today, I think, on the 10-year. We also have ways to play the 7 to 10-year. You might be familiar with IEF. That's the non-leverage of the 7 to 10-year. We have the triple leverage bull and bear, TYD and TYO on that. So like you were saying, we just don't see any clear clarity right now with traders when it comes to trading either the 20-plus year or the 7 to 10-year. Jake, I don't know if you want to add anything from a technical standpoint on the 10-year.
Yeah, no, like Eddie said, I mean, you had pretty clear support in just round number bias on at 4, and where that's what's hurting the home builders now is post rate cut. Rates have drifted significantly higher, and so you're seeing a near-term sell-off in home builders. We're seeing increased reactions to these data releases, and I think tomorrow's a day to be involved in the home builders. You're going to see some rate sensitivity around the PCE, around JOLTS, and like I said, around non-farm payrolls in early October. I think that's really the next clearing event for the 10-year for sure.
Yeah, we always see activity pick up around, as Jake said, major economic data, and certainly pre and post that PCE number tomorrow, which is the most preferred inflation measure that the Fed uses. People will be trading around that pre and post that announcement.
Some really great pieces there. I really appreciate that. I know the audience loved getting some of those insights there from you guys. Great to have you guys on once again. I'm unless somebody else has another piece on that. I have another topic that I wanted to ask some opinions, thoughts on here. We've seen you guys were talking about the semiconductors, the AI. We know that's been a huge trade, and as we kind of get up here to these valuations, some people would say we're overextended. Some people will say, hey, we're just in a raging bull market with revolution going on. But we have seen, for example, the Chinese names, especially Chinese AI, really get going. I'm curious if you guys have any takes around that. I know you guys have, the 3x yin and yang over there with the entire market, and then some other pieces basket wise, and then emerging markets as well. So a lot of people, when the U.S. kind of really leads things, they start to look for some opportunities there. I'm wondering if you guys are seeing any activity in first the China AI stuff. If you guys think that's a real, I don't want to call it a threat, but if that is a real competitor, or if they are able to successfully pull this off. We've seen a lot of headlines over the last couple weeks, and then emerging markets beyond that. Would love any thoughts around those, because I know you guys have some interesting baskets around there, and there's a lot of people that are looking. Okay, if the U.S. is getting a little overextended, do I maybe want to move some of the portfolio around into maybe some catch-up names?
Yeah, let's talk about that a little bit from a broader perspective. For example, the FTSE China 50, maybe people know FXI. We have the triple leverage bull and bear, yin and yang, based off of that. There's no doubt that China is playing catch up right now from a broader standpoint. All you have to do is look at the previous 10 years and see that it's lagged the U.S. considerably. So right now, I think there might be more room to run for China on a relative basis. The valuations for China are still relatively cheap, but really for the rally to be sustainable in China, you need the recovery of the real estate market there to be sustained. You need continued government support as a backstop with stimulus. You need also an environment where there's stabilizing geopolitical agreement between the U.S. and China, and some level of tariff resolution, especially when it comes to tech. Also, the weaker U.S. dollar, I'll have Jake talk about this, definitely comes into play when you're talking about gold, emerging markets, China in general. We've seen more activity this year as a result of the market moving higher and outperforming in China, more outflows in the bull, in yin, more inflows in yang, which is the bear. There are other ways you could play China, for example, if you want to be more specific to tech and the internet, for example. We have CWeb, which is the 2x version of KWeb, which is the CSI China Internet Index. And I could have Jake talk about that in terms of maybe what he's seeing there from a technical standpoint.
Yeah, it's interesting. I was looking at KWeb this morning, which as Ed mentioned is what we used to get exposure for CWeb, which is 2x version essentially. Technically speaking, it broke above what is this, September highs and also March highs, and so it's not surprising. RSI got a little hot, right? Pulling back a little bit. I'm watching to see there's a bit of a flag forming here in KWeb. I want to see if we see continuation there from after this flag. I want to see what side of this it breaks out on. It's right at the top end of the flag today, and if we break higher, maybe you see some continuation. But yeah, to your point, I think PE ratios are a tailwind for the China internet space, where you're seeing something more like an 18x compared to maybe like a 25x in US. Emerging, right, has seen tailwinds from a lower USD. We see that across our suite with China. We have an emerging pair, EDC, EDZ, Mexico, Brazil. Mainly China. China gets the most attention in our lineup, but yeah, let's see. Yeah, I think that's it for me on the China internet there.
One follow-up question on that, Jake, is when you see this, when you look within the sector itself, I mean, obviously Baidu and Baba have been the big ones. And I think the question that I'm getting a lot around our different audiences and spaces has been, is it just the AI part of China that is doing this, or can the rest of it catch up? I don't know if you had a take around that.
I think what we are seeing is the nascent efforts of China to nationalize, their AI efforts, and certainly if we get some kind of broader agreement on chips, that could be a massive catalyst for the space as a whole. No real views beyond that, though.
Yeah, no worries. Appreciate that, Ed and Jake. I won't hog the mic any longer. I really appreciate the thoughts, and I'm super excited about this Titan thing. I've got it all over my radar. One of the ways that I like to invest is industry leaders, right, in each sector. So I'm super excited to see that continue. And Gav, I'll pass the mic over to you so we can get some more subjects here.
Appreciate that. Yeah, I know we've covered a good amount here. By the way, I just wanted to. It's fun when you can name drop these products, and it's like everybody knows that product, and they're like, "Oh, that's one of your products." So, you go ahead and you'll mention TLT, right, or some of these others, and it's like, well, there you go. More. What are a few others that maybe people aren't familiar with, as in relation to direction, but everyone just knows about?
Yeah, certainly. I mean, if you're looking at, like gold miners, for example, that's been very popular this year. Some people know GDX, GDXJ. Well, we have the 2X versions of those two indices that we track, whether it's Nugget and Dust or JNUG and JDust. And you're seeing a divergence this year, for example, with the gold miners outperforming gold, the physical gold itself. So it has a higher beta associated with it when you're talking about gold mining stocks. So it always seems to be a popular trading vehicle, but with the rally in gold now sustainable and reaching new highs, a lot of individuals are looking at the gold miners as a way to trade that, which is just, of course, the basket of stocks that their primary business is gold miners. So we're seeing that this year. We're seeing some interest in some of the Mag 7 single stocks, for example, as well, whether it's the, Apple on some news recently, trading off that news, with iPhone 17 demand. Palantir's had a tremendous run this year, so we've seen some good flows there as well. Google, as a result of the looking at the potential split of their search engines that didn't materialize, people trading off those headlines. So the Mag 7 continues to get interest along with Palantir as well. Eli Lilly, for example, everybody's following the saga there with the latest FDA trials with their diet pill. People like to trade that as well. So, I mean, we're just talking about a lot of single stocks here and gold mining stocks because of the volatility there, or some directional trading opportunities. So we're seeing a lot of that. But when you look at the flows this year overall, all 10, the last time I checked, of the biggest outflows were bull funds. And why is that? Because a lot of the markets have hit not just 52-week highs, but all-time highs, whether that's financials, whether that's tech, whether that's semiconductors, communication services, for example. So you're seeing some outflows overall from a year-to-date standpoint when it comes to a lot of the bull products. And we're seeing some inflows, particularly where you've seen new highs, in areas in the bear funds that traders are trying to either feel there's a reversal that's going to take place, a mean reversion, or want a short-term hedge their long positions.
Yeah, it's interesting. We started talking about gold miners here, so I just pulled up a chart of GDX. This thing's riding an RSI above 70 since, I think, late August, right? So that's a long stretch, and just looking back further on the chart, I don't see any such stretch where GDX has ridden an RSI, of overbought for that long. So to me, that looks pretty ripe for some profit taking, a little toppy. On balance volume looks like it's turning over. Volume itself on GDX looks like it's slowing down a little bit. So the appetite here, I think, to push, gold and gold miners consequently any higher in the near term, I think is waiting for the next sort of confirmation.
Yeah, and then you have areas that really have not participated as much, whether that's healthcare and biotech, for example. So seeing some buying there in terms of just short-term trading, thinking maybe some of those markets will play catch up in general. Even energy, for example, you look at XLE this year, it's lagging the overall market as well. So we have ERX and ERY, which is the 2X bull and bear off of the Energy Select Sector Index. Some of you that might be familiar, XLE tracks the same index. And then we also have more oil and gas and exploration. Some of you might be familiar with XOP. We're tracking that same index of the S&P with Gush and Drip, two of my favorite acronyms in terms of tickers, the bull and bear. We're seeing a lot of activity in some areas where the markets have underperformed, some buying there, and then, of course, where the markets have really continued to move higher, some traders are peeling off profits there.
There you go. Easy to rattle them off. Tons and tons of these, right? SOXL, TSLL, TNA. That's the one that I was referring to beforehand.
Yes.
With that, that small cap bull ETF. So just so many that I think people can continue to pay attention to. And of course, it's nice that you do have both sides. I think that helps just create more optionality for retail. And it's interesting to see, like you talked about, the flows and what you can kind of garner from those. Can people get more data and insights on these if, for example, they go through the website or other areas like this to just kind of like see what's moving, see where money's going, different pieces like that?
Well, they can definitely look at our fund assets. They could see that in terms of creations and redeems. They could look at in terms of where flows are going to. So they could look at that, and if somebody has a Bloomberg, of course they could utilize that. Most people probably don't have that at their disposal. So there are different ways they could look in different financial publications that'll give that information of flows and activity, and you can see if there are inflows or outflows in our respective products and where are the most popular ones.
Well put. Okay, perfect. Appreciate that run through. So I know we've touched on a lot of these items, right? Mainly semis. We talked a lot about Fed. China kind of ties into semis. I would maybe double back to us for just a second there. There's really been a huge revival, right? Baba, Baidu, a lot of these different names getting to the AI chip space. China and gold seem to be like the two things that are just skyrocketing right now. Any deeper thoughts on those two areas?
Well, let's start with gold, and there is some maybe tie to it, central bank buying, including China. I read a stat where, for the first time, I think in decades, that central banks were holding more gold than U.S. Treasuries. So there's definitely gold has rallied for a number of reasons. It's interesting. This has been a risk-on environment, yet gold continues to hit new highs. Interest rates are still elevated in the U.S. Gold continues to hit new highs. Why is that? I think the central bank buying and the weaker dollar. There is definitely an inverse relationship over the long haul between the dollar and gold. And you're seeing that play out now because some of the other things are not coming into play. Is it the preferred flight to safety? Right now it might become that if rates continue to go down, but it's continued to rally despite that. So I think the central bank buying, definitely, and then the weaker U.S. dollar. It's interesting. Gold mining stocks. This is the first year possibly, and there's a big spread between GDX, for example, and GLD this year, or IAU. I want to be fair in terms of the spread of the return. You haven't had gold miners outperform the physical gold itself, I believe, since 2019, the calendar year 2019. So where is there more opportunity? Might be more volatility, but maybe the gold miners, they're not at record highs. Gold is. Is there still more room to run with gold miners? Albeit you could have even more volatility than you have with the physical gold itself. And I look at China also. I think a lot of that's predicated on U.S. and China relations. any tariffs that could come up that could impact their economy. And then real estate, I go back to, I really think that's a major thing that they need to continue to improve on, because it's such a reliance on the overall China economy and what it means to them. So the weaker U.S. dollar also, I think, plays into the hands of emerging markets in China, as Jake alluded to before. Maybe we could look at the dollar specifically. Jake could talk about some of the technicals there, because it does involve so many different things in terms of the emerging markets, gold, even when you look at it, interest rates itself, and how the dollar could play off of that.
Yeah, what's been interesting is you know, gold and sort of the geopolitical tensions are one other reason that gold has drifted higher, and obviously China's a main part of that. So, I wonder if the TikTok deal we got done leads to any softening in the relationship, or a more friendly path forward. That's certainly something to watch. The dollar drifting higher here with lessening rate cut expectations. Dollars driven, the weaker dollar has driven that China move higher, and so those will obviously play inverse to each other.
Do you have any concerns, I would say, when it comes to some of these Chinese names? I know that people have worries for a number of reasons, whether it's financial reporting or other items along those. Do you share any of those?
Well, keep in mind, when we look at China, we're doing it in respect to an underlying index that we're tracking. So that's up to the index providers to make those decisions in terms of those basket of stocks. We also look at, Jake can talk about this, the underlying liquidity of what we're trading and making sure we can get exposure on a day-to-day basis. If there are some restrictions placed on Chinese stocks, where they're removed from either our ability to trade, which has happened before, those indices will make the adjustment to it. And in the case that they don't, we have an obligation as a US-based ETF to adhere to those rules. So if there are any accounting irregularities or anything else that takes shape, that the US government deems that those China companies are no longer should be traded, or for a given period of time, like it has in the past, we'll adjust accordingly to the benchmarks that we have. So we're really not right now in any individual stocks that are directly China related. When it comes to the single stock, that could change. And any of our exposure in the leverage products in regards to China, emerging markets, et cetera, is through an underlying index itself, which is a basket of stocks.
Yeah, that makes sense to me. Those are good pieces, good thoughts there on gold as well as China. We've hit a lot of different items here. Just want to go forward looking for a minute here. I believe, was it JP Morgan or another firm came out and said they expect one more rate cut this year. I think that there's some who expect two more. I'm just curious where you sit right now within these pictures, and then also for just where the market is, how you think that these continued, rate cuts and any other items that we see will affect this raging bull market. Obviously, it's taking a little bit of a break today, but for the most part, been a raging bull market.
Well, without a doubt. I mean, small cap, are you going to see some rotation? You mentioned it before, more in the emerging market, China. Does it have any legs to it? The same thing with small caps. And I think small caps are going to be, Jake alluded to this, more tied to the direction of interest rates. We're not in the business of predicting where interest rates are going. I could tell you, though, that the way the Fed sounds, the way Powell sounds, they're still data dependent. If you get hot numbers on inflation, like the PCE, for example, and the job market doesn't fall out of bed completely, even though the Fed Fund Futures is telling you otherwise, the Fed may not be as aggressive as people think. And that's one of the things that traders have to be aware of, looking at the different signs, whether it's purely data or some things that are out in the marketplace, and assess those situations. I think it's one of the reasons why right now, we discussed this before, rates are trading in a little bit of a range right now. So if you're using technicals, of course, you want to continue to adhere that. And if you're using some subjectivity or fundamentals, you have plenty to trade off of with that as well. So, yeah, I mean, I don't know if Jake has anything to add to it. I know the 10-year We talked about that. Support at 4. That breaks meaningfully under 4. You could be talking about a new regime potentially in terms of rates when it comes to the 10-year Treasury.
Yeah, I keep getting back to this, but if Micron earnings are the validation of AI, renewed faith in AI, then these data releases are the catalysts that the Fed is going off. All right, so kind of the same thing here. And so effectively, I'm looking at RTY. It's got this beautiful sort of cup and handle pattern of broader support, right? It's failed right now at a triple top of like 2460-ish, right? It's lost momentum, as RSI got a little hot there. So we'll look to see if we can break above that level on RTY. I think RTY has been a really clean way to play rates for the traders that use our products. TINA, TIZA, those are just really well traded products on tight spreads. What's happened with small caps, right? There's been so many head fakes through 22 and 23. I think people got pretty optimistic, and a lot of good news on the rate cut front has been priced into small caps in the near term, right? And so as we start to flesh out these divergent Fed views and where we go from here, that's going to be the catalyst that's going to drive the next leg higher for small caps. And if we, like to Ed's point, if we get hot numbers, if we get renewed, if we get inflation, if everything starts to look okay again on the jobs front, which that's another topic of conversation as to the reliability of those numbers. I could see small caps fading pretty quickly.
I believe that there's a tool for that. Yeah, great points, guys. I think we've reached pretty much all the topics that I wanted to make sure that we covered. I'm just going to go around and see if there's any other questions from the panelists that are up here. I know Vegas, you've been here throughout the show. If you do want to throw anything into the mix, feel free to unmute and just share any thoughts. We also have Evan, Ryan, and Jordan up here. If any of you want to jump in as well, feel free to unmute right here and throw in any questions you might have before we do move to wrap up. Vegas, I see you reacting. Did you have any questions or thoughts there? She might not be. Oh, there we go.
Yeah, I have a question. Can you guys hear me?
Yes.
Yep.
Love the name, by the way.
I appreciate that. Will you ever consider making a product for Costco?
For Costco, well, we've looked at a number of different sectors and individual stocks that are the key drivers to those sectors or industries. So we're constantly looking at new products. We've launched a lot of single stock pairs this year, as you know. We have 23 pairs in the marketplace now. So without giving anything definitively one way or the other, we are looking at some of the most notable stocks in those respective sectors and industries. And I wouldn't be surprised if we launched additional single stocks in the future. That's not to say, though, Costco may or may not be one of those. So we are looking at additional individual stocks. So we appreciate the input on that.
Thank you very much. I appreciate you guys even considering it. Thank you.
Yep. One other thing I just wanted to touch on Tesla. And I know a lot of people are trading TSLL. We appreciate that. I don't know if there's any questions there. Tesla for us, of course, it's a polarizing stock with Musk. A lot of people value it. You can't really value Tesla as just an EV or a car maker. You need the AI and robotics in there to justify the valuation. It's had a tremendous run up off its April low, probably about 80-90% from its low. It's now positive for the year, but their EV business is slowing, to say the least, whether it's more competition in China or even EU sales last night, which dropped precipitously in August. So there's a lot of good going on with Tesla right now, but maybe Jake could add to it a little bit, anything from technical standpoint, because I know a lot of you viewers out there, Gavin, definitely trading Tesla, whether it's the non-leverage or TSLL.
Yeah, for sure. Tesla's going to be a really interesting one. like Eddie said, some headlines today with the European sales coming in soft. You know, early October, we're expecting Q3 deliveries for Tesla, followed pretty quickly by earnings later in October. So that's a pair that, you know, you need to stand ready to trade both sides of. They put up typically, I looked back to 2020, and you get an average post earnings move of about 7.5% for Tesla. So that's going to be pretty juicy when if you want to play either side of that.
Yeah, Tesla is a fan favorite. I think it's one of the most popular stocks that we talk about. I'm a
Yeah.
big Tesla bull as well, so for me, I definitely lean towards
She's
that.
looking
that
good,
hold
Gav.
Yeah.
We're almost at those all-time highs. I love me some double X leverage Tesla, so I'm trading your guys'
Awesome.
product pretty frequently.
Good, yeah.
We appreciate that, and you know, as long as everybody knows how they work, and you know, you could definitely go to our website. I think you alluded this before, Gav. We have great education on our site. There's a whole section dedicated to leverage and inverse ETFs. Videos, they're quick hitters. So if you have a lot of listeners out there saying, "Yeah, I'm interested in this," you know, don't hit the buy button until you know what the mechanisms are, the daily reset of leverage, how they work, the path dependency behind these, and the timing matters. So just want to reinforce that.
Yeah, the audience should really take advantage of that. I don't know how many other companies have all that info just laying out there. So take advantage, guys. That's really good stuff. We appreciate you.
Evan, do you have any other thoughts or questions you want to throw into the mix?
Yeah, no, I think this has been a pretty good chat so far. I'm excited to hear more about the Titan stuff that we have coming later on. I think it should be interesting. I feel like the first one, a lot of us would have ended up hearing about. Um, first would be the Soxhole one. And semiconductors are one that have always been interesting for me. So Soxhole is the category that I any more thoughts on. I mean, we're kind of a little bit outside of the earnings season now, but it seems to just always be coming up. That's definitely one of the names that you guys have. We went through a bunch here that I have mostly been tracking, and it had a good reversal today. It was down like 7% earlier, 8% earlier, almost got to even at one point. And now we're playing a little bit of a back test. Maybe we move higher, but yeah, Soxhole is one that I've enjoyed watching and moving around in a little bit.
Listen, I'm not going to tell you which way Soxcell is going to go. I don't even know that. I manage the fund, so yeah, it's obviously been a great pair for us. You know, I'm just looking at a daily candle chart here. You had a little bit of a gap fill, right? Not surprising with RSI riding, up to 75 or so. On balance volume. You like to use when you talk technicals. You like to confirm divergences or price moves. And so, lower move in the price being confirmed by a lower move in on balance volume, MACD's kind of turning over. It's interesting for sure. All the longer term trends remain higher. So, I'd be squarely focused on, hyperscaler CapEx heading into the next earnings season, which is, a couple weeks away for sure.
And definitely CapEx spending. Is that going to continue at the rapid rate that we've seen it? Is there going to be a slowdown at some point? I think you have to take both sides into account. Right now, of course, it's all rosy on the bull side, but we know how things could change. Valuations in some cases are a little frothy. Will that growth continue to escalate to justify some of those multiples right now? And that's something you have to continue to look for. And just to illustrate, and Jake, you could just confirm this. I looked this morning. I believe SOX, which is the non-leveraged of the ICE Semiconductor Index, year to date, was up more than SOXL year to date, if I'm not mistaken. So again, when you look, and Jake, you can confirm that now. That's why I have Jake with me. He crunches the numbers.
Oh, yeah.
Is that the case, or it's right around the same?
Soxl. It's gonna take me one sec here. Let's go year to date. Yeah, they're just about the same.
Yep. So
it's underperforming 50 bips to Soxl, but that speaks to more volatility.
Exactly. The extreme volatility. These are not buy and hold vehicles. I just want to make a case in point. You took a lot of risk. You don't want to be holding these things long term. You want to look at these from a short term trading perspective. This is case in point, just a year to date standpoint. A non leveraged tracking the same index is up the same as SOXL. These are tools. You got to use them judiciously. And the timing matters. And this is the case in point. These are not buy and hold vehicles. So every day is a new day. And we've seen outflows in SOXL. I bet you the next day or two, if the market retraces, we'll probably see people buying in SOXL. So just wanted to reference that.
That's a great point.
I think you guys nailed it right there. This is awesome. We basically at the top of the hour here. I want to give you a couple minutes for any final comments to share any other resources you want to point people towards. But I'd encourage everybody, first off, make sure that you're following that Direction account that's up here on stage with us. Over 20,000 followers, great content coming out. They have a lot of those triple leveraged and inverse leveraged ETFs that you can't even see on the market anymore that were grandfathered in, plus a lot of the most popular double leverage, which we've talked about. So continue to keep an eye on what they're doing. You probably already trade their products without even knowing it. If not, maybe now's a good time to go start your research. Ed, any final comments from yourself on this one?
No, not at all. Just as I mentioned, go to our website. Great tools and education there, especially our educational videos, 6 chapters, no more than 2 to 4 minutes. So my type of attention span, just enough to give you the details without getting too much into the weeds. I think it'll be really beneficial for anybody that's looking at trading these or anybody that's been trading these, but now really should know more in terms of how they work before they proceed to trade in the future.
Yeah, I'll take my time here to do a shameless product plug. URAA Uranium. I'm sure a lot of the listeners here are well acquainted with, energy needs, data centers such as they are, and the whole uranium story. This one we only offer the long 2x. It's I think it's our second most volatile product on a 30-day basis. I just happened to look at the 30-day vol was around like 88. The 10-day vol with the headlines we've seen is at 118. So that's one you need to be in and out of on the long side with some of the government-driven headlines that we've seen. But a great story there and a way to play it for sure.
Well put, really well put. We have more spaces coming up with the Direction team. I would encourage everybody to stay tuned for those. Hopefully, this was a really just perfect discussion as well for our more trading oriented audiences in here. If you're not wanting to use, options, you have a lot of other, options that you can use within the market, and we just outlined a lot of those and just a great insight as well across the board on gold, China, ETFs in general, macro, all these different items. So big thank you to both of you and looking forward to the next space with your team.
Great.
Thanks, Gav. Thanks, everybody, for listening. Appreciate it.
Thank you. Appreciate you both. Jordan, I'll turn it back over to you here if you want to keep the discussion rolling throughout the day.
Yeah, we're gonna keep things rolling. I think we're also gonna hop on a little stream too towards the end of the day here as well. So, but yeah,
Oh, we're
gonna keep
starting
it
live
rolling.
stream coming. I appreciate everybody. You should definitely make sure you're following the speakers though. This has been a good time. We've been going here
100%.
for a little bit. I'm
Yeah,
excited
we'll
to see
hang
that
out.
creamsicle screen again, Jordan. I won't make fun of you today, I
Evan
promise.
hates my chart screen, but I love it. It might be brighter color, but I think it's still easy on the eyes. Or am I wrong? Might be
We'll
wrong
ask.
then.
We'll ask the chat.
We'll
There's
ask
a
the
chance
chat.
I'm wrong.
It's not like that bright white that just blinds you, Market coming in here. We did drop to, we're almost at IB low on ES here. NQ's headed for IB low as well. I did take a long at the IB midpoint, but stop is IB low, so see if that gets ran through. But yeah, getting a little sold off.
Jordan, we got the link out. Let's post the YouTube link and
Yeah, I'm gonna get
then
it
we can all
posted
see
on
the
this
live.
channel.
We'll go live in half a second here.
Is Emp here? I was gonna see if he wanted to start because I know he's doing all like the on-screen stuff, but I can just start it. Yeah, let me get a post out real quick. Sorry, guys, we're setting up this stream. Oh, did I get stopped? My gun stopped. I did get stopped. L's in the chat on the IB for ES. NQ's still in it. Has until that low a day.
I just pinned up in the nest above. It will be up there in a second. Right now, there is the direction thing, but you will see a link to a YouTube live stream. So we already have the live stream up. The stream is gonna be starting there any second. And yeah, see what we're doing exactly like this with a screen. We'll send all the friends and trying to get them to come and hang out with us. But we're gonna be doing this on the live trading YouTube channel. We'll also be live on X. So if you come in and hang out there, you can. But the YouTube is also there. We got 2 people waiting. I just said hey in the chat.
Let's go. Yeah, I'm about to
I
post
need
the
to get that
link
mod.
on Wolf Trading as well.
But yeah, that tweet should be pinned up in the nest above now. Moderator FAQ. There we go.
Okay, so it should join.
People starting up in a minute.
I need to
Let us know what
sign out of
stocks you want
Restream.
us to watch in that chat though up there. Once you guys join in. Yeah, now Jordan's got that link. We are making a little bit of a low of day here. Crypto 3,800
Dude, I got
for
ran through on
Ethereum,
my
Bitcoin at
lawn.
109.
I got ran through. It's okay though.
IBM and R is moving lower. I have some calls now. We're up. There we go. We got a little countdown timer coming up as well.
Here we go. Join as guest. Wow. We on. Let's see if NQ makes a low a day.
All right. We got the live stream up. Let's close her down. I'm gonna go over there. Appreciate you all. The tweet is pinned up in the nest above. Go in, join us on the live stream. Also, if you just click into the Wolf Trading page, you will see this live stream. It's the last post that just went up. I'm retweeting it from my stock market news account. We're gonna get this invite sent out to the whole squad. I'd prefer you watch on YouTube. Subscribe to the channel while you are there as well. But watch wherever you guys want to. We're live on X and YouTube. Come, just say hello in the chat though. That's what I want. I want you to say hello and tell me what stocks you want us to look at and dig a little bit into. But yeah, link up in the nest above. Come join us. The live stream is open. We will
Big
see
facts,
you over
baby.
there.
Get over there. We'll see everybody over there. And we're going to close it up here on Spaces for the rest of the day. Peace out. Get on that stream, baby.
same way as you did when my dad's neighbors tried it and it was on, an earlier version. And for me, I'm like, oh, well, that's not going to work for them. So we all have our judgments and we all have our feelings about that. But it's really not, about new people or old people. We're all so diverse. We all come to Tesla for these 5 different reasons. You might be here for the technology, you might be here for the safety, you might be here for the autonomy, you might be here for the environment. And so if you're here for the environment and people are keep saying, "Oh, you got to try this, you got to try this," it might be on your to-do list, but then if you have a version 12 kind of fail or you get a speeding ticket in the school zone, that's not good. That's not great. I almost want there to be, like, we need to refer people. We need to have the FSD adoption go through the referral program. And if I can get these people to sign up in their car with my, handle or email address or Tesla account, and then I show them how to use it around the block a little bit, then that works for both people. But I just can't see how that would happen.
I
Right.
love that idea, and Landon.
So I wanted to ask Dallas. Dallas, first of all, thank you for the conversation between you and Landon. So at what point would you recommend FSD to your family, like to your mom or your neighbor, like you said? Is it only when like FSD will be like robotaxi kind of a thing that you can sit behind and chill and relax and sleep, or it's still gonna be in a version where you need to use like supervised, but something is just better than what you see today, like 40 instead of 20, like you said.
Yeah, I think we're living through this very. It's kind of a cool time because we get to be there to like watch it like be made. But like the majority of people who will ever live that are ever going to use a Tesla that drives them will never experience what any of us are experiencing, right? In the macro scale. So um, we're there for when this thing is really getting made, which is exciting. That being said, right now in its current state and supervised where the things I just listed off are happening, I would not recommend that to someone who is not a tech forward individual. I'm very passionate about technology, so I love it. I love getting to be there and watch it think, intervene if I need to, which really is like never anymore. But things like, if my mom was in the car, I'm like, okay, it's gonna take you to the destination. Okay, it says I'm here, but like I'm parked on the side of the main road and like yeah, I guess I'm here, but like that's not where I want to park. Okay, push the brake, grab the thing, you know, I don't know, destination to destination, like driveway to parking spot, those kind of things is where we need to be to where I would go to people like my grandmother who can barely walk anymore. She's such a great candidate for FSD. You can't tell her, "Oh, hey, you're going to have to like take the wheel and like these kind of things." So this is an issue that we won't have to deal with long term, but right now we do. So to answer your question, I would say when it's completely unsupervised is what I would say.
Thank you.
I think
Lincoln?
there's a place for like where they say, okay, it's unsupervised during these situations or this situation or whatever. That would be okay as well, I think. Like my mom was here last week and used it, and it was like really confusing. She's used it before, but she's really nervous about it. So it's only going a mile. She's just, it needs to be ready to just push a button, honestly, because she wasn't comfortable.
These are all accurate things. These are great stories, and I believe all of these things 100%. However, we're getting a little edge casey here. If I'm going to talk about my 80-year-old dad and you guys are going to talk about your mom or your grandmother, that's edge case territory because that does not represent the largest percentage of American drivers or whatever the countries are. So it is accurate, but it might not be completely appropriate for the conversation. If we have the 80% of Americans that are men and women that go to work every day, that some of them are college educated, some of them have a really good trades job. These are not the people that
Landon,
you're talking about in your
I
stories.
disagree.
These are people that can read some instructions on a screen and figure it out, because look at us. We figured it out. We didn't have anybody doing this for us, and we had much, much worse versions. So let's try to focus and think about when we decide what we think Tesla should do, are we talking about the 80% of Americans, or are we coming up with edge cases that are valid
So
but are not the highest percentage?
So building on what you said, Landon, and tell me if it's correct. So basically, if I read between what you said and Dallas and Lincoln, so what you said basically for the edge cases kind of community, like the blind, the hip, the handicaps, the elderly, like the people who don't get the freedom or get to go wherever they want. Basically, Robotaxi will save them, will give them back their independence. But before that, like FSD will help the drivers, like the ones actually actively driving their ICE vehicles and all the other like products, whatever.
Landon, do you want to say something?
I can't understand what you're saying.
Landon,
Say
do
again?
you want to say anything or?
No, I'm good.
Okay. No, I disagree. I think the main group is these people who won't be able to drive, losing their freedom. And I think it would be huge, like if you're like, hey, here, get this, and you can come over see your grandkids anytime.
100%. They're just not in the first group. Because, like, if you send a med ride to pick up those people now, there's a driver that gets out of the car, that puts their walker in the trunk and helps them get into the back seat. I mean, I've seen it. And so by the time Robotaxi gets there, these people, I don't know, they may need more out of the car software or hardware or something than we can figure out right now. That's a future Robotaxi thing. And it could be that, do these people, own a car now? Do they? So if we're talking about FSD, then they'd have to buy a car, where Robotaxi ultimately would be the better solution for them. So yeah, I think this is so exciting for the elderly, disabled community, even the people that are too young to drive. I mean, what if you have people in high school that need to get to school and they've got a half a day, so then they need to get to their job? But I still think it is totally going to be great for these people. It's going to extend all of our independence. But it is the transition that we talked about. This transition stuff is going to be really messy, whether you're talking about FSD or Robotaxi or getting to a universal kind of abundance that Elon talks about. This is going to force change, but we've all lived through change before in our lives. We all learned how to drive an ICE car that we didn't know how to drive. We all learned how to, work through traffic. And so we can learn. We just don't want to. We want to continue doing the stuff the way we've always done it because we're good at it and it's comfortable. So I don't know how it'll happen first for these, elderly people, but it needs to get there. It's going to be fabulous. It's part of the mission, and I'm here for it too, Lincoln.
Definitely. Jonas, and did you want to say something?
Yeah, can you hear me? Sorry.
Yeah, I saw like the blue bar when like you were trying to say something, but nothing came out.
No, it's okay. Yeah. So, I mean, first of all, thank you, Landon, for talking about our blue collar workers. The fact that they can read, that's true. That's so true. And I think that we don't give people enough credit on the fact that there are probably there's a much larger majority of the population if they just knew about this product. And I mean, obviously, this is anecdotal, but my brother, he drove my car. This was the second time that he drove my car today. The first time he only used FSD for 5 miles, and he had a disengagement because he got nervous. He didn't need to disengage, but he got nervous. But it's a brand new product for him, and there's a level of trust that he has to build. Well, today I knew he was going to be driving my car all the way back home by himself without me in it. So I'm like, you've got to drive it so that way you get familiar with it because it's different than what he's used to driving. And before he left, he's like, hey, you're going to put FSD on this, right? And I'm like, yeah, I'm just going to do the month subscription for it so that way it gets done. Which, by the way, Landon, you can do that right in the app. Nice and neat and easy. But the whole point is that my brother, who his favorite automobile is a pickup truck that has manual roll down windows and no AC. That is his favorite thing to drive. That's what he chooses to drive. By the time he got done driving 50 miles today, he's like, hey, you're going to give me FSD so that way I have it on the way back home, right? Why would he want that? And my brother is by far not a tech savvy person.
No, listen, guys. I met the guy. Is the opposite. Like whatever we do here on this space is the opposite. So he never wanted to try it, not even to look at the Tesla.
He like my old Model Y. He would not even ride it, guys. Like he's like, I hate EVs. I hate the Model Y. I hate everything about it. I hate what it stands for. And literally, after using it for 55 miles total, he's like, hey, you're gonna put FSD back on this for me for the way home, right? And I'm like, yeah. And that right there should say enough. And when I say he is not tech savvy, I mean, Ellie's met him. He's spent some time with him. I mean, my brother's like, hey, how do you turn the phone on and off, basically? He's not quite that bad, but I mean, he's a simple person. Not that he's dumb. I mean, he can disassemble a motor and put it back together, repair it and put it back together.
It's the opposite of what we do here, like for sure.
So I think that right now, that speaks volumes for FSD because that's FSD 13. And he's like, hey, I see value in this enough that I want you to spend $100 so that way I have it for the next 190 miles that I have to drive this, supervise this car on the way back home.
So yeah, before we move on, Wes came up. I just want to see Dallas. I see your hand, but I want to see if Wes want to chime in.
Hey, yeah, I was just interested in commenting on the price of FSD.
Yeah, so let's just see if Dallas want to respond, if it's okay with you, Wes, and then go to you.
Yeah, sure.
So all I wanted to add there is let's remember a year ago, we were at a point where our wives were telling us, for the love of God, turn off FSD before I throw up. Okay. Now we have completely inversed in a year. That is mind blowing to even think. I'm at the point now where when I'm driving, my wife, who doesn't really care for technology, she doesn't really care for any of this stuff. She just thinks about going from point A to point B. She'll be like, will you please stop effing driving and put it on FSD? I'm going to throw up. So we have completely flip-flopped. Like that level of improvement is so measurable. And now we're here in this nitty gritty detail world where I need the car to park at this spot and go to the port, go to the carport. But we're putting like the icing on the cake now. So and it's hard. And there's going to be a lot of nuance here with arrivals and drop-offs and things like that. I think a lot of that's going to be answered in 14. I think alongside 14, we're going to see a lot of the features that have been hanging in limbo start to roll out. Things like Banish, things like extension of Smart Summon. I think it's going to take this new model to be able to make those things happen. So I'm expecting quick change here, but I just wanted to add that piece.
Thank you, Dallas. Wes, you wanted to respond, talk about the price?
Yeah, I'm only got a few minutes, so I'll just say my thing and I'll jump back to listener. Originally, when we were pricing Autopilot, we looked at the competitive landscape and their feature sets, and obviously their feature sets were very limited at that time. This is back in 2014. But at the end of the day, you want to be sure that what you're pricing is something that has a good feature set. So if the price is too high and your demand is too low, then most likely your feature is price elastic. In other words, if you drop the price, your demand will go up. And this is what I think really needs to happen. It's not really a sense of what are the features that it currently has, but what are the also drawbacks that it has? And I think everybody knows that drives V13. It has very little drawbacks at this point. There's not a lot that the system does that causes some type of consternation, some type of headache, or some type of worry, or even venturing into paranoia. So the people that are using it, these people are getting a lot of value out of it. Now, not everybody knows that, right? But advertising can solve that problem. But lowering the price also can solve that problem. So I've said this in the past. I've posted actually several times. I have a kind of a discrete calculation that I've done where if they take it to $50, obviously demand should somewhat double, maybe even quadruple. But taking it to like $20, where now it becomes cheaper than your coffee, your monthly coffee habit, like way cheaper. And there's incredible value there. That's going to really drive demand. And that's what I think they should do. Now it's like contrarian to think that as the feature gets better, that you lower the price. But at the end of the day, it's safety critical. So that's the idea, is that now that more people are using the product, it's a safer product. Oh, sweet. I'm behind a Cybertruck and there's one on the right. That's super cool. Anyway,
Cool.
that's where kind of the thinking's at for a tech product manager, and the product manager that's currently running the program. I believe that their thinking is in line with this. So I would expect that as V14 comes out, they will lower the price.
Well, thank you for that, Wes. Do you have a second?
Yeah, I got a couple minutes.
Just right, great. You don't have to answer because I asked you while you were a listener, but you didn't come up. So if you don't want to answer that, that's fine. But about Australia, I asked Landon that like an hour ago. I'm just curious. Elon said that for $5,000, sorry, US Australia dollars, you could purchase the enhanced autopilot if you have a version 3, hardware 3. But if you are on 4, you won't be able to purchase the enhanced, only FSD. Do you know like what's the reason behind that? Like what's the is this like a technical thing or just
No.
a marketing thing?
No, it's not a technical thing per se. It's more of a marketing thing. I don't know if you
All right,
want
cool.
a more in-depth answer, but yeah.
No. I was just curious about technical. If it's marketing, obviously let's leave it behind. Thank you.
Yeah, sure.
All right. So I wanted to ask you, Alexander, about Europe, because I know in my country, every time I talk to people, not customers, not anything, just people about autonomy, like people are freaking out. Like, no, it's not even a real thing. It's not existing. Like they believe it's like heresy. They don't want to listen to autonomy. Is this like somewhat the same situation for you in Europe, or I'm living in a different place?
Yeah, so funny story. So I was on a machine fair in Germany this last couple of days, and we hang out with customers and so on. And we had a representation and dinner yesterday, where I got sat next to a customer, and I was like kind of scrolling on X a bit. And this guy next to me, he's like, "Oh, you're on X," and I was like, "Yeah." Have you heard of SpaceX? And I was like, okay, here we go. Obviously we started talking about everything, and I told him about the trip I did to the US and showed him like the FSD clips. He didn't know that much about Tesla, but he sure did know a lot about SpaceX. Anyway, so I showed him the like FSD when I was riding around in JC's car and stuff, and he's like, damn, wow, that's so cool. Do we have this in Europe or in Sweden? And I'm like, okay, need to tell him the full story of what's really happening here. And he got so upset, that when I told him about like the EU and like in some countries are blocking FSD and stuff. And he's like, all of a sudden he's like, yeah, we need to kind of fix this. This is freaking bullshit, right? But he was like really impressed. He didn't know that anything like this existed, right? And he's like, yeah, we obviously need this technology. Yeah, so he got really impressed, and that says a lot. He was like into like SpaceX, and he kind of, I was surprised he didn't know about FSD, right? So even people that you would think would know about FSD don't know about FSD. And if you tell people about FSD, it doesn't really click, right? Because they haven't experienced it. You need to like experience for the like penny to drop, so you really realize what it's about. So
And that's, sorry, go ahead.
Yeah, so I think it's really important to have, obviously, I want to see more European influencers actually getting the option to ride along with Tesla, so they can like show FSD in Europe. I think that would be like crazy good. Because if Europeans see FSD from the perspective of the influencers that they follow and like, I think that would actually spread the word about FSD a lot. Before that, I don't think people will react that much to it if they don't get it through Instagram or whatever, right? So
Are you telling me that I need to create content in French? I would do that.
that would be awesome, right? But for especially for like the big accounts, and like tech influencers in Europe, they would immediately say yes to an invitation to try FSD in Europe. And I don't think there's any rule that says that the test drivers can't bring people along. So I think that would be a good idea to spread the word, because people don't really know. And if they know, they don't really understand.
All right. I see posts coming from Alexander about it in 3, 2, 1. I won't be surprised to see it already.
Hey, I want to talk about this and support Alexander, because this is the psychology part of pricing that Wes was talking about. And it's not a lot of times we're in spaces and people say, oh, that we've got to get the word out, we got to get more people, whether it's talking about buying Teslas or trying or subscribing to FSD. And we're so excited about it. We love it. We know it works. We know it's going to get even better. And so we just don't understand, why don't other people know about this? Why don't they care about this? Why don't they subscribe? And it's just, we are thinking about how it makes us feel, but it doesn't make other people feel that way yet. And we talk about getting people into our Teslas and letting them experience it. It's the best way to go. And so many people, JC talks all the time about how he watched Omar's videos. Now, that's a kind of a secondary method. That's not, JC didn't go rent a Tesla and drive it around, check it out. He watched Omar's videos every week. And that's a pretty close version of what it kind of seems like to use FSD. But if you're talking to somebody that has never tried it, doesn't know what you're talking about, and you tell them, here, try, it's free. All you have to do is go in and check the boxes. It's free. Just do it. Still, it would not be the percentage of adoption that we would expect. It would still be much closer to our current adoption than the 100% that we kind of throw out there. We got to get everybody doing this. And so this is a psychology problem. And even if you show somebody that it is better and they believe you that it's better, say they take the next step and they really do believe you, they still don't all go out and buy it or subscribe to it, because they're busy, because their money is going other directions, because they're fighting with their wife. And this is the problem with psychology and buying products, that the marketing experts figured out is the technological adoption bell curve. And so that's the reason that it's so skinny at the bottom where we are now, and why we are just astounded that people don't use this stuff. $99 is not a large part of most people's budget, but we're still hearing a lot of people say, oh, it's too expensive. Well, I'm going to argue that even if you made it free, you wouldn't get over, say, 30% adoption. I know that's crazy, but I'm talking about this year. Until we get this more into the mass market, the numbers are just not going to go up that quickly. And then they'll go up all at once.
That was beautiful. Times Stamper.
Hey Ellie, how you doing?
I'm doing great. What's
Great.
up?
Hey, I think my take on it is, I think that it would be great if Tesla gets to a point where they just make the FSD included in the price of the vehicle, because I think that will sell cars like hotcakes. And as far as getting people acquainted with it, I think you got to get them behind the wheel and let them engage FSD, and it's an instant sell.
FSD is definitely a product that can sell itself. I'm with you on that. I mean, you know, we can say whatever we want here. I'm not in the position to say anything about it. What do you mean, Landon? All right, let's stop everything. Landon giving us this
Well, I
thumbs
mean,
down.
I think you're just using filler words, but you said FSD, basically sells itself, and obviously it doesn't. We're at 8%.
No. Sorry. So let me rephrase. I mean, like I just build on what he said. So if you are sitting, well, okay, I'm with you. It's not always selling.
Some people, it absolutely is a no-brainer and it sells itself. And other people cannot be convinced to give $99. Other people that I know personally cannot be bothered to even try it when it's free. So it doesn't sell itself. And what I'd like to ask the speaker, um, let's see, time stamper, Bitcoin man.
Yeah.
So how does it work if you make it for free? So what is the cost, and what do you do with that cost? So you're okay with giving up the profit, but how do we pay to develop these things? So are our vehicles, now that a Model Y, a rear wheel drive, is actually cheaper than a rear wheel drive Blazer ICE vehicle? So now you want us to throw in the $8,000 software package for as well. So now it's going to be like $10,000 cheaper than an ICE Blazer. Why do we have to do that?
Yeah, that's true. And I think there's a couple ways they could maybe tweak that. Like if you buy the car, they can just increase the price of the car by a couple of $1,000 and have it include FSD for a number of years. And then you have to subscribe or buy it. But I do also want to add that I think if you buy it, you shouldn't be buying it for the vehicle. You should be buying it for your account, and it should stay with you for life, because $8,000 is a lot of money. And it feels good to pay $8,000 to Tesla for FSD, even knowing that if you were to get into a car accident that totals your car, you're still going to have it on your next Tesla. Or if you rent a vehicle that's a Tesla, you're going to still be able to use your FSD as a membership. I think they should do $8,000 and you get FSD for life on any Tesla that you drive. And our accounts should be our keys for the various Teslas that we're authorized to drive.
I'm not even going to argue with you about the first point, because we are moving on to the subscription program. So what I would say to you is that you can come and go between your usage of the subscription. So $99 a month, you would have to own your vehicle for X number of months before you get to the $8,000 price. And that's what most people are doing. And that's, most people trade their vehicle in 3 or 4 years. And so if you pay the $8,000 and you trade your vehicle, no, you're definitely not getting all of your money back. But if you're using it for $99 a month and you sell your vehicle and you just go $99 a month on the next vehicle, that's what Tesla's leading us towards. And that's how you don't lose money by paying $8,000 up front. And then you don't even have to worry about the transfer, because you don't actually own anything. And the software is pretty intangible. So I might find a buyer for my used Tesla that will give me like $4,000 more because it's got FSD and it's installed and they don't have to subscribe. But most people just want to not pay that extra lump sum up front and just do it more manageably for their budget at $99. Do you think that helps? Where like we're not buying it, we're not buying a license, where it's not tied to the vehicle, but it is just a subscription. Isn't that easier on most of those levels?
Yes, many of those levels. However, I think that one day will come that somebody's injured because the car wasn't in FSD, and litigation happens, and people find that Tesla should be enabling safety features for no charge. Just like an airbag, nobody pays to have an airbag on?
Actually, airbags were optional when they first came out in the early 90s, and then manufacturers worked and moved to the system that you're talking about, where they just raised the price of the whole car and included the airbags. But yeah, you used to be able to order just the driver's airbag, and the passenger wouldn't get one, and that was an extra charge. So no, I think that's kind of ridiculous that, and if it's a government mandate, it's not just going to be for Tesla. So tell me, the car manufacturers already don't like it when we tell them that we want their CAFE fuel standards to be higher than 30 miles per gallon. So yeah, there's a lot of stuff going on here.
Eddie, you want to jump in?
Yeah, I had to come up. I thought Landon was going to lay a hard one on timestamp, whatever his name is. Look, you got to remember, this is a software that could eventually drive you, from one anywhere from. I mean, it's intelligence that you're paying for, and then on top of that, you got to remember what Tesla invested in this. 50,000 GPU in Cortex alone. We're not talking about the GPU that they bought before that. It's almost $2 billion. If you, and then on top of that, that's not the building, the electricity, the development costs and all that stuff. I mean, when are Tesla going to give their money back? And this is valuable software. It's not like it's not doing things. So this is eventually going to be a chauffeur that could drive you for the rest of the car. So you're asking for way too much. And I just thought that Landon was just gonna, I don't know. I was
Well,
a
let's
little
just
bit
make sure that
disappointed.
let's just make sure. I don't think he was trying to be malicious. People just trying to offer some
I
things.
know, but you got to also be somewhat in reality. You got to remember that
No,
this
that's
is
fine.
a really tough
So
solution to solve.
that's why we have you
Well,
guys.
since you guys are saying that I might not be rooted in reality, I just want you to keep in mind that Tesla is trying to lead the way in safety and have this spread across the entire ecosystem. In fact, I already see a future where all cars will be autonomous eventually. And if Tesla were to give it to their customers for free, we might see other companies starting to adopt the Tesla technology.
All right, I'm gonna interrupt. I'm gonna interrupt because that's a conversation we had like 2 years ago. We are way behind that point. I appreciate timestamp what you brought to the table. Let's move on, if it's okay with you guys. Let's move on to XAI and the government. I know it's not Tesla, but in 15 minutes, I think I will close the space. So I think it's a good point. Yeah, that's the last subject I want.
He works for the government. My partner works for the government. So Lincoln, the reason I was jumping in is we talked about it this morning and went through the article and emailed back and forth and stuff like that. So I'll let Lincoln go, but yeah, it sounds like it's
Please.
needed.
Can we get a rundown of what it's about first?
So XAI with a strange deal with the government, 42 cents. I mean, I will post at the top the post as Lincoln talks, if it's okay.
42 cents for what?
It's not.
Yeah.
It's well. It's
Wait. It's kind of funny. Let me find it. Go ahead, Lincoln. Just say whatever you want to say.
yeah. It's actually 42 cents per department, so it's going to be a little more than 42 cents.
No, yeah, for sure.
I'm joking. So
Yeah,
that's
it's
a
at the
legal
top.
thing. But yeah, I'm very excited. I've been like the government as a government employee, we have very limited things we can do with the computers. It's very strict. Everything you do is tracked, and I've been hesitant using AI. But we don't have any like really. We had some really cheap version of ChatGPT that was just really bad that we were able to use. And then we have agreement with Microsoft, so Copilot was then available. But none of it's clear. It's all like murky, and you don't know what you can use. So I just started using my own, like a lot of people do, my own subscription, personal subscription. I've used Grok and ChatGPT to help me with my coding and other work. I actually got it to work in VS Code, so it would, agent code. That was great. Yeah, when I woke up this morning and saw the XAI now has the agreement that we can use Grok and Grok Fast or whatever, I was really excited. It says it's available immediately. I've looked, we don't have any email on it in the Department of Interior. And I've been searching, I don't see anything yet. So I'm hoping to hear more soon. And they also have a team, XAI has a team dedicated full time to work with government employees and work with government agencies to see what the needs are and to, make it work for us. So it's really needed in government. Like there's so much we do that can be streamlined uh, and um, yeah, it can be done more efficiently with agents and AI. So I'm really looking forward to it. We already have an agreement, I guess, with like I said, Microsoft Copilot, I guess. So um, yeah. So anyways, so it's exciting for sure because I know a lot of private
Cool.
companies and people I know are using whatever they want to get their work done. But we have to be more careful because of security reasons, obviously.
Cool. So before we continue, obviously I want to welcome Omar. Normally when Omar is entering the room, a lot of people follow him. So I just want to reset the room for a second. We were talking about FSD 14 and all the posts about it, whatever Elon was saying, sentient and whatnot. We talked about FSD in Australia and the fact that they don't have enhanced autopilot anymore for hardware 4. We were talking about basically everything we saw on the timeline. Welcome, Omar. How's it going? Right now, we are talking about XAI with the government deal.
Hey, going good. I'm excited that Annie is coming to government, and she'll now be in charge of autonomy regulation. Hopefully,
I forgot about that.
Unhinge. What's his name? The little one.
Yeah. I don't remember his name.
Yeah. Omar, I mean, this space has been going on for like almost 2 hours and a half. I was just about to close, but you are here. Feel free to talk about whatever you want if you have something. Landon, let's go back to everything we just said. Let's reset the room like completely. Let's start from scratch. No, Omar, is there anything you want to talk about?
so sorry I'm late. I had a court call hearing. My Tesla short seller, cyberstalker Aaron Greenspan filed an ex parte motion, which is kind of like an emergency motion, against Tesla and X and myself for filing an anti-slap motion. This is a motion you can file if someone's suing you just for speaking out against something. And if you win, they have to pay all the attorney's fees. So he called an emergency motion and to try and stop us from doing that. And he said, fine these guys, Tesla and X's lawyers, $100,000 for filing this against me because it's improper. And the court denied his motion without even hearing the arguments because it was so ridiculous.
So that's good.
So that was a good, nice short decision. They just said, okay, it's denied. And yeah, I'm really excited about FSD 14 next week. So, it sounds like it's going to roll out over several weeks. It'll probably be wide on everyone's car by the time we hit the shareholder meeting, which tracks with what I have been hearing from people. So, yeah, probably, end of September, early October. Let's call it maybe the first week or two October. We have FSD 14 going out. So, coming up pretty fast. And I'm really excited. We haven't seen an FSD update in a long time. I had heard that basic autopilot is going to die and they're going to replace it with a new FSD stack powered version of AutoSteer. I did hear that, they're able to process the images at 48 hertz, which is, I think, a pretty good frame rate for inference on the car with hardware 4. so it's essentially processing images 48 times a second. So yeah, that's going to be pretty great response time. Other things that I've heard about V14, I've heard it's very good in parking lots. It'll actually go circle around and find a spot. And it's not as hesitant in parking lots. It actually can drive much more quickly through parking lots. And that it's able to operate, that it's able to kind of drive to any pin, even if it's not on the map. It's able to go on sort of unmarked roads and stuff like that. So looks like a lot of good stuff in FSD 14. I'm excited about the Cybertruck improvements too. And yeah, it's been 10 or 11 months since FSD 13 has gone out. I think this is going to be a really big release. I think this is probably going to be the first release that ever operates the robotaxi without safety monitors. Maybe FSD 14.3 or something like that. They'll start doing that. And yeah, I think it's something we've been waiting for a long time.
Alexander?
Yeah, so when you say autopilot's gonna die, are we getting a new update then in Europe? Do you know?
I don't know what the plans for Europe are, but I mean, they could theoretically release a version of the FSD stack that did exactly the same thing as what AutoSteer did and complied with the regulation. So I don't know if they're going to do that or they're not going to do that, but theoretically you could, as long as it had the same restrictions.
Did you let the Dingleberry up, Ellie?
Yeah, just for a second, for the first time ever. I never tried it before, but I thought maybe you guys are ready for some action. The Magic, you have some thoughts you want to share?
Yeah, thanks for letting me up. I had a question. So I remember that delivery, that driverless delivery in Austin. How many driverless deliveries are happening from Austin? I only saw that one with that video that was heavily choreographed. Anyone else? Anyone? You guys know how many deliveries are driverless, or was that just maybe a stock pump?
All right, thank you for participating. See you next time.
Why do you always you sound like you were really upset when you said that? I don't know why. Did you?
It's okay.
Did you?
No, it's
kick
okay.
him off?
I gave it a chance to see if we can actually talk about something, but I guess not. Omar, where is the word sentient came from? Can you when did it start?
Sentient?
Yeah.
You talking about like the etymology or what?
No. I mean,
Talking about
when it comes
FSD.
to when it comes to Elon's post and him using this word.
Well, I mean, he's just kind of making a statement about his impression of it. I think we've obviously seen as they've in data, it learns to mimic human behavior to such a deep extent that it almost feels like it is a human. So I think that's essentially what he's trying to say here. It feels like a human, even more so than FSD 13 does.
Yeah, okay. Jonathan just got his Cybertruck today.
Hell yeah, that's exciting.
Yeah, he's super excited. All right.
Ellie,
So,
Ellie, can you hear me?
I mean, the connection is quite poor, but try again.
Yeah, I probably have no service. Sorry, it's fine. I'm just talking away.
I'm guessing you say, yeah, dude, you're breaking up pretty badly. It's okay. What else?
What are you doing?
I don't know.
What are you doing?
I'm tapping on my book. I wrote some subjects, but we touched them all. We talked about everything. I'm not sure what to do. I'm confused now.
It sounds like you're doing something else.
It's okay. You have dirty mind, like all of you guys here. Choo. So No, I asked that many times. I don't have anything.
How long do you have left at Tesla, Eli? Is it only like 2 weeks or 1 week now?
Next space will be, I guess, my last space as a Tesla employee. So
you feel freer then? Will you feel like
I mean, dude, I love this company, of course. You know, I do what I do because I want to just get out of this country. You know, so I still want to work for Tesla. If I could find myself in Tesla again in the US or probably just the US, that would be amazing. But that's the only reason why I leave the company here in Israel. It's because I can't stay in this country.
Will you pick me up with a boat, go to Sweden, and then we can go to the US?
I don't know if I want you with me on a boat for like 20 days, 30 days. But yeah, sure. Let's say yes and take it from there.
Great. We have a plan.
Very smart. Very smart.
Yeah. But we do have FSD on boats. Like we have autopilot, you know. So yeah, we have autonomy, boat autonomy. True. Dude, Omar is here. I just want to use like I don't want to let him down. Like he joined the space like almost 2 hours late. I want him to participate, but I don't have anything. Mark, what's up?
Hey guys, great space. I'd like to hear more about 14. I'm excited to hear about a launch coming up. When regular folks might see it. And are we gonna see? So I guess we'll have Banish maybe. Like that would be really exciting. Uh, I'd like to see how it performs in parking lots. I was pretty excited to hear Omar say that it's doing a lot better. I've had some mixed experiences, but obviously we've been seeing the versions get better and better, and I just feel like that's a great topic to continue on. If there's anything else that
Sure.
I mean, yeah.
No, sure. We can open it up to people if you want to come up and ask a question.
Omar, when do you think like someone like myself or my family would see it? 14, version 14.
You know, it's hard to say exactly. All of these things are obviously subject to the results in the field and how it's working. If, you know, there's some issue, then that could delay rolling out further. But my understanding is the goal right now is that every single person will have it for the shareholder meeting, which is November 6th or something like that.
Dude,
awesome. Yeah, November 6th. Sad to not be in Austin for that date, but yeah, it's
And I
gonna be
imagine it'll
great.
go early access before that. It may even be on Robotaxi before that. So I would be surprised if a lot of people got to try it for the first time on the Robotaxi.
And November 6th, we're gonna potentially have another AI day because I remember Elon saying that they're gonna do those together, but I don't think we've heard anything more about that. I don't know if you have, Omar.
Sorry, what did you ask? Hear about what?
For the shareholder day, Elon mentioned that they would combine it with like another AI day.
Yeah, I mean, I think they're going to be giving a lot of details on what their plans are for the sort of AI future and what Elon's vision is for that. I heard Optimus is definitely going to be doing a dance with Elon on stage, so that'll be kind of fun to see for the people who are lucky enough to attend. Attendees are going to be picked randomly via a shareholder lottery. You can register online. One vote equals one lottery ticket, one chance to go. So you'll probably have a lot of the bigger shareholders there, but you know, even someone with one share could theoretically get picked. And yeah, Elon will give an update on the company. He'll do his dance with Optimus, and I think just probably talk a lot more about Master Plan Part 4 and where he sees the company going from here. So yeah, this is going to be a big shareholder meeting. You know, we might get to formalize a relationship between Tesla and XAI, get the comp plan passed, which, the stock has been doing great since the comp plan passed, which just shows kind of, the value of Elon to Tesla, I think. If Elon is retained, the market thinks Tesla probably has a much brighter future. So, yeah, hopefully we can get that passed and then head on over to an $8 trillion market cap.
Awesome. Also, just out of curiosity, if you have any predictions or thoughts about what else we might see, if anything, I know that Elon has said that we would see a demo, a really exciting demo. I think we all know that it has to do with the Roadster by the end of the year. There's potential for new vehicles. I don't know if they'll be the cheaper models or some sort of cyber SUV or something, or I know a lot of people said the Model YL won't be coming here. There was some talk about one spotted in the US. But I'm just curious if your thoughts on if we'll see any other exciting announcements.
Yeah, I don't know if the shareholder meeting is the right place to make an announcement, but I do think we're definitely going to see some exciting announcements in the fourth quarter. The biggest one, of course, being the more affordable version of the Model Y. I think that's going to be really important for people who want to buy a affordable car after the tax credit expires. And, it could potentially even be more affordable than the existing Model Y because when you have a car that's more expensive, you have to pay registration and sales tax and all this other stuff. That's a function of the price of the car. So, if you make the car a few $1,000s cheaper, you could actually end up with a lower total cost. So, I'm really excited to see what they do there. They've been talking about this for a long time. I do think the Model YL is also going to come to the United States. I'm hoping Elon was sandbagging a little bit. Yeah, I had heard that some people were seeing them driving around the US. But those could just be imported from China. I know the design center has a few units just to kind of look at them. But I do hope that they're bringing that here. I think it would be a huge hit. And I think people would be willing to pay more than a standard Model Y for the Model YL. And finally, Cyber SUV. Reliable sources who told me about the Model YL a year before it came out have also told me that the Cyber SUV is real, that they're working on a Cyber SUV, and it's essentially going to be the Cybertruck platform. Same, all the great stuff, steer by wire, power share, all of that. But instead of a large bed, you're going to have a third row of seats and then a smaller trunk. And the seats will be able to actually fold and you'll be able to still get that storage space when you need it. So I'm excited about that. Big Teslas with lots of seats, I think, uh, you know, is definitely an area where I'd love to see them introduce some new vehicles. And sounds like that's going to be a focus in the coming years.
It seems to be a really, really exciting time to be an investor in Tesla, owner, just everything. It's like I just feel like news is moving faster and products and whatnot, and it's super exciting. I'm wondering, in that Cyber SUV, do you think we could see like three benches of like three rows? Like what I mean is, in the first row, if we could see a bench of three seats, do you think that like they could achieve that? So there'd be 9 seats.
Well, um, the problem with that, if you look back at US automotive history, and I think this would be totally awesome. I would love that. But if you look at US automotive history, back in the day, most cars actually had bench seats like that, and you could have someone sit in the middle. But over time, as US auto safety regulations got tougher, namely when the Federal Motor Vehicle Safety Standards added a law that every passenger must have an airbag, it becomes a little complicated with that middle seat because of the airbag. So, where does the airbag come out of? Does it just explode out of the screen? They actually have specially designed airbags that kind of cover the sides of the screen so you don't smash your head into the screen or something. But that airbag issue makes it a little tricky. Not impossible, but I think that's the reason why they ended up not going with that sort of bench seat for the Cybertruck or that middle seat that they had originally planned. So I would expect that whatever decisions they made that led them to that conclusion kind of also carry over into the SUV. But yeah, if they could somehow figure out how to get 9 seats there, that would be amazing.
Thank you so much, Omar.
Thank you, Mark. Flash, you came up to speak. Do you have anything you want to ask?
Yeah, yo, what's up, everyone? Happy Thursday.
Happy
When do
day
you
after
guys think
Wednesday.
we'll get unsupervised? That was actually my question.
Flash, I don't know if you're doing it in purpose, but every time you talk, it's like there's a lot of noise coming. What you said? What time we think what?
Yeah, for the unsupervised, where do you think that could happen?
No, who knows?
It will happen in a flash.
Good one. That's why you are the funny one.
Yes, I am the funny one. Usually, people have to pay to have the funny one, but you get it for free, Ali.
I mean, sometimes I just want to boot you, but yeah, I guess you're right. No, I never wanted to boot Alexander. That's just a joke. All right. What else? What else you have?
Me?
I mean, I'm sorry, guys. We are just about to close the space. So if it sounds like it's quiet or we have nothing to talk about, it's because we exhausted all the topics. We're just trying to to let the people who followed Omar into the space a bit more things to listen to. But yeah, I think I'm ready to close it. So I guess that I will close the space by saying, first of all, if you know anything about Simon, the guy who do all the light shows, if you know of him, he just left his job and he's gonna go full on, like a full on career doing light shows all day, all year around, every year, every day. I'm not sure. So follow him, support him in any way you can, subscribe to him, become a Patreon. So Simon is a great guy to follow and support. Other than that, these spaces are basically scheduled programs, you can call them. So mine is every day after Wednesday, every Thursday. Alexander, the Joker, the funny one, the guy that looks kind of creepy looking at you. The purple heart. His space is every Friday. So Central, 12 midday. Yeah, and Joe Nation has Monday space. Mark has like a pop up space. Same for Lincoln and Omar subscription space every Sunday. We're not sure about the hour, but every Sunday. And let me tell you, in his spaces, you hear something sometimes things that you will never hear anyone like nowhere else. So subscribe to Omar if you know, if not a subscriber. Oh my gosh, dude, I can't speak anymore. Bye, guys.
cages a little bit, and people kind of freak out, and gives you an opportunity for positioning to the long side. So if you go back to the extreme of that in April, right, that was the extreme. We had the extreme headlines, extreme fear, extreme stuff like that. And if you remember, Meta and Microsoft specifically kicked us off, and we had like really aggressive moves on the back of it. So I don't know which basket will fall into this time around, but I'm kind of cautiously optimistic before that until we get some of this data and some of the seasonality out the way. But the last thing I'll say is, oil in early September, some of the oil names outperformed, especially refining names. They outperformed early September. A lot of these names that were doing pretty solid back during that stretch, they broke out of these major downtrends and they started to consolidate above moving averages that are basically playing catch up. Now, I don't know what camp everybody falls into, but I will say that if people were pricing a recession, or like people were expecting some sort of recessionary stuff, and we don't necessarily get one, and maybe we're going to try to run things hot, then some of these like inflation bets or these inflation hedges, oil, for example, being one of them, might do well, especially if they can consolidate here and kind of, people start to position that way. One note in conjunction with that is, some of these gold miners have done really well in part because of how quote unquote cheap their input cost in oil is. And they're very extended. I talked about that yesterday and the day before. I gave the stat. They're as extended as they've been since the coming out of the great financial crisis, and then back in I think 2016 when they came out of a bear market. So those were the last two times that they got that extended to the bullish side, and all that was back then was a short squeeze, right? But here today, and they've run pretty aggressively. They've been one of the really bright spots in the bull market this year. So, they're pretty extended above the 200-day. If you get any kind of like mean reversion to the downside, I could see a situation where you get like miners sell a little bit and you get some of these oil and oil derivative names kind of like light up a little bit and just kind of get this performance for the next few weeks, months, whatever. So that's mostly what I'm watching. I am watching your Apple too, kind of hold things together, market down, bid Apple, make sure it doesn't like fall off a cliff. And yeah, that's pretty much it for me from as far as the diet chart goes. If you got any questions, happy to answer.
Hit me with the nice thing at the end. Smart man, smart man. I like it. Apple is looking pretty good today. Just saying.
Yeah,
Less than
it's been in line.
$5 from all-time highs.
Yeah, it's in line with what we were talking about earlier in the week. They rotate out of certain names and they bid other names. Apple's the flavor of the day.
All right. I know we
LEU
got
is the flavor of the day, actually.
Well, I mean, in terms of the mega
Yeah,
caps.
I'm messing with you. I'm messing
In
with
terms
you.
of the mega caps, yeah.
The Centrus is having a hell of a day today, though. It's my largest position by weighting. I've talked to you guys about it every fucking day for I don't know how long. Centrus Energy, Centrus Energy. Search my tweets. I don't know. I have 500 tweets on Centrus Energy going back to 2021. This stock just keeps going up. I mean, today of all days, a market leading name that's up 300% off the lows in nuclear energy of all themes should be down today. I mean, look at the nuclear stocks today. Look at the speculative stocks today. LEU is my number one position by weighting. I share my full portfolio transparently. I'm not just saying it today because, oh, it's up 14% today, so it'd be a good day to pretend like it's my top weighting. I share my portfolio to thousands of people. They see it. For months, LEU has been number one weighting, number one weighting, number one weighting. Went from 96 to 200 to now 300. I think it's going much, much, much higher, which is why I still own it and why I own it in the size I do. But there's going to be volatility along the way. It fell to 160 4 weeks ago. You know, how many people did that shake out? Stock fell from 260 to 160. If you didn't know the story, you got out there, right? If you didn't know the story, you looked at that and go, well, this is the daily and weekly breakdown. I don't know. What are the chances the stock goes back to the highs? Not only did it go back to the highs, it's in the 300s now. And I mean, I don't know, all things being equal, probably going higher. The Department of Energy today, this morning, for people that don't know why, Centrus Energy is up 15% today, announced that they are going to expand Centrus's enrichment capacity in Ohio. And as I've mentioned many times before, people who follow my content know already, Centrus is the only uranium enricher in the entire country. And now the Department of Energy has come out and said, yep, you're in a league of your own. We have to expand capacity in Ohio at your plant because no one else in the country is enriching uranium. And still, I mean, at 96, people thought I was stupid for buying the stock because they said, look at the PE ratio. And my retort then was, this is a national strategic asset and it's worth more than $3 billion. Today, the market cap is obviously much higher. It's more than doubled since we bought it. Today, the market cap is 5.7 billion. And I still think if you put the only uranium enricher in the country up for bid in private auction, it would go for much, much more than that. And that's how I'm thinking about the valuation of these strategic assets, not from a PE ratio perspective. And I think the people who understand the assets and understand what's happening from a national policy standpoint to secure these assets, they're the people that have high conviction in these types of stocks and have held them. I mean, Energy Fuels is another one, which I also believe has strategic importance with the White Mesa Mill, which is the only conventional uranium mill in the country and is now also refining rare earth metals, heavy rare earth metals. Also the only place in the country doing that. Like White Mesa is also a national strategic asset. Look at Energy Fuels today. It's green again. Keep in mind, this is a stock that has doubled in the past month. It has every reason to be down today with everything else, and it's not. In fact, it was down 9% off the open, and it's going to close green. It's going to close up 2%. It's not a stock that's like was consolidating and now just finally had its green day today. No, it's doubled in a month, and it's still green. Because the market's seeing through to these things, and it's flushing out speculation where it should. It's flushing out speculation in the SMR stocks, in the pre-revenue SMR stocks, in the quantum stocks. The speculation should be flushed out there. People should be burnt out of those stocks, in my opinion, for all I'm concerned. I think the idea that people are paying $20 billion valuations for pre-revenue companies is hilarious to me. I would never own something like that in my portfolio. And I'm a speculative guy. The stuff I own is not cheap. If you go through my portfolio, you won't find low PE ratios, right? But everything I own, I can justify the valuation via my thesis. I can justify what the company's valued at via my overall thesis on the company, not just based on the PE ratio. And that to me is what makes a great stock picker, is the ability to see through the noise and put context around the companies that you pick and say, look, I think this is worth more for X, Y, and Z reasons. I don't care that the earnings aren't where they need to be to justify the stock. And if you felt that way, you missed all the best performing stocks the last 5 years, right? If you're a PE ratio guy, you miss all the best stocks, right? So that's just true. That's not like my opinion. That's just true, right? Palantir, Robinhood, anything, even the best nuclear stocks this year, LEU, UU, like super performing stocks don't trade cheaply. Okay. But anyway, Centrus, amazing day, and that thing floated my portfolio today. Most of the names in my portfolio were red today, like they were for most people. But Centrus being up almost 15% as of the close, and is my largest position by weighting, really, really helped for the portfolio today. As did Kratos being up 4%, and UU being green as well. But a slight red day for the portfolio. It could have been much worse had Centrus been down with a lot of other speculative names, but it wasn't. So maybe a little bit of luck there because Centrus had the catalyst this morning. But, you know, luck only goes so far. You know, my portfolio has been able to thwart volatility pretty much all year and continue to hit new highs. I mean, even through the April lows. So I think part of it is just having picks in different industries. And I talked about this yesterday. My picks aren't all in tech. And on that topic is the new position that I opened today. I shared on Twitter earlier, but obviously I like to talk about it on Stocks on Spaces when I get onto the show with you guys. But so this is, I like to look at undercovered names, right? Like a lot of times, you know, when I was talking about LEU in 2021, nobody was talking about it. When I was talking about Nebius, very few people were talking about it. When I was talking about Amcor 2 weeks ago, no one was talking about it. Not a single soul on the platform. Now that stock's 20% higher, and I think people will begin to talk more and more about that in the coming quarters. Still love Amcor, by the way. Just because I opened something new doesn't mean it's going down. Amcor is a top 3 weighting in my portfolio, so I don't want people to think that like I've lost conviction in that. It's literally top 3 weighting in my portfolio, and the fastest ever stock to get there. By the way, it got there in 2 weeks, and no other stock's gotten that high for me in such a short period of time. But anyway, in a similar vein to Amcor, what I've been focusing on lately as the markets get higher and higher here is I'm focused less on speculation and I'm focused more on reasonably priced opportunities in hot themes. So I'm caring a little more about valuation at the tail end of this bull market than I did at the front end. And the reason for that is that when the correction does come, I want the stocks that I open more recently that I have less cost basis advantage on. I want those stocks to be less susceptible to corrections. So Amcor, when I opened it, I felt like that. You know, it was trading at 1x sales, and I felt like it was in a very hot industry, which is U.S. semiconductor reshoring. And I felt like it had direct relevance there, blue chip partners, all the good stuff. So that was the thinking behind that. And today with GXO Logistics, and I'll pin a tweet at the top just summarizing my thesis on it. I posted this earlier, but there's 3 companies I'm researching currently. This is one of them, or was one of them, because now I'm long on it, so it's not technically on my research list. But this was one of them. I generally research 2 to 3 companies at a time. Usually that results in me taking no positions. So I'd say 90% of the time that I'm researching a company, I'm not taking a position. I end up not taking a position. And then 10% of the time I do. And so in this set, I was looking at 3 positions, and this was one of them. And then yesterday, I saw Goldman Sachs upgrade this stock. And like, I don't have 10 stocks on my research list. I have 3 stocks. So when I see somebody on Wall Street like mention an undercovered stock on my research list, and all the names on my research list are not stocks that people talk about. Like if you search the tickers, they're not really stocks that people talk about. But anyway, GXO yesterday, Goldman upgraded it. And when I saw that, I read part of Goldman's note, and I was like, oh, they're starting to notice what I noticed. So I was like, I have to get long on this before, you know, people start seeing the thesis that I have, because I didn't want Goldman to blow it out. So I got long on it today, and Goldman has a little bit of a different thesis than me, but here's mine. The stock is trading at 0.5 times sales. Now they have about $2 billion in net debt, $400 billion in cash. Stock is trading at about $6 billion market cap. The debt's serviceable. It's not an unreasonable amount of debt. It's not like a financially precarious situation for them, especially considering the company in the trailing 12 months is doing 12.7 billion in revenue, right? So they're doing twice as much revenue as their market cap. That's point 1. But point 2 is that they're growing, and they're growing fast. The TTM revenue growth is at a 22% clip. So what I see there is a boring business that is inflecting to serious growth. And the reason I even stumbled upon this stock in the first place actually had nothing to do with industrials or anything. I was surprised I even stumbled upon it. But what I was researching lately in the last couple of months was robotics. And I was researching the robotic supply chain in the last couple of months. And I was trying to find stocks that I thought were fairly valued that I could get exposure to robotics to. And I just couldn't find any. Like I looked for, I don't know, 3 weeks, and just nothing was reasonably priced. Like there were some nice charts, but like I just couldn't get conviction behind anything. I went through probably like 8 or 9 robotics names. There aren't a ton of publicly traded pure plays, but went through 8 or 9 names. Like Serve Robotics is one I've owned in the past. I still like that one, and I think the chart's nice, and I think it's probably going higher, but I just couldn't get behind it with conviction. So anyway, I bounced around, and then I started thinking about warehouses and like factories, and I started thinking like, you know, if automation and robotics is going to come, it's probably going to go there first, because commercial players have the incentive to deploy robotics and automation in their factories and their warehouses, but they also have the money to do it. Right? Like these commercial players anybody who's warehousing goods has a lot of capital, period. Right? Like the Amazons, the Walmarts, the Apples, the Boeings, they have a shitload of money. Okay. So these people, you're dealing with capital rich customers. That's point one. But point two is that they have the incentive and the ability to rapidly deploy these systems. Whenever a party has both incentive and ability, whatever thing that you're imagining happens. Like 99% of the time, if I don't care if it's a corporate entity or a government entity or an individual person, this isn't even just with respect to stocks. If someone or something or some company has both the ability and the capital and the incentive to do something, they will do it. It's basic logic, right? And so for me, warehouse automation is this is just my opinion. Again, this is a thesis. This isn't like something that I read. I'm just speaking from what I think. But in my opinion, warehouse automation is going to be the first frontier for robotics, the first real frontier where robotics are going to be deployed at scale. And I want exposure to that. Now, I talked about this when I posted the thesis in our Discord this morning. I always post the ideas there first, of course, but I talked about this briefly, and I talked about the idea that like I have robotics exposure in my portfolio, right? Like I own Amazon, I own Nebius, I own Tesla. I've owned these stocks for a long time. I have deep cost basis advantages on them. I have no plans to sell them. They all have robotics exposure, right? Amazon has robotics exposure. Tesla has Optimus program. Nebius has AV Ride with the food delivery robots that are in Dallas that I see every day. So I have robotics exposure, but I wanted a pure play. And I didn't want to pay a 50 times sales for one of these memes robotic stocks that are like trading at retarded valuations. So I was like, you know what? I'm going to pass on those. And so I started to really deep dive the chain, and I stumbled upon GXO, which is a spinoff. And what I realized was that GXO in the last 8 months has been pivoting heavily. So what they do is that they're a contract logistics company, right? So they do logistics for a fee. Okay, and that can be everything. They do it in a lot of specialized industries. So they do it in aerospace and defense and healthcare. This can be everything from storing like highly sensitive medical materials or human materials or whatever, to storing highly sensitive aerospace and defense parts that need to be cooled at a specific temperature, all the way to storing Apple devices before their release. They do these secure storage facilities for Apple before release, these secure warehouses where like they have the iPhones in there ready to go, ready to ship before they even present them to the public. Like they have these really, really specialized warehousing solutions. That's what they do. Okay. And they go to these big companies and they say, look, instead of hiring hundreds of engineers and cooling techs and all these specialists, we have those teams already. You give us a logistics fee, usually a multi-year logistics fee, usually a multi-billion-dollar multi-year logistics fee, right? The company's done $13 billion in revenue in the last 12 months. It's not a small company in terms of revenue. So they're signing these massive multi-billion-dollar logistics contracts with some of the biggest companies in the world. Their partnership list is not a small one. Apple, Nike, Nestle, Boeing, like Whirlpool appliances, like big companies. Okay. And these companies, what their job is to make the products and sell them. They don't want to have to worry about specialized warehousing and logistical operations and being able to get deliveries off in remote parts of the country. They don't even want to have to worry about that. They want a warehousing partner to do that. And so for a long time, this has been that sort of business. And frankly, it's a boring business when you think about warehousing in a vacuum, right? You're like, oh, warehousing, who gives a shit? But it becomes a more interesting business now because of robotics. And it becomes a more interesting business now because now automated and robotics enabled warehouses have an even higher barrier to entry than traditional warehousing, right? Like if you're a company and you want a warehouse built near, let's say, a location of interest where you know you have a lot of customers and you want to have efficient and fast delivery to those customers in that area. So you build a warehouse. Okay? Build a warehouse, get some operators for the warehouse. The the burden on the third-party contractor there is not enormous. In many cases, you don't even need a third-party contractor, right? But it becomes an entirely different conversation when you want an automated warehouse that's robotics enabled, that has the robots installed, that has the necessary softwares installed, that is turnkey, that you can just drop shit off in and it's automated, right? That if you're Amazon or Walmart or Nike, you can just drop, if you're Nike, who's a big partner of theirs, you can just drop off all your shoes and they are automatically sorted and warehoused and set for delivery. And all the logistics are done for you without you having to become a logistics company if you're Nike, right? And the premise here is that not everyone can do what Amazon has done, right? Amazon was an e-commerce player that became the world's biggest logistics company. Not everyone is going to do that. In fact, almost no one else is going to do that. Everyone else, Apple, Nike, all these guys, they don't want to be a logistics company, right? So they need a third-party logistics provider. And these guys are the world's largest pure play on third-party logistics. And now, in my view, they're becoming thematically relevant to robotics and automation as well. And I think that's going to drive growth. Because I think as this theme heats up, this automation theme hits up, and there's higher and higher demand for automation and automated warehouses, I think that there'll be a spillover effect for demand for companies like GXO. And I think the double whammy here is that they're an asset light model. Like they're ready to go now. If the warehousing trend started tomorrow, they are ready to go. They don't build the robots. They're not a robotics company in the sense they build the robots. They have partners which they procure robots from, and then they have software partners who build platforms for warehousing, and they integrate those technologies and then deliver them to their blue chip customers, right? Hey, here's the warehouse. It's automated. The equipment's installed. The robotics are installed. You just need to put your shit in there and pay us a multi-year fee to manage it and operate the warehouse. And so I like the business model. And I think they have a pretty convincing trajectory to consistent growth. And my view is if the stock returns to consistent growth, which TTM revenue shows pretty nice growth, right? 22%. If they can keep that up, and at the same time the market says you're a robotics and automation play, there's no way in my view the multiple doesn't expand significantly. The stock won't trade at 0.5x sales in that scenario. 0.5x sales is not an expensive valuation by any measure, even if you're not profitable, and they are profitable. So, yeah, I don't know. I think it's another undiscovered stock that I'd like to operate in those types of names, and then I sort of smile and laugh when the crowd finds them. But it took the crowd a week or so to figure out what I was talking about with Amcor, and then the stock ran 20%, and I think it's going to run much more. And with this one, I think it'll probably take the crowd a little bit to figure it out. But I'm not saying the stock's be green every day. I always like to preface this because whenever I bring up an idea, people always like tag me every time a stock's red. Every stock goes red, guys. So just be wary of that. But I like the idea. I like the company. I think they're in a unique positioning here, and I think they're cheap. And I think because they're cheap, thematically positioned, and have a lot of secular tailwinds behind them, I think it's an interesting story. So, yeah, I'm long on that name today. It's about a 5.5% weighting for me, almost close to a 6 as of the close because some of those options went up a nice amount on today's 3% move. But yeah, 5.5 to 6% ish weighting for me on that thing. So, yep, that's GXO. I wanted to get that out before the close because I know some of you complain when I talk about positions I took and don't say it before the close. So that's all for me. And I don't know if Brian got to talk or Evan, if you want to rotate to some other topics. But I know there were some other good things out this morning on the sell side and stuff too. So we can talk about that if you want. But yeah, that's GXO Logistics.
At this point, we have Costco earnings coming out in any second. Let me double check what time this says. 4:15. So we actually do have a couple minutes. Brian Lund, you a GXO guy? Was that compelling for you?
I'm just scribbling.
Or are you bored?
I'm
to sleep?
scribbling notes. I just can't get enough. No, look, I said this yesterday, and I'm not trying to kiss up to Stock Talk, but I appreciate his approach. It's different than mine, but it's obviously been very effective. And I think one of the things that's important is that no matter how long we've done this, you're always open to new ideas, new concepts, that you're always evolving the way you look at markets. And we can also walk and chew gum at the same time. Like I can have some short-term, intermediate-term trade plays that I like, while I also incorporate longer-term value plays that I use technical analysis to get in strategically. So it's all good. I mean, I can't overestimate the value or overemphasize the value of these spaces. We all have discords. The more eyes that are on the market, the better, because it's all about idea generation, right? And when people are bringing ideas to you, you can evaluate them based on your criteria, your time frame, your risk parameters. But the more people looking at the markets, the better you are poised to find those things before the rest of the market.
I appreciate that, Brian, and I agree with you. And whenever I'm talking, like I think some people mistake when I advocate for my style that I'm like knocking other people's style. I'm not. It's just kind of the way we all are. Like we all have found success in our own ways, and like kind of pound the table about the way that we do things. And I don't ever mean it to say like other people are doing things wrong. One thing
It's
I
not
will say,
binary,
though,
right? It's not one or
yeah.
the other, right?
Yeah, one thing I will say though, one thing I have stood behind in my career, and I used to be more short-term oriented, is that like I genuinely do believe overactivity is a curse. Like no matter what your time frame is as a trader or investor, like even if you're a short-term guy, I think overactivity is a curse because like what I've found, and again, this is just my personal experience, is that like less clicking with more thought makes way more money. Like I used to click a lot and not think a lot. And this kind of sounds rudimentary and stupid maybe to some people listening in the audience, but like when I started trading, I clicked a lot of buttons, right? You do a lot of buying and selling and searching and whatever, but I don't do much of that anymore. Like when I'm at my screen, I am at my screens all day, right? Twitter, Discord, like I'm in the Discord most of the day and in the mornings, and like then I'm here on Spaces. Like I'm at my desk all day, but like, am I trading all day? Like not really. I mean, most of it is looking at charts, researching, pop up some balance sheets occasionally. I'm not a big balance sheet guy, but occasionally I will. I'll look at some revenue graphs. I'll read some news articles that no one's reading. I read a lot of Taiwanese news lately about the semiconductor industry, but like I just try to learn basically in a really broad way, about everything, about the technical side of the market, about liquidity pools, about how many unhedged flows are coming in the market. I don't use all this information. I don't want people to pretend that it's all useful. Like I'm a very micro focused guy, but I just find it easier to navigate markets if you just stay focused on the stocks that you have, whether you're focused on them technically or fundamentally, and just like stay focused on that. And when everything in your portfolio is breaking down at the same time, then you can start asking questions, but those periods are rare in the markets, especially if you have a diversified set of positions. And part of the reason why corrections have been less stressful for me in the last couple of years is that I've tried to build baskets that are going to perform on different types of days. Like, I'll be frank, I didn't think Centrus was going to be up today. Obviously, it was, and that helped. But there have been many other days this year where some of my speculative names were down, and then maybe my aerospace and defense stocks were up on that day, or maybe my aerospace and defense stocks were down, but my sports media basket was up on that day because there was an NFL catalyst or something. And that kind of stuff helps me float performance in the interim, like when I don't have any explosive ideas on the table. And I know I've had a hot hand lately, so a lot of people are like, "Oh, does everything you talk about just rip?" Like, no. So a lot of stuff I talk about consolidates for weeks or months before, right? Like, not everything just goes up right away. But I'm better able to hold through those periods of consolidation because I have other things in my portfolio that are paying me. If I didn't, it'd be harder, right? And because there's more opportunity cost that way. Or there's more, I shouldn't say there's more opportunity cost because there's not more literal opportunity cost, but there's more perceived opportunity cost that way, right? Like if you're long something, if you full port something, for example, this is probably an extreme example, but I know a lot of people full port on this platform. So if you full port something, for example, and then you see other stuff running, that's painful, right? because all of your money is in one thing, and there are other opportunities that are moving in the market, maybe stuff that you maybe even want to buy, and you can't buy it because you're maxed out one position, right? That's always a shitty position to be in. In fact, it's a shittier position to be in when you don't have the ability to generate or have a new idea. That's why for me, I always I'm a leverage trader, so I do go into margin. I don't recommend new traders do that. You should only do that if you're experienced. But even if you don't use margin, if you're in a cash account, you should keep some level of cash always, in my opinion. Because if you're a margin account, it's a different story. You know what you're doing. But if you're not, you should keep some cash always, because you want to be able to. There might be a ripe new idea that you really like, and you're like, dude, I don't have the capital for it, and your capital's frozen and locked up in stuff that's not moving or not performing, and that's a tricky place to be in. A lot of people say you'll win in markets if you just buy and hold stocks. That's not true either. You have to buy and hold the right ones. We talked about this a few weeks ago with Intel, which has done nothing for so long, and now is finally starting to move. But you could have been a shareholder from Intel since 1998 and been flat. That's brutal, And you have to recognize that, though. That this is why both sides of the ball matter. This is why learning both technical and fundamentals matter, in my opinion. If you want to be able to super perform the markets, because you want to be able to hold the winning stocks for long. And you want to be able to know which ones are just hype trains and are going to come back down. That's a really hard call to make. I tweeted this several months ago, but I said, the difference between the great stock pickers and the good stock pickers is that the good stock pickers get into the good stocks, but they don't stay in them for long enough because they don't understand them. All they see is the chart. They're like, hey, nice volume profile, sick wedge breakout. It looks nice on all time frames. I'm going to long it here. Then it rips 20% and they sell it, right? And it's a great trade. I'm not knocking anyone for making money ever, okay? Make money, great. If you're consistently profitable, even better. But it's not about knocking somebody for making money. What the point is that there are many of those names that should not be sold on that 20% move. That 20% move is the beginning of a 400, 500, 600% move for so many stocks in the last 5 years, right? And I think the super performers, between the super performers and the great performers in the last 5 years, are the ones who held those stocks versus the one who sold them on rallies and then got locked out of them. How do you know the difference? Research, work, actual work, not reading tweets and hearing about stuff, but real work. That's how you know the difference. That's how you figure out, oh, this is not just a hype stock that's getting insane momentum volume and riding the 921 EMAs because there's a retail bid under it 365 days a year. This is a stock that's seeing increased institutional interest, growing revenue, a sexy story. It's thematically relevant. Maybe they have a national strategic asset like Centrus or Energy Fuels did. When all of those factors click, then you're like, oh, dude, take let me print the cash out for you. That's how I feel when I have those factors lined up. And that's what makes a high conviction trade. That's what makes the sort of trade that carries your whole portfolio and you just don't have to worry about anything. That's ideal, right? The goal in markets is, no matter what your style is, to make money with the least stress possible, right? That's everyone's goal, I imagine. I would hope so. Make as much money possible with the least stress possible. The best way I've found to do that is conviction positions in a handful of stocks, be low turnover, and if you want to pay yourself, trim the positions. I said this a few weeks ago, and I'll repeat it very. Your winners to find another winner. Give that serious thought. Sometimes is your money better used by just keeping it? I know you see profits on the screen. I know what you've been told by the setup gurus on Twitter, which is that you must pay yourself regularly. You must take a 50% tax event regularly. Okay. Okay. Good luck giving back half your performance doing that in taxes. And good luck ever building a portfolio doing that. You're never going to build a portfolio of stocks doing that. If most of your capital, not even all of it, if most of your capital is used to just cycle in and out of trades constantly in perpetuity, cycle after cycle after cycle, you're going to wake up 25 years later and be like, where are all the stocks I was supposed to own? 5,000% lower. You know, you won't have any of them. You might have a pile of cash if you're really good. If you're really good, that's the caveat. Most of you who do that for 10 years will have the opposite of a pile of cash. But if you're really, 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 really good at short-term trading, you'll end up with the 20 years later with a pile of cash. And I'd much rather end up with a pile of stocks that I own thousands of percent lower. Personally, I'd much rather have that. And that's up to you, you know, and that decision of where you want to be in 20 years, whether you want a pile of 50% taxed cash, or if you want a pile of high conviction stocks that in really cutting edge industries that you own at cost bases that they'll never see again, the prices that they'll never see again, you decide which of those two things you want. And that should dictate the style of your effort and the time you put in markets and where you dictate that time. For me, the answer is very clear. And so I don't spend my time clicking buttons. I spend my time doing a lot of work on the few things that I own, sizing them aggressively. And then if I want to pay myself or I need to pay myself, I pay myself by selling some of them. That's it. That's simple. It's that easy. There's a falsity, there's a misconception on Twitter that you can only pay yourself regularly or you can only make a living trading if you're doing short-term trading. That is literally a lie. Because long before I ever had my Stock Talk business, and when I was trading, I was making a living trading on just trading, and I was not doing that. I was not scalping and day trading. I was making a living on swing trading, and you can do that. I don't know how that even got started, that myth, but it's like a very like commonly accepted thing on Twitter. Like, oh, dude, well, if you need to pay yourself and you need to generate an income, then you can't do that. You can't do the low turnover. What are you talking about? Yes, you can. It's just dollars in, dollars out. If you put 100K in 10 stocks that are short-term trades, you put 100K in one high conviction stock, and that stock keeps going up, and out of those 10 short-term trades, you hit maybe 6 out of 10, what's paying you more? You're the one who decides to sell. If you have 1,000 shares, okay, sell 100 shares when it goes up. Pay yourself. I don't care. I mean, that's up to you. I don't know. People have their own financial obligations. I'm not telling people when to or when not to pay themselves. That's up to you based on your own needs and income needs and tax obligations and yada, 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 whatever. That's person to person. But broadly speaking, what sounds better? I mean, to me, the answer was clear. And this is really why I changed the way I operate. You know, I was like 99% of the accounts on Twitter. I was doing the whole, where's the next setup? Where's the next wedge breakout? Where's the next, retest of resistance? Where's this? Where's that? And I was just constantly looking and growing gray hairs, looking for new setups every day. Like I felt like a crazy person. And now I'm like, all right, I have this 5 or 6 names that I know like the back of my hand. I have them huge size in them. I can trim the contracts whenever I want. They keep going up every month. Like that's an amazingly stress-free position to be in. And when they go down, I don't give a shit because I know them so well. I know the companies and the valuations and the peer valuations and the industries so well that I have zero concern when they go down. Like Energy Fuels this morning was down like 9% this morning. A bunch of people were tagging me in the Discord and closed green. I was like, don't worry about it, guys. Relax. Stock doubled in a month. It's down 9%. Big deal. Whoop. Stock literally reversed like 20 minutes later and ripped to green. Like, like conviction is what makes money in markets, not activity. Conviction and size, not activity. Conviction and size, not activity. Put it on a fucking sticky note. Put it on a sticky note. Like, and people realize this over time because most of Twitter is cancerous garbage because it's a bunch of 19 and 20-year-olds who just learned how to trade, who are obsessed with short-term gratification, who are posting pictures of Lambos and Rolexes. These guys are not going to be consistently profitable over 10 years. I promise you. I promise you. Okay? And the second a bear market hits, none of them are going to be able to find these setups that they are looking for. The quote-unquote setups are going to disappear real fast when a bear market shows up, right? What do you do then? You have no context about any of the stocks. All you see are the charts. You do nothing then, is what you do, right? What a lot of the setup traders will say, well, it's sit on your hands time. No, it's never sit on your hands time. There's times to observe, right? But you diligently observe the stocks that you know well for compelling buy points. Not just technical buy points, but compelling buy points on valuation, on peer valuation, on industry momentum, on a recent earnings release. Like, if you're aware of your surroundings with a stock, you are able to make those sophisticated decisions. If you're not, you're like a deer in headlights when the markets turn on you. So conviction and size. That's how you make money. If you want to actually make money, if you don't want to play the game of like, oh, I made $500 today because I hit an options trade because I saw a wedge breakout. You want to do that for the rest of your life, or do you want to like actually like own stocks that grow and pay you by their own merit rather than you having to go find them all the time? That's the decision. That's the decision. And everyone will make a different one. But for me, I know my answer is pretty clear.
We should be getting these Costco numbers out any second.
Costco warehouses by GXO Logistics. No, I'm just kidding. They're not a partner, but maybe.
Let's see. Costco does release their numbers out, their monthly sales data, so I don't know how much moves. We got a little bit of a
What'd you think of the
COTG
GXO
2X
pitch,
Costco.
Evan? Is that not warehousing?
I thought it was good.
Warehousing isn't that interesting to you, or what?
No, I'd have to look into it. Costco with a little bit of a move higher here. Net
It's
income
not
for
a
the
small
month.
cap. I know you don't like small caps. It's not a small cap.
$5.87, which is a beat on expectations, and we also have revenue, which is give or take in line with expectations. Seeing it reported as a small beat, 86.2 billion. Green circle. I didn't hear too much about the numbers, so I'd have to actually get in front of me.
Yeah,
and
I mean,
take a
you
look
can
to
peep my
double beat.
tweet, but 12.7 billion in annual revenue, 5.9 billion market cap. So trading 0.5 times sales, growing 22%. Not bad. Pull it up on Earnings Hub. I think it has like an A rating on Earnings Hub, I think. I checked like yesterday or today. Anyway, I think I scared away the panel with my GXO rant, but maybe it was too boring. Are there any other topics you want to touch on? We touched on the Oracle sell.
Costco, I was sorry, honestly, just what a time to be alive.
What, Costco?
No, just whatever.
What?
But yeah,
What's going on?
so we could talk about GXO.
We already
Let me
talked
take a
about it.
look
I
at
just
some of the
didn't know if
numbers.
no, I mean I already gave a 30-minute rant on it. We don't need to pound. Oklo got a neutral price target this morning. Webull got a buy rating. Amentum, Oracle got a sell rating. Centrus had big news, but I already covered that. Dot. Yeah, we pretty much covered everything. I don't know. I mean, I don't know if there's any other topics. Like, there wasn't. I was focused just on the Centrus news today, and then on the GXO position. So I wasn't really looking at the broader market too much today. But I'm imagining you were not either, based on your silence.
Honestly, man, I don't even know what's going on at this point in time in life. So I have no idea about anything that's happening. I know BMR was going down. I was buying a little bit. I probably should sell.
What is up with you right now? You're like, I don't know what's going on in life. What's going on? Okay, Evan is busy or something. Amp, are you there? Amp's not there either. Okay, it's just me on the panel.
Nah.
Do a little Q&A then,
Listen.
I guess.
So a Q&A would be good for you today. Anyone got any questions? You can also close it out if you want. Iron and Cypher. I saw Cypher had some news this morning. That was a weird one with NVIDIA. What do we got coming up after this? Did you look into that Cypher news, Stock Talk?
I did. I thought it was a pretty bad deal. I did. I said this. Remember when we were talking about this? We were talking with other stocks, and I was like, all these stocks are running, and they think they're going to get a deal, but they're probably not going to get the type of deal that they think they are. And I did not think that that Cypher deal was very good, in my opinion. Too long of a period, too small of a number. The warrants are really a concession. This seems to me like a deal more so where they went to Google than Google went to them. And I don't know. It pales in comparison to the Nebius deal, and I think for good reason. Like everyone thinks, there's this misconception. Everyone thinks that like everybody with HPC capacity is going to get a fucking $20 billion deal from Microsoft or from Google, and like those people just don't know what they're talking about. Those people don't know the first thing about data center, and that's most of Twitter. The problem is that because Iron and Cypher both became meme stocks, because they just became meme stocks. Mike Alfred and Eric Jackson just pumping them to oblivion. They had a great call on them early. Those stocks should have been re-rated for HPC capacity. They probably should have all doubled. But the run that they've been on is just ridiculous. Like, I mean, I owned Cypher at one point. That was a great trade when you had the HVEs coming in. Like, I was like, oh, this thing could go to 10, 12, maybe even $15, and it did. But, I mean, I don't know. If that's the best they're going to get, the Google deal they got today, those companies are not worth the run that they had. They're just not. Nebius has the strategic expertise to execute on a deal like that. That's why they got the number that they got from who they got it from. Like anyone who's under the illusion that Microsoft is going to go around writing multi-billion-dollar checks to Bitcoin miners has lost their fucking mind. Lost their mind. Like, keep in mind, guys, like, yeah, these facilities are valuable, but they are not valuable in perpetuity. Think about how much infrastructure spend is on the table right now, like trillions of dollars, right? So it's going to be hard to compete with that by just saying we have a facility. It's not like that compelling if you're a hyperscaler. I think people have kind of overreached a little bit on how compelling like the HPC opportunity is. I tweeted this when the Cores deal happened. I said all of these stocks need a re-rating. They did re-rate. Like they have re-rated. Right. So like people who are buying them now after a 400% run, like, I mean, good luck. Maybe they go higher. I'm not saying they don't go higher. I'm not saying to short them either, but like, are they all going to get $17 billion deals from Microsoft? No. And if you expect that, you're going to be like really, really sorely disappointed. So, go Bitcoin miners that are pretending to be HPC stocks, because that's what most of them are, right? So just understand that. And there are real facilities of value. Like Iron has facilities of value. Cypher has facilities of value. Riot has facilities of value. I'm not saying that these stocks are zeros, and I'm not saying that they shouldn't. The catalyst now is that these guys have to get deals to justify them. In fact, most of them won't. It's just that simple. You don't even need to get into the specifics on individual ones. Most of them will not get multi-billion-dollar HPC deals, period. They're going to get something in the similarity of what Cypher got today, which is mostly just good for Google as an optionality, as opposed to being that remarkably beneficial or game-changing for Cypher. I mean, I think that's part of why the move reversed. But I mean, like, there were stocks that were green today, right? Like, you can't blame it on the market. Like, Centrus had a catalyst today; it was green today. Like, you can't say, oh, the market just pulled Cypher red. I think the reaction was based on the terms of the deal, and yeah, I don't know. This is, again, all of this stuff is just a product of people not knowing what they own. That's what this is. It's just a product of people reading a paragraph on Twitter and then like saying like, oh, I know what I'm buying. I know why I'm buying it because I read a paragraph on Twitter. No, you don't. You have to actually know it. You have to research it and like understand the industry and all that stuff. This is the only one I kept.
Here's some. See if we got any interesting comments. The 25K PDT requirement. You have any thoughts on that one? They might be getting rid of the pattern day trader thing. I think it might be going down to 2K. I know it's on a stock a little bit, but I'm sure you've heard people in the Discord talking about it.
Yeah, I mean, just another accelerant for markets, right? I did that long post yesterday about retail versus institutions. And I sort of acknowledged this in there where the democratization of access to stocks is changing rapidly. Excuse me, sorry, throat's so dry. That the democratization of access to stocks is changing rapidly. And I think this day trading rule is just one more step in that direction. If you look at what's happening with tokenization of stocks, I think that's another step in that direction. If you look at what's happening with single stock futures, which are going to be coming within the next 6 months, maybe sooner, that's all going in that direction. So the vehicles for speculation are opening up. Maybe it's a top signal, but I don't know. Markets look fine to me for now.
Let's try this out.
I don't know if I love it though, the change. I don't know if it's a good idea.
Well, that's kind of how I mean, that's how the direction is going.
A lot of kids are going to lose their asses.
Also with this 24-hour markets and stuff. Yeah. I don't know. It's
like now that Robinhood allows shorting, could you imagine like some kid that doesn't know what he's doing?
You probably shouldn't short. The fees are going to be pretty high.
Yeah, no, of course. But I'm saying, there's still going to be kids that don't know what they're doing who short in size, not understanding this max risk, even though there's a warning there. And they're going to short in size with unlimited day trading. Like, it's just, yeah, that's going to be bad for a lot of people. But that's how you learn lessons, Like, I have so many funny stories with stupid stuff I've done with trading. Like, I remember, one time I had a SPY put position that was a hedge, and it went in the money. The hedge went in the money, and it was like a Friday, and I can't remember what I was doing. This is like years ago, and I was so busy, and I I forgot about it. Like I forgot about how I had the hedge on that it was expiring that day. I think I thought it was expiring like the next week or something. So expiring that day, and so then I woke up like that next Monday morning with like $1 million of SPY short in stock. And I was like, what the hell is going on? And I had to close it rapidly, and I took like a big loss. I don't remember what it was. I took like a 70 or 80K loss just like from having accidentally exercised. Against that position, but this conversation is always tricky because, like, what everyone says on Twitter is like, don't use margin.
Trump approves TikTok deal through executive order. But I mean, this has been telegraphed. Continue. Sorry.
What were you just asking me about?
Margin.
Oh yeah. So the prevailing sentiment that you see on Twitter is like, don't use margin, and like I'm gonna agree with that because I know most of you I know some of you are, but like I know most of you are probably pretty new to markets, and even if you have been in markets for a long time, I know it probably is a good thing to not use margin because the use of margin requires active observation at all times. Okay, that means you need to be able to watch price from the open to the close because anything can happen, right? Like if you're using margin and there's a big knife in the markets, like I don't know, World War III starts, and you're like not at your desk, you can get screwed. You know, there's people that can go that go so negative on their accounts that they can't afford to pay it back for years. So first rules first, if you can't observe your portfolio at all times without what's the phrase I'm looking for, without any sort of like restriction, like there's nothing that'll prevent you from checking your portfolio and clicking buttons at any time. If you cannot do that, then never use margin. Period. End of story. That's point one before we even get into the conversation about it. Okay. If you can at all times look at your portfolio and you are consistently profitable for years, then I think you can use it. And I use it. But I use it tactically. Okay. So I use it to add leverage to positions that I have high conviction on. Okay. That I've researched intently for a long time. And I also know how to manage against that leverage when the markets go against me. Like when the markets turn against me, the first thing I do is cut my leverage. The first thing I do. Okay. And the markets don't even need to go very far against me for that to happen. Like if SPY goes below the 21 EMA, I usually start cutting short-term leverage pretty quickly. Okay, because I don't want to sit in, like if I'm in calls that expire in a few months, I'm not going to sit in them if we're trading below the 21 EMA on SPY because I don't know what's going to happen. And there are moments where I get faked out. Dude, I got faked out of some short-term calls in September. Net, did it matter for the portfolio? No, I'm at 250% year to date. Who cares? I took a little haircut on some short-term calls at the lows. Big whoop. It's a risk management move, right? It's something you have to do. So if you can intently monitor your portfolio and you know how to effectively manage risk and you are experienced and consistently profitable, then yes, you can use margin on high conviction positions, in my opinion. If you do not meet even one of those criteria, you should never use it, in my opinion. So that's my simple view on it. And I think it's a useful tool. If you look at all the great investing records in history, they have not a single one has been done without margin. Not a single one without margin or leverage of some sort. So yes, to if you're good and you know you're good, this is the thing about being good in the markets, guys. It's not about if you think you're good. Okay? I'm gonna repeat that. It's not about if you like I play video games with my little brother sometimes, right? I suck, okay, but my brother's good and he knows I suck, right? But I'm not like I can still be like, oh yeah, dude, I'm better than you think I am, right? Because it's a video game. There's no objective way to quantify, right? He might be like, oh, you don't play like me, you're not aggressive enough, whatever. I can be like, you know what? I think I'm good. I can make that argument, right? In trading, you can't make that argument. In trading, there is no like, oh yeah, I don't care. I think I'm good. I think I'm good. No, you know you're good. You know how you know you're good? Your performance. That's it. That's it. If your performance sucks, you suck. Like, I'm sorry. It's not an insult to anyone. It's just like that's it. It's that simple. You're not good. You're doing something wrong if you're underperforming the S&P 500 and you're actively managing your money. And in many cases, the simple answer is not anything bad about you. The simple answer for most people is that I don't have the time. And that's why for most people, you should just buy the S&P 500 and never use margin and not pick stocks. Most of you, probably most of you. I won't say most of you because most of you are probably people who are really intently focused on the markets. But most people in general should do that. Now, the people who do feel like they have the time to do the work and have the time to know the stocks and have the time to study the charts and study the financials, know the industries. If you do feel you have the time to do that, then it's not about whether you think you're good. It's about your performance. Your performance is going to tell you whether you're doing it right or wrong. And if you're underperforming, the short answer is you need to change what you're doing. You either need to change the stocks you're picking, or you need to change the way you're managing them. Something needs to change because you don't need your buddy Fred to come and tell you, hey, dude, you're not that good at trading. Your portfolio will tell you. And this goes for investing too. Like some of you, like, I'm not just talking to, like, when I use the term trader, I'm talking to active market participants. That's what I mean when I say traders. Everyone's a trader. I've said this before. I'm not going to repeat it, but everyone's a trader. But for active market participants, that's your benchmark. Like, and if you're even if you're an investor who never actively trades and you're looking at your 5-year performance and you're underperforming the S&P 500, that might be a good signal to wrap it up and just buy the S&P 500 instead of the single stocks you're picking. That's a good signal that you're a bad stock picker. If on a 5-year basis, and guys, I'm not like, some people are going to read this and being like, you're being a dick. I'm really not. That's not the intention of this. I'm trying to help people get over their confirmation bias and get over their self sense of worth about their strategy and just say, dude, I have to go by the numbers. Like, is what I am doing working? And if it's not, you have to change it. And so for the people, the relevance to this, the margin conversation, to cycle back to that, is that those people should not use margin. The people who have been confirmed by the market to be consistently correct, and not just this year, guys. Okay. I mean, for many, many years, if you've been profitable, then you're like, yeah, I could put some leverage on my ideas. So yeah, that's my rant on margin and leverage and that stuff.
I appreciate it. All right.
Devin, I'm curious now because I know you only recently started being more active in the last couple of years, but do you use margin now?
No, I've never used margin.
Like,
Not a big
you
margin
never
guy.
even thought about it, or are you not fully allocated? Like, do you always have a cash position? Is that why?
No, for a while I would maybe had a cash position over the last couple of years, but now that I'm fully allocated, maybe that there's degen moments. But there's just something where
So, like, when you entered BM&R, you had cash?
yeah.
Okay, so like, what? I don't know if you care about disclosing this, but like, what % of your portfolio is that?
In BM&R,
Yeah, like, your total stock assets.
the problem is that like I have my portfolios in a couple different places and stuff like
So, out of
that.
all your stock assets, what
Estimate
percentage is it?
10%.
Okay, so it's a pretty big position for you.
It is a pretty big position. That would be my guess. Yeah, of the single stock one, it might be 20% when we go across everything. Maybe it's even 12,
I just go by
13%.
all assets. Like, 'cause, I mean, I consolidated all my stock assets in one portfolio anyway. But
I had to get it out because for me, if I wanted to go a little bit more risky in certain areas, I had to have my QQQ holding and that stuff, the retirement things, the more longer term one in a separate place that I'm not gonna
yeah, for me
touch
as
and
like
do
a
stuff.
self-employed guy, I'm like, I want my capital all in one place because I want my leverage all in one place because I do use leverage. And so, yeah, I was like, I had multiple accounts prior to 23. Then end of 23, I just consolidated it all into one account. And it's easier to manage. It's better for leverage, better for everything. So I just like it better that way. People are like, oh, it's not tax ideal. I was like, dude, don't worry. Don't worry about it. I do fine. But yeah, that's it though. That was, there you go. I don't know what was happening earlier with you. I guess you were busy, but those were 2 good questions. That was I think useful stuff.
Here's a story. Mark Zuckerberg and Meta are reportedly in talks with Google to use its Gemini AI model for targeted ads.
There'll be a lot of that because these
It's interesting that Meta is using someone else externally.
Yeah, the thing is so now these companies are scrambling to justify the spend, right? Because the big reports that are coming out now is like everyone's like, dude, we're not seeing any ROI. Like, where's the revenue from the AI spend? Blah 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 blah. And we've seen a lot of circular money flow to try to justify it, right? Like, I particularly think the OpenAI Oracle NVIDIA deal is hilarious. I think it's hilarious, like in a dumb way. It's like so circular. Like anyone could see it. You don't even have to be like have to understand the industries to see it. It's like hundreds of billions of dollars flowing from OpenAI to Oracle to NVIDIA back to OpenAI. Like, what? Doesn't make any sense. So, we need products, like useful products, quickly, or else this bubble will pop and it'll be bad. So I hope that all this spend yields extremely useful next gen AI products within the next year. I think there's a shot, but it has to happen. Like I frankly, like, put all the macro noise aside. Like, if you want a really big picture view from me or a really bold opinion, I think this whole market is hinging on the next AI product. Like the whole shebang. Like trillions of dollars in market capitalization. I think if the next gen AI products are disappointing, dude, like if we hit a plateau in AI development and like, I'm not saying this is going to happen, but this is a risk. This is the biggest risk to the market, in my opinion. And like, then everything goes. Like, it's not just going to be the AI stocks. Like, everything goes kaput in that scenario, and it'll probably be one of the worst crashes ever, in my opinion. So they have to, and I think these guys know. That's why they're spending so much. They know it. Like, Microsoft's market cap has done what since the release of ChatGPT? Let's see. Let's ask ChatGPT that. How much has Microsoft?
Laughing at your own jokes.
I mean, that was funny though. Market cap grown. I'm typing so slow right now. I'm so tired. Okay, let's see. Microsoft's market cap is doubled.
Giggles again at his own joke after.
Microsoft's market cap has doubled from 1.9 trillion in November 2022, the release of ChatGPT, to now 3.8 trillion. So Microsoft's market cap, the business has not doubled. Let's be clear, right? Business has not doubled, right? But in less than 3 years, the market cap has, of one of the biggest companies in the world, which is now the second biggest company in the world, and that's not it. It's not just that 2 trillion. It's trillions of dollars in market cap for Meta and Nvidia and all the stocks that have gone up. Think about all the small caps that have gone up in the AI trade. Think about all the suppliers. Think about the photonic stocks. Think about the power producers. Think about the nuclear stocks. Think about, I go on. That's what, at least 20 trillion? Maybe a little less. Let's say 15 trillion. I think it's probably closer to 20, maybe more than 20. So what, 20 on AI creating a genie. Like a literal genie in a bottle. How long is the market going to flow cost, right? What's happened in the last 3 years is this. The public, the corporate and public, like the corporate public and the regular public, the retail public, have funded to the tune of trillions of dollars the development of AI, the building of all these data centers, the building of all these GPUs have been funded in the form of the public has varying durations of patience. And the public has been overwhelmingly patient with this theme. Let's be clear, right? Like, it's been 3 years since the release of ChatGPT. We've seen no meaningful earnings anywhere directly from AI. I mean, if you want, the reason this just came up was the point you just brought up, Evan, about the Gemini and Meta partnership. That's the type of stuff we've seen, where they're leveraging AI to make more efficient ad tools and then calling it AI revenue. That's not revenue this year, probably not making any money, and like that's a problem. The product is so compelling, is such a value add that like everyone has to use it, and it's not there yet because most businesses do not have any kind of AI deployed. Let's be real, like restaurants, like regular everyday small businesses. Like, you think they have any kind of AI deployed? No, 99% of them of the sort. Probably not using an LLM on the computer in the back on the table. Like, that's the simplest integration, but like they're probably not even doing that. So the level of adoption is much lower than people perceive it to be. The people in the bubble who use these things, who are on Twitter, think that like everyone is using them all the time. And like, even if that's true on a commercial level, like on a consumer level, that's not an earnings generator. Like, that's not going to move the needle for multi-trillion-dollar companies if a bunch of people are paying for $20 ChatGPT subscriptions. That's not going to drive earnings power. So how do you drive earnings power? You drive earnings power by creating an AI software that is so compelling, that is so expertly adept at everything, that you can sell it to enterprise at scale to do everything for them, to automate everything for them, right? And then you relieve yourselves of enormous workforce costs. You drive the earnings of your companies higher, and then the market goes, okay, AI adoption is paying off. All that money paid off because the companies who are adopting AI are seeing their EPS grow by, to a 15% CAGR. Like, that is going to convince the market that it's worth it. But we're not there yet. And right now, based on the bid in the market over the last 2 years, the market seems to be willing to be patient. I don't know how long that'll last. And that's the biggest risk to the market. The single biggest solitary risk to the market is underwhelming AI product development, period. Bigger than the Fed, it's bigger than the interest rates, it's bigger than everything. Everything. Like, bigger than the economic policy, like everything is but one bar below that. Because if the next AI product is amazing and truly transformational, then this bubble continues. It continues. Probably gets bigger. But if it sucks, the opposite happens, and it's going to be horrific. So just be ready for that. In the next year or 2 years, I think will be a big moment where we either get these humanoid robots and self-driving cars everywhere, and we get real world AI and software AI that's extremely capable and PhD level expert on all topics. Like, when we get there, then you can sigh relief if you own these names. But until then, everyone should be kind of holding their marbles close to their chest, because that is a huge risk. And I don't care what you own. It doesn't have to be tech. Doesn't have to be tech. If you own any asset long, anything, like, that'd be horrific. So let's hope that doesn't happen. That's at least the best we can do, I think, for now.
All right, we got one more, and then we could, if we want to close it out, we can close it out after that one. Google's actually moving up a little bit in after hours on that story there. I feel like you did skip off of the LEU a little bit. You used it to go into your GXO conversation. but and you maybe talked a little bit, but well,
Yeah, so they're the only enricher in the country, or they have been for a long time. The company's been publicly traded for decades, but yeah, the DOE is backing an expansion of their uranium enrichment capacity, and so a very specific purpose. Like there's something I want exposure to. It's never like broad. I'm never the guy that's like I want exposure to tech. Like no, or like I want exposure to or nuclear even. I want exposure to very specific things in nuclear. Like with Centrus, I bought it because I wanted exposure to their Ohio enrichment plant, which is the only enrichment facility in the country. I wanted to own a piece of that. That was it, right? And today is a validation of that facility to say, yes, we need to expand capacity there because we want to domesticate more enrichment capacity, and we want to do it there because you guys have done it. You guys know how to do it. You have decades of experience doing it. Why would we not do it with you? You're the only viable commercial candidate in the country today. Everyone else is speculative. Everyone else. And there's a lot of stocks that have gone up a lot, but I chose this one for that reason. It goes quality over quantity, right? Like same thing with Nebius, like I was talking about earlier. Why did I trade Cypher and keep Nebius? Because it's a better play. Why did I trade SMR and keep Centrus? Because it's the better play. You know, I don't want to keep the highly speculative pre-revenue, maybe something will happen names. I want to keep the names that I've studied and that I know are strategic assets that have value. Like same thing with energy fuels, like White Mesa. I knew that's a valuable asset, and I was like, I want to own the asset. I don't care about the earnings. I don't care about the revenue of the company. That's not important. That's not the thesis. Thesis is the asset, and the same thing goes for Centrus, which is that this facility, I think, this is just the first of many expansions, in my opinion. Like this stock's the top, retook the top weighting this week from Centrus in my portfolio. Sorry, from Nebius. Nebius and Centrus are top two, so they're neck and neck. But it retook the top weighting from Nebius this week because it outperformed the market this week, and it's a hell of a story. It's like, if you believe that nuclear is coming back to America, then you need enrichment capacity. And there's only one guy who does it, and there's still under a 10 billion market cap. And so it's pretty simple. It's always been a simple thesis for me. Most of my theses on stocks are not very long written. I know, like GXO, I wrote a little more than usual. People have been asking me, like, Stock Doc, can you write more when you share an idea? So I wrote more, but I generally don't complicated, right? That's hard. That I spend a lot of time on. But when I present the idea to you guys, I can explain it in two sentences if I want to. I try to provide color and detail on these spaces, but you should be able to do that. You should be able to simply say, I own Centrus because I think they're the only uranium enricher in the country. Not I think. I own Centrus because they're the only uranium enricher in the country. That's the thesis. I own Nebius because I believe they're the best multi-theme AI exposure on the market. I own Energy Fuels because I believe the White Mesa mill is the only conventional uranium mill in the country and is a strategic asset. Like that's a one sentence on three of my highest conviction positions that I've owned. Don't understand what you own. If somebody asks you what a stock you own and you have to be like, well, really believe in that industry. Like if that's your thesis, like you're lazy and you didn't do the work. You should know it very well. You should understand everything that's happening. Like, you know, when I said on this spaces in May when I bought Centrus, it was $98 when I was talking about it on this spaces. I said on the first day, it's the only uranium in the whole country. And the first question I got was, well, how do you know that? Uranium's a big industry. And I was like, dude, look it up. Like, just type into Google, is Centrus the only uranium enricher in the United States? And you'll find out yourself. Like, people are so, like, people are so rudimentary with their work. And you have an opportunity with mid cap companies, which is what I specialize in, to capture alpha that is not yet widely recognized. You don't really have that opportunity with 100, 200, $300 billion companies. I'm not saying you can't make money owning them. They go up a lot. I'm not saying that at all. You know, the Mag 7 have been a terrific thing to own. I own Mag 7 names. But the real super performing stocks are always mid caps. You know, 200 million to 10 billion market capitalization. That's a big range. I prefer 2 to 10. I prefer the mids. I'm not a big small cap guy. I occasionally have a few in my portfolio. I have one right now, DPRO, the drone stock. I've talked about it. Hell of a chart, by the way. I mean, if anybody who likes charts, go pull up the quarterly chart on DPRO. Might be the prettiest quarterly chart in all of small cap land. But sorry, I was taking a sip of the drink. My throat is fried. I've talked so much today. What was I going to say? Oh, I lost my train of thought. What was I just saying? I don't know. I lost my train of thought. Oh,
I am here.
we're basically at the end.
The reason that I didn't pop in sooner is because I didn't know exactly where you were at, so I was gonna be like, all right, we'll give him a second. To see
No,
if he
I
can
don't even
back.
remember where I just totally lost my train of thought after I took a sip of that. Anyway, yeah, Centrus Energy.
Sometimes it comes back to you. Sometimes it comes back to you. Centrus Energy was doing pretty good. Kratos was another one that was moving. There was a lot of
Oh, I
geopolitical
remember now.
talks and stuff going on. There you
I
go.
was saying,
What do you
I
want to
was
say?
talking about why I focus on some mid caps. There's just more alpha there that is able to be found. Like, you're not going to be able to you're not going to be able to find things that people don't know in like really big stocks. Like, everyone knows everything about the really big stocks. You're not going to be able to find things and be like, oh, people don't recognize this, or they aren't pricing it in. You find that a lot with mid caps, you know, and for people that don't, okay, sorry, I just got a email from my, okay, that's fine. People think that small caps are dangerous, and they are. Most of them are like debt laden, and you know, they're small caps for a reason. Mid caps are where you find companies that have sort of graduated from that shitty stage, right? Like the 2 to 10 billion market cap ranges where you find companies that have kind of like gotten over the hump, you know, of being like niche industry players who are trying to get the big contracts. You find companies that are a little more mature, tend to have much better debt servicing profiles. In fact, most of them, the good ones, tend to be just fine with servicing their debt. And they tend to have some kind of advantage that allowed them to grow into their form, right? You don't go from being a $100 million company to a $2 billion company through magic. You have to execute or have some kind of competitive advantage. And sometimes it's just the management team, sometimes it's a product, sometimes it's, whatever, it could be any number of things. And when you do that, you get sort of a pre-filtered basket of small cap growth in a way, if you know where to look. I'm not implying that's as easy as I'm making it sound, but you get sort of a pre-filtered basket of small cap growth, which is what I look for. I'm looking for stocks with a lot of upside. And it gives you an ability to get pure play exposure more easily, because these larger companies that are more diversified and own parts of multiple different businesses, when these hot themes come up in the markets, investors are looking for a really, really specific, smart investors are looking for a really, really specific way to get exposure to that specific thing. And if you track with that line of thinking, you can find these sort of gem stocks along the way, like Centris, like Nebius, like Kratos, that fit all the boxes, that are sort of sleeper stocks or have been for a few years, that are sitting in that mid cap range. And now all of a sudden they've won thematic relevance from the market, right? They've won relevance, because relevance is not usually earned in markets. Thematic relevance, it's given, right? It's given by the narrative. Like when Trump came into office and he's like, we're going to revive the nuclear industry, he gave the nuclear industry thematic relevance. The nuclear industry didn't do something last year, didn't do something marvelous. There was not some new nuclear technology that was invented that caused people to suddenly become interested in nuclear stocks. They became interested in because there was a policy shift towards them. And this is how every theme works. Like every kind of hot thematic in the markets is because there is either policy shift or an industry shift towards there. There's momentum. And so as a result of that momentum, investors are seeking exposure rapidly, and they find these stocks, right? Next gen defense. Investors eventually started finding Kratos. Stock went from the 20s to, $80 very fast. AI, data center, autonomous robots. People were looking for exposure to those themes. They realized Nebius was a multi-theme exposure. Boom, they get a Microsoft deal. Now that stock's $100 from 23 in a few months. Centris. People started realizing, oh my God, the only uranium enricher, the only one. Slowly, more and more people realize, went from 100 to 200 to 300, and I think we'll be at 400 and 500 and 600 in the next year or 2 years. And you look at, I could go on and on and on, all these names. At first, there's a slow recognition, there's an appreciation of price, and then there gets wider recognitions, and then all of a sudden you have B of A upgrading it. Like B of A's upgrade on Centris came when the stock was like $190. I bought it a month before that B of A upgrade at 96, because B of A is not really looking at those mid caps that intently. B of A usually doesn't come out and initiate reports on mid cap stocks. They're focused on, stocks that are a little bigger. And so that's the thing, is like you find these niches before the big spotlight gets put on them, and then you're positioned already. You might be sitting in low IV calls, you might be sitting in shares with a deep cost base advantage. Then the market finds the opportunity, and now you're sitting pretty, and now the position becomes so easy to manage for the rest of the time. So anyway, I got to do a workshop on Discord pretty soon here. So, and then I'm going to go to the gym right after. So we'll wrap it up here, but we'll be.
I appreciate your stock talk.
I
You
need
guys should definitely make sure you're following stock
a
talk.
2-minute recap of the last 2 hours I missed today.
No, you're good. You're good.
And a 5-minute rant on top of that. I didn't get a good one today. No, I'm just playing. I got stuck on a stream, but it was a great stream, but missed out on this. Appreciate everyone. I'm sure it was a great show. I'm just going to go with that because I was unable to be here, but Stock Talk holding it down. Appreciate it. Who's going to win tonight?
You're good.
I think it's a tough one. It's like a.
Don't make me jinx it.
I don't have a good call on it, so we'll see. I don't know. You guys tell me in the comments down there who's going to win, Seattle, Arizona. All right, everyone. We'll be back next week. Stocks on Spaces, 3 p.m. Eastern each and every day, Monday through Thursday. Appreciate everyone.
other news, we've talked obviously here on X a lot about Elon. One of the things that again we've talked a lot about is AI. Here's some more news that came out here this week. Is Elon mentioned that XAI is going to raise capital in the coming months. We've seen a lot of Elon's companies raise capital here over the last few months. Between merging X and merging XAI and raising the valuations. I know there's a conspiracy going around on the platform as far as, Elon wants his 25% stake in Tesla. So he has more control with voting rights. And so to do that, basically, he was whipping up all these companies, raising super high valuations. And then from there, he was then merging the companies and then raising valuations even higher. And then just building one big conglomerate in the hopes that he would then merge that with Tesla. And so I think part of that came out because they were going to merge XAI with Grok into the Tesla dashboard, and people thought they might merge that. But he did kind of debunk that theory. And then today we saw XAI got the government contract from the White House as far as having their XAI models available to the government. And I heard they're only selling it to them for 42 cents to pair with Elon's favorite number of 420 to each different agency. So that's just a different news topic in the VC world that's recent with this week. Chris, Matt, if you guys had any thoughts you wanted to chime in on that, or Elon, feel welcome. Otherwise, we can move on to the next news topic. Yeah, Tropic, go for it.
Yeah, I think Elon's just an interesting person as far as what he's doing on all these fronts. And one of the interesting things, of course, obviously we're on the platform right now, so we're helping to train it and so forth. But I find it really interesting at the scale and its speed at which he moves and everything he does. And I find that really interesting. And that's one thing that I see like very different with like, say, like these big public companies and so forth. Even when I watched the 1 hour video on the Memphis facility where Grok's brain is, basically, it's like the size of an airport. And he put this thing up like basically overnight, generating powers with turbines and all of these things. And it was done so quickly. I don't know anywhere on earth or any person that could have done what he did so quickly. And I just find it absolutely amazing, the ability to balance all these companies and raise funds at the same time. I don't know how he does it. Obviously, he has mastered the game. You're talking about knowing the game. He knows what he's doing 100%. So if nothing else, I would say those of us that are trying to learn, just watch. Even if you don't necessarily agree with how he does things, he's definitely playing the game in an interesting way.
Absolutely. And I definitely am bullish on Elon and think he's incredible. If you want to look at the top of the scoreboard, I just pinned another post, which is an interview that Marc Andreessen did here, I think over the last week, talking about why Elon is, the greatest entrepreneur of our lifetime, and why he is. And part of that, like you said, Tropic, is just the speed at which he is able to execute, and that he moves, and that how he delegates tasks, and how if he needs something done, because he is so smart, it's not like Elon is taking the problem to a director and then going to solve that problem with them. Elon breaks down every day what is the most difficult task that needs to get done today, and then he goes directly to the person who fixes that problem, and then they fix it together. And so Andreessen talks about how Elon is just so incredibly smart because he knows how to fix every problem in every department in every one of his companies. And that's really the part that separates him from literally everybody else, over the last 100 years, and why he's able to, I think right now he has like 7 multi-billion-dollar companies. If most people in their lifetime, if you're able to create, one company of that magnitude, or one company a tenth of that magnitude, you're probably set up for multi-generational wealth. And here we have Elon, who has, founded, I think, 7 companies that have multi-billion-dollar valuations. So incredibly impressive, the speed he moves at. And one thing I always think about too is like, I have the same amount of time every day as Elon Musk does. It's just all about efficiencies at scale. and that is true for every human on Earth. And not saying we all have to be Elon Musk and be worth $500 billion, but when you think you're busy, there's somebody busier than you. So, anyways, that's just a thought. Another thing I wanted to bring up, a little bit of a hot take, and this one actually comes from our other co-host, Kyle, on the show, and I just pinned that at the top of the space here if you want to check that out. And I'll read it, what the post says. The hard truth of fundraising, you need to be in person to close deals. There's just nothing like hearing how quick someone's wit is when they're put on the spot. Take your last expendable 5K and set up a roadshow. It's worth way more than ad spend or another contractor. So a little bit of a hot take. There's a couple ways to go with that. I wanted to give you guys a chance to respond, and what are your thoughts on that?
That's a really good one because I asked Ron about this. He runs an incubator where it's a 2-year program for the founders that he works with. And when founders try to schedule those meetings to get funding, like over Zoom or something, it's like an immediate denial, which is like, it's crazy because I think a lot of founders think that that's easier and more convenient. But getting in person, again, it's that thing of telling your story, putting yourself in the spotlight, putting your personal brand out there. Like, I think Elon, one of the things he's kind of shown me personally is that your personal brand as a founder is super important. Like the way you just show up in the world and online virtually, like you kind of have to have a presence about you that is commanding when you walk into a room, and not in the same way as everyone else, but in a way that's consistent with what it is that you want and what it is that you're doing. So if you're trying to get funding over a Zoom call, if you're asking for millions of dollars, you're going to just, in a lot of situations, you sound crazy. Like you have to get into the room.
One thing that I think has been super impressive, in my first few exposures, I guess you could say, to the VC world, there was a founder close to me, and I'm from the Midwest. I think we were both around 23 or so at the time. And I just remember that guy was flying to a new city, like it seemed like every time I saw him or saw something, he was in a new city, flying, talking to an investor, because basically he had the same approach that you just talked about. Go there, shake the hand, talk to him, have the conversation. It's been a while since I've talked to him, but I know for a while they're doing incredibly successful. So I do think there is something about getting in front of people and being able to face the music. You can hide on a Zoom call a little bit, and if it's scheduled for 30 minutes and you're on the other side of the world and you're like, hey, I gotta go, maybe I gotta go, maybe you don't, but you have the out. But when you're in person, I mean, you're there, you're in the arena and you're kind of stuck there. So I definitely think there's value to that. Matt, do you have anything you want to add?
Yeah, I mean, I think that it also allows you to kind of vibe. Like, I think when you're on Zoom, it's an understood thing. Like, you pitch, they ask questions. Great, we'll go back to you in X amount of days. But where's the emotion? And I think investments are decided on with emotion and then backed up with logic. There's like some quote like that. It's not mine, but it's something like that. And I think that you're much more likely to get that emotional response from someone if you're vibing in person than on a Zoom. And can you raise over Zoom? Absolutely. But in general, I think in person is gonna be better. Which again goes back to why I suggest people, if they can, go to a hub so that you have more chance to spend time with people in tech and have a high context.
Tropic, go for it, man.
I have a question. Those of you that are obviously in contact with a lot of these founders, especially first-time founders, do you think that this is a skill that's lacking, especially post-COVID? Just like how kids are lacking social skills, do you find that a lot of these first-time founders are just relying too much on Zoom and tech and all that stuff, and they weren't necessarily doing that as much before?
Chris, Matt, you guys got any thoughts on that?
I don't know. Yeah, go for it, Chris. Go for it.
Well, I think before it was something that was happening. Now I see more founders that are trying, like they're putting in effort. But one thing, I interviewed Dana Robinson. She helps founders with their pitches, and it's not a fear. It's like when I talk to founders, I ask them about how often they get in front of the camera and record content. And a lot of them just don't have the strategy. So they're scared to go in person because they don't have a game plan for it, you know? And I think that's what stops people more than like them not wanting to. So I think we have a lot of founders that are taking that action and trying to. But if there's any like hurdles, I don't think this would be the biggest one. I think the biggest one is like we talked about earlier with the cold outreach and like the research area. That's where the problems like actually start. Because if you get to the phase where you have the connection and all of that, and you know who you're talking to, you got the warm intro, getting to them should be the easy part. You know, this is the easy part. I think if you're mentally you're a little scared to go and have that session in person, I don't think that it's the path for you. You know, but I don't think we see as many founders just getting caught up on that. It's the earlier stuff we talked about.
Yeah, I agree.
One thing I would add, I don't necessarily know. I want to clarify, and Chris, you might have a different opinion, but based on what Chris said, um, I want to clarify. I feel like there's a difference between being nervous and being scared. You know, if you're nervous at going into a pitch, you know, you're meeting with a big investor, you're meeting with somebody you've been trying to get a meeting with for a long time, or you know, your company, you know, getting this investment would be huge. I think it's reasonable to be nervous, but I think the scared part is you're scared because you know maybe you're not prepared or whatever it is. But I feel like it should be, as nervous as you are, I feel like it should be exciting because you know it's you're meeting with somebody to help you further out your dream, to help you further out your mission with your company, and so that's just kind of my thought. Chris, would you agree with that?
Yeah, yeah, I definitely agree. It's not, I guess I used the wrong word in terms of fear, because I think the fear comes from the lack of preparation. I think it's like that with anything, you know. If you're not prepared, then that's when the nerves really pop up. Because if you're prepared, when the nerves pop up, you just remind yourself, okay, this is a game plan. This is what I'm going to talk about. This is the problem I'm solving. Here's a solution. Here's why you should invest now instead of in 5 years. You know, when you have that kind of game plan, you have those boxes checked, and not from the perspective of you memorize your pitch deck, but you memorize those key points you know the investors care about, and you know you're talking to an investor that is excited about the space you're in. You know, I think that that makes it easier to kind of process things and remove that fear and that kind of block, or even a nervousness. You know, but I do agree that if you are nervous, that's a good thing, man. But be confident, man. I'm telling you, that matters so much. I'm seeing it now how important confidence is. It's like, I don't know, maybe top 5 things in a founder you have to have is just that unwavering confidence and belief.
And as far as knowing your stuff, you know, I know so well, you know all those numbers so well because that is what you're doing every single day. So getting a loan for your business. Obviously, if you raise money, you know you're giving away equity. If you do a loan, you know then you're going to pay it back, and so you know there's not equity involved. But from you guys who are in it, who see it all the time, where do you see the benefit is for the founder to look to raise money versus just go get a loan, you know, from a bank? Obviously, there's some obvious pros and cons, but I would love to kind of hear your guys' thoughts on, when should you do each of those?
So one thing I've kind of learned is raising is for when you want to accelerate. Like if you already got traction, you're already getting results, you raise money so you can get to the outcomes faster, you can make more money faster. The business loan is more of like if you're trying to get started, if you're trying to get launched and stuff like that. Like if you're trying to really get things going, and you don't have traction yet, you get the business loan. But the bigger investment of raising from these different companies, you got to be accelerating because if you just go to them with no traction, no results, and you say, "Hey, I want a quarter million, $500,000," but you don't have any results yet, they're going to look at you like, "Well, why? You haven't done anything." But if you go to a bank, you might more easily get some money out of the bank to say, "Hey, look, I'm trying to get started." Whereas if you already have traction, if you're like, "Hey, we're at X amount MRR or whatever it is, and you say, we want to accelerate to this level and this is how we're going to do it. We need your funding to do this. That's how it really works. And I think as a founder, you got to know which one is best for you. If you haven't gotten any results or the results that you wanted in 6 months, a year, 2 years, raising isn't going to be the move. It's not going to help you because you don't even know what you would do with the money. You're not getting results yet. That business loan will be a lot more valuable for you because if you aren't getting results and you work with an investor, they're going to be on you about getting results, and you just aren't ready for that.
So, Matt, I'm going to ask a follow up, and you can chime in on this follow up as well. So, how do you play the factor of even reaching out to family and friends when first starting out, and if you're getting a loan, you're paying interest on that, which you're paying right away, versus if you do equity, then you don't have to pay that back right away. And so if you're not to cash flow yet, that can swing the pendulum a little bit as well.
Yeah, I mean, I think that there is unfortunately, there is a specific persona that is most likely to get funded at the idea stage. And that's someone that went to Stanford or Harvard. It's someone that's technical. That's someone that worked for Stripe or Facebook, right? And the reason these people get funding early is because they have the context. The investors assume they have the context and the contact necessary to build a big thing. Now, I think if you're in this persona, go ahead and raise a pre-seed round. If you're not in this persona, you have two options. You can like try to become this persona, or you can look in the mirror and see how investors in general I like not the best path. They think if they just raise 500K, it gives an optionality, but that money is not free. It comes with lots of strings attached that are not obvious when you get it.
It's more impressive, when they go to start their next company or whatever it is. But they dilute themselves so much by raising money. Do you ever think that there comes a time where people are actually works against them?
we'll say you can raise money from us, but right after you finish school. So like they're going so early, and I mean,
Are getting the founders earlier, and it's good to see them get the funding. But like you said, with the dilution, it's like so many founders end up giving up way too much of their company because they raised too early at the wrong time. They didn't know enough. So many different factors, man.
oh, this is like the core of everything I do today, and what I've done for the last 5 years. This is like the underpinning, which is like I feel like the system takes on founders too early in their journey, but the system doesn't take the fall. It's always the founders. It's always the founder. The system will never take the fall for this, and it's like something that I think a lot about.
Got us. It did get us. But Matt, what you say there, it makes me think, there's no crying in the casino. You walk into the casino, the odds are stacked against of founders fail. And that going in, and when you go to raise money that there's risk involved, but that's a risk you're willing to take because you believe in what you're doing.
I don't know. I don't know if I agree with that. I think there's a large percentage of founders that skew on the younger end that don't know those things and are coerced by investors to take their money. It's very if you have like a legend in the industry that tells you that you're smart and tells you that you should raise money because you're really smart and you have a chance of building a big company, you're gonna listen to that legend. You're gonna take their money. I don't think that legend also is incentivized to tell them all the downsides that come from doing that. So I agree with you in general, but I definitely think there is a large percentage, let's say 25% of founders that get funding specifically in the Bay Area that are not going in eyes wide open and were actually sold something that maybe is not the same thing that they bought. They were sold something else. And maybe it's just my own experience, but I do percentage that feel that way.
So then let me ask you, the follow-up on that would be, those investing legends that, maybe coerce them into that before they're ready and invest in the company. What do they get out of it?
Oh, well, they get an index. I mean, look at YC. I mean, YC is like the king of getting. I mean, of course, it's not all young people. I know there are some 30, 40, 50-year-olds in YC, but in general, I would say it's probably at least 50%, 25-year-old people or younger. And they go to these colleges. They put on these events, and they essentially get all these kids to buy into what they're selling, which is good. Then they get a massive index, and as long as a few of them do well, it doesn't matter what happens to the rest. Now look, like boo hoo, I did YC and my company failed, and then like what's the worst that could happen? Like not much. We still have the YC network, but I don't think I think it's still not quite fair. I think that it's this path is being chosen. Sorry, to answer your question, what they get out of it is more options, more opportunities to invest in companies, and then more of a chance that one of them will hit. There's no downside except for the time and resources spent helping the founders, but they're a machine anyways. So like what's an extra 5, 10, 15 founders? They already are supporting 200, 300 per batch. Maybe less actually these days, but they 4 batches per year. You get my point.
Yeah, no, I think that's an interesting perspective. And I'm not in quite in the thick of it on that side as much. So, maybe that's a knowledge gap for me, but I would still think, and I know you think that as well, but that those investors would be, highly incentivized to only want winners. But I guess when you're playing the index side and just really trying to get a few winners, if you see a glimmer in somebody's eye or something, and that's all it takes for you to throw them in your index, then like you said, you don't have a lot to lose, especially with those people who have borderline unlimited money. So we're wrapping up here. We only have a few minutes left. We have a show every Thursday. except we're off next week, but we'll be back October 9th. And we just talked venture capital, private equity. So if you have anybody you want us to bring on the show or any topics you want us to discuss, feel free to send me a message. But before we wrap up, Matt, Chris, I want to give you guys the opportunity, and Tropic as well, if you guys want to share something you're excited about, something you're working on, and just kind of your final thoughts for the show.
I'm launching a dinner club powered by this platform that I like a lot.
I like to my dinners intimate, 10 people max, so where it's not super crowded, everybody can meet. Keep it about 2 hours. Usually a weekday, like a Thursday, is perfect. Fridays, people usually have something going on. Thursday afternoon is usually solid. Plan it out a month in advance at the least, usually like 3 months. Try to add a rhythm or cadence to it so people can kind of predict it. And then have a purpose for what people are going to do with this dinner, what the reason is.
Working on, you want to share?
Yeah, you guys will probably just see me all over the timeline. I'm like the wolf Swiss Army knife. Usually I spend most of my time on the Web3 and Bitcoin side, but
well. So I appreciate everybody.
crisis moment where all of these banks will get taken out, and then we'll have to reset. And I agree with you to an extent. I don't think that they're going to be destroyed and dismantled. There's quadrillions of debt in the system as of the derivative market, and there needs to be some type of transitionary vehicle that's used, and there also has to be a vehicle that allows for an asset to be leveraged in the system in a secure manner. And I believe in crypto, there are certain protocols that do provide that liquidity, do provide that security, and actually can act as a conduit for money that is needed in the system for any and all trades, whether it's cross border or not, via payments or whatever it may be. But I honestly do believe that there's a functionality for stable coins, not just on the negative side where you have clearly and brightfully illustrated that the CBDC clawback functionality is a definite concern. However, it is also a transitionary vehicle that allows for asset management when you're dealing with, higher or elevated finance, to manage your assets appropriately, through wealth management, basically. So it serves both purposes. It's just how do you use it and how do you control your own assets while being involved with participating in the digital marketplace as well as decentralized finance. What do you think?
Not sure I followed the question.
Well, pretty much I'm giving you a compliment on all these topics that
Thank you.
you guys raised, and I'm also highlighting the fact that there are specific functionalities that need to be addressed in the financial system. That, yeah, there's going to be some carnage with some banks that will be, dissolved, but then there's also going to be these exchanges that will most likely turn into new banks, and that your savings and loans scenario that you described will certainly play out, but there will also be liquidity pools that will allow for wealth management,
Hmm.
right,
Look,
to be used.
I love that question. Um, I try not to go into shitcoinery on this space because I'm a Bitcoin maxi. That being said, there's one kind of shitcoin environment that sort of amazes me because it has survived FTX, Celsius, BlockFi, every scam. It's just kept going, and it is a form of your own bank, right? And that's Aave. And it's really getting to the core of what you're talking about, the ability to do banking in a completely decentralized financial way using smart contracts, right? So I know where you're going. I'm a fan of Aave. I hate to say it, right? Because and I say that only because it has survived everything that's been thrown at it, and it just keeps going. That being said, I'm going to be honest with you. It's above my pay grade to understand it.
Okay.
Right. I just if you ask me to describe how Aave's smart contracts work, I would just look at you with a blank stare and say I have no fucking clue.
Well,
Right? It's just over. It's beyond my pay
let me
grade.
try to break this down a little bit so that we don't have to get into too much of the specifics between the differences in tokens, right, and what purposes they serve. Um, I just to give you some background, I've done an extensive amount of work and research, and I'm involved with different levels of government as well as law firms that are dealing with the counterfeiting of U.S. securities. All right, and a lot of the issue that needs to be addressed is how a transaction is actually settled. And when an obligation remains open in the system, it becomes a threat. And how do you address that, especially when you're dealing with open contracts, whether it's legacy or new digital, right? So there has to be a architecture that's involved there to force settlement and increase speed as well as have that security that's in place. So I do believe that functionality does exist. However, the bad actors in the space are still have their hands in the cookie jar, so they need to be addressed. So whether we're knowledgeable about all the intricacies of how the financial system truly works or not, the one thing that I've always come back to is what what does the technology behind a specific token serve as a purpose to support the financial system? And if the answer is it doesn't really support it, it just tells a story, then I know it's not real. So if it's something that is going to support the financial system, and again, as a Bitcoin maxi, I would support you have your own custodianship over your own property. So that plays a huge role as well, because but you're a participant in the market. At some point you are a participant. So how does the instant settlement of uh, of a transaction truly secure the value of your asset? That is the answer that needs to be addressed in this system and in the new system. So I just wanted to point that out, because I think you guys you're touching on some really important topics that are raising significant and important answers to what the US dollar needs to be protected with, like real hard assets, like a sovereign wealth fund or a strategic reserve. This is a new US Treasury certificate dollar that essentially will be created to replace the Federal Reserve note. These are two different structures of the US dollar that need to be addressed. And I think we're transitioning into
I
a new
agree.
US dollar. That's what I believe is happening.
Okay, I'll believe it. Look, we've got breaking news. This is a good one. Get ready. James Comey has been indicted. Yep, that's right. The former director of the FBI has been
For what?
indicted.
For what? Scott?
I have not seen the indictment. I've not seen the indictment. I'm just seeing
For lying to
reports coming
Congress.
on X.
Yeah, Dark said it was because he lied. He perjured himself, and this was expected. The statute of limitations was supposed to run out on the 30th of September, and so not saying it's not breaking. It definitely is, but I think this was expected.
It's the least of his
I didn't
crimes.
expect it. It's a shock to me, man. That's great news.
That is great news. So where do we go from here? I assume Grant. By the way, good to see you, man. I enjoyed doing your podcast this morning. That was a ton of
Thank
fun.
you. Thank you.
I appreciate you, brother. So where does this leave us? What's going to happen next? Like, this is a first shoe to drop. As we know, once you've been indicted and you're staring at jail time, you have a tendency to roll over. Are we going to see big tough James Comey rolling over on a whole bunch of his friends?
That's what I've always thought, Dark. Like, the minute you crack that veneer, these guys, they know they're all rats, and they're going to try to protect themselves. I wish it was a different charge, not a Mickey Mouse, whatever it is, lying to Congress potentially, but everybody's going to kind of scatter. All the rats are going to scatter from the cheese when the light gets turned on. And I think now they're all thinking, he's a soldier. He won't say anything. But, why take a chance? That kind of thing from Casino, I think, was the movie, right? And then they whack the guy. I think you're going to start seeing maybe not the bodies hit the people on the phone with their lawyers if they weren't already, because the news is not instantly new. I mean, we knew the grand jury. Had convened, but yeah, I would buckle up. Things are going to get interesting.
But I also think if you zoom out, there's broader implications here that like there's accountability. So like even if people in the Trump administration start, running afoul, that once things shift back the other way, these people will be held accountable as well. So I think it's really just bringing order back to, unfortunately, this dual system we have where we get these swings, but at times people on the fringes, maybe if they act out, they'll get corralled back in, and that could happen certainly the other way too. So we'll see. It's interesting for sure.
So you're saying they're
So here's my
bringing
question.
order from chaos? Is that what you're saying?
Hey, Grant, what do you think? What are your thoughts on Comey?
I think he's a fucking piece of shit.
Okay, well, I think we have consensus on the stage that we're dealing with a piece of shit.
Yeah, I mean, I just, regardless of what happens, it's kind of like the tariffs, right? It's a statement. You know, I'm here. I stand for something. We can use it to negotiate, but like it's just, it's high time now that Republicans learn to fight the same way the other side does. You know, you got to fight fire with fire, and Republicans have been. We always just retreat to our success and our money and the conservations of goods and resources and our businesses. We always retreat back into the things that we have, and the other side does not. They don't have anything to retreat into, so they just constantly go bonkers. And I'm not suggesting we go bonkers, but we definitely need to say, hey, there's a new fucking policeman in town, and we actually will push back now. So I like it.
Okay, so let's combine this Comey indictment with the corralling of 800 generals, admirals, and top leaders of the military. What's the next step here? I mean, these things have to
And
be.
by the way, if you guys can cover, you know, should I be trying to buy at 108 or 109? If y'all can add that into the mix, just for my selfish little self, I'd like to know.
Well, if you liked it at 125, you got to love it at 109. How's that for an answer?
I bought Bitcoin. I bought Bitcoin twice while we've been on this space, Grant.
Good, that's awesome.
Grant, I think the question is really turned on you and everybody else who's questioning it. It's like, are they going to print? Are they going to borrow more money? Are they going to overspend? And will Bitcoin stay secure and limited to 21 million? And it's always a good day to be buying.
You might have to go to the legacy side to look at the reverse repo number as it's steadily decreasing, and the Fed is and the Treasury is just buying back the treasuries on the open market. It's artificial QE again. So what's floating it?
I agree. Look, you know, you're buying Bitcoin because they're debasing the currency. If you believe the debasement continues, then Bitcoin's a good buy. If you believe the system is going to magically cure itself, then maybe you sell your Bitcoin. I don't think there's any way in hell that they're going to fix this system. I think they're going to put lipstick on the pig, but they only have one tool, and that's debasement. And I don't mean punchers debasement. I mean currency debasement.
Yeah, I agree. I think the goal is to kill the U.S. Federal Reserve note, right, and to replace it. I honestly do believe the U.S. Treasury is going to absorb the DTC and the Federal Reserve. That's why POTUS has been pushing to go after the governors of the Federal Reserve so hard, because he wants to get rid of those extensions or exemptions that are built into the 3334 Securities Act. Again, this is counterfeiting of U.S. securities. It goes back to Article 1, Section 8, Clause 6, the powers of what Congress truly has. So this is a lot bigger and wider. So Bitcoin plays an important role.
That's hard for me to argue that point. I like when you start citing the Constitution. I get very excited.
Let's go over to Jake Galt.
Yeah, hey guys. Just wanted to add. First off, I've thoroughly enjoyed a lot of all of the dialogue here today. It just proves that Bitcoin is about far more than number go up and just Bitcoin, frankly. You know, we keep talking about, are they going to put lipstick on a pig, or is the system broken? I'm of the opinion the system is working exactly as it's intended, and that's why, Dark, I don't think that it's doomer gloomer for you to want it to be blasted away into particles, because That's the only way to really fix something that isn't broken. You know, what's the Genius Act? What is the efficacy of these, you know, stable coins? Well, all they're going to be doing is sucking all of the lack of treasury demand up that you cited before. I mean, this is obvious where their focus is. It just buys them more time. Meanwhile, you know, as my name would seem to indicate, the last name there, I tend to think that Bitcoin is the digital Galt's Gulch, and I just love that all of us that are in this space have already found that, and you know, I hope more and more are able to find it, because I do think that whenever the great unwind does happen, you know, part of the gradually then suddenly, the then suddenly part's really going to be kind of crazy, and I hope that it's as calm and peaceful and collected as possible. But you know, something tells me that when you go through such a seismic shift as, you know, a system that's been in place since 1971, you know, totally being overhauled, I don't find that's going to be the most orderly thing. So, anyways, glad to have all y'all here, and really love the conversation today. So, just wanted to add that.
I appreciate you, man. I do really enjoyed the reference to Galt's Gulch. We've had a good talk on the Bitcoin Army the other night about what Ayn Rand would have done in a Bitcoin world. I think that's a fascinating kind of thought exercise. I spent a lot of my uh, younger life objectivist, big follower of Ayn Rand, and a big believer in the philosophy. I've wandered away only because of her stand on faith. Faith is so important to me. No question in my mind, Bitcoin would have been the currency in Galt's Gulch. That's de facto truth. If you check my bio, by the way, my location is Galt's Gulch.
Same here.
So yeah, man, appreciate you and appreciate you coming up. Appreciate the thoughts. And what's going on?
The beehive's nest, and I don't think this is the end of the story, but it's just me speculating.
Is just the first move in what appears to be a very complicated chessboard. I don't. I think that I think Obama's going to be on the list. I don't. I think it starts with these guys, and I think Brennan and his buddy. What was the CIA guy's name?
Doesn't
Shoot.
Obama have presidential immunity though?
It doesn't matter. Yes, he does, but not against treason. So look, I do. I think they'd win against Obama. Probably not. Not in this world. But indicting him is a different story, right? Or at least getting the ball started. I don't know. Again, you know, we're entering into a new uncharted territory.
Dark side.
That's just fact.
I'll remind everyone, like they came after Trump, right? He was the former sitting president, and they came after him. And so I think
They indicted him.
Yeah,
They indicted him.
yeah. So they tried to
And
impeach
they found him
him.
guilty. They found him guilty.
Yeah. And so like I mean once that like was that was opened, it's kind of one of those things where anything could happen. I do think that it's interesting, like you know, you'll see the propaganda. So to Trend Tracker's point, like I think you'll see the propaganda arms of the left come out and try to spin this all sorts of different ways. But it will be interesting because really, like in most Americans' minds, you have to think about the level of the FBI director. Like there's, you know, just baked in to most people's ideas about things. Their Overton window is like, hey, that's the, you know, top cop and this is kind of a big deal to have a former top cop getting accused of lying to Congress, and they're going after him. They're not giving him a pass. And so I think, like, you know, for those of us in this space, like, we have certain ideas about things, but then you have, you know, just like Normieville, like people who don't understand what's really going on. And whether they're listening to mainstream media or not, like it is a big deal. And they're trying to bring back some accountability, but also like it's a little salacious, right? And I think there's ramifications to that.
You know, one thing I'll add is Trump could really make good on one of his promises from his first campaign, and he could lock Hillary up because, you know, if any of us in this room did a fraction of what she did, we'd probably be in prison for a long time, whether it's, you know, bleach bidding 33,000 emails or, you know, her scandal with the Benghazi. I mean, I think there's plenty of, you know, there.
Hey, Dark. Dark, can you hear me?
Yes, sir. Yes, sir.
Let me tell you a little bit about her and what she did. I think I've told this story before. I was flying one night up at Fort Drum, an F-16, and I had an emergency. I had to land on a very short Army airfield in the snow, and there was no one up there. And it proceeded to be 2 feet of snow after I landed. So I had to sleep in an F-16 for 2 days. My only food was they had a little shack, like a guard shack, that had a you know, Dorito machine in there. I had to bust into that to eat Doritos and drink Pepsi for 2 days. They send a team up to get me, drive me 10 hours back to Pennsylvania. The F-16 stayed there. They dropped me off at home, and I had a piece of classified information in my flight suit. It was just basically the night's lineup card, but it's classified. There's nothing really classified on it, really. So I called down to the skiff and I said, hey, listen, this is me. I'm alive. I haven't slept in 3 days. I'm at my house. This classified has not left my person. And I'm going to come in tomorrow. It's not going to leave my person, and I'm going to drop it off for the burn bag. And they said, nope, you're going to get in a car and you're going to drive down to work for 2 hours. You know, literally, I was comatose, and that's that. So Hillary Clinton. So I would have been, and if I hadn't done that, I would have been in deep, deep doo-doo. And I've known plenty of people who've had securities violations with classified, who either lost their job or, you know, faced court-martial or worse, just through accidents sometimes. If it's purposeful, you're going to Leavenworth. Hillary Clinton had a classified server in her home for years. So that just tells you the double standard here. She would be breaking big rocks into fucking little rocks if she was some E4. Not that the E4 probably doesn't have that kind of clearance, but you know, some junior officer, you know, who has access to classified information in the TSI clearance, which she had. So the idea that, you know, we don't have a two-tier justice system is insane, and she should be prosecuted to the fullest extent of the law. And that C word is going to get indicted, and I'm going to love it. I wish that they were attacking in parallel here. Generally, it's not a good idea to go serially. Like, I'm going to get Comey, and then he'll roll, and then we're going to get to this guy, and then we're going to get to that guy. The real way to do it is to tee them all up and hit them all at once. Boom. And let them deal with it. I hope that's the plan here, because the other way is just slow and painful and not likely to succeed. Because if any single one thing you were counting on in the chain of things that must happen doesn't occur, the whole plan fails, right? Whereas if you attack parallel and hit them all at once, you have a much higher likelihood of success. I'll stop there.
Yeah, hey, I agree with you most of the time on everything you say, but I just want to say I think it's more important that from a promotional and a narrative angle to drop series of these rather than all at one time.
Yeah, I agree, Grant.
Trump yeah.
That
You know what I'm
is
saying?
attacking parallel, but like one and the second one, and then the 1, 2, 3, 4, 5, 6 in a row, that's not a good. But if it's groups of them based on whatever what they think they can get, and go deeper and deeper, I'm all for that.
You think Comey will be held? What's
I don't
his
know. I
next
was at a
move?
bare knuckle fighting. I was at a bare knuckle fighting event last week. Karam was there. We were down in Hollywood, Florida, and Roger Stone was there. Fucking crazy, but Roger Stone was sitting right in front of it. And they contacted CNN. They made sure that they arrested him and his wife out of bed in their PJs, and they made a big spectacle of it. So why we wouldn't play by the same set of rules for this piece of shit, I don't know. Should.
I think it's going to be very telling how this is handled, don't you?
Yeah, if we're playing by the the rules of Queensberry or whatever, then we're gonna lose. This is
Yeah, no, we're
this
not
is
though.
like
We're playing by Trump's rules now. This is how
yeah,
Trump knows how to play the game.
that's right.
He realized he made the mistake the first round. And look, I talked to this guy 2 years. Let me see, when was it? 20, I guess 22. Yeah. And he told me on a Sunday morning, I got plans. And man, he said it the way he said it to me was he was out of favor at the time, right? And it was just with so much veracity and so much commitment with like this guy. I think this guy was out of office for 4 years. He only sleeps 3 or 4 hours a day, and I think he's just been mapping this out in his head, and he's fighting fire with fire. But remember, this guy when he was a kid, and I don't think a lot of people understand this. This is a white kid in the. I guess his dad owned everything. They owned a bunch of property in Brooklyn or the Bronx.
No, it was Queens.
In the Queens. I'm sorry, in the Queens. So he's out collecting rents when he's a kid. He's knocking on doors. He didn't just have some fancy life. His dad actually made him work.
Yeah, one thing he's getting a lot of flack for is at the Charlie Kirk thing on Sunday. I don't know if you guys saw it. I actually didn't have time to watch it, but I did watch a replay where he was saying, basically, I'm paraphrasing, but Charlie, would forgive his enemies, and he's like, I'm going to go after my enemies, and I think that's kind of like foreshadowing for what's going on here.
I was there. And I'm gonna tell you, the audience loved that part of the speech. Absolutely loved it, and it was so funny, and it was so ad libbed. He's like, Charlie would forgive them. I'm sorry, I can't do that. I never forgive my enemy. I hate my enemy, and I want to put my enemy down. It was so funny.
Yeah, it's different too, right? Charlie's talking in a spiritual sense, and Charlie's not the head of anything. But if someone were coming after Turning Point or trying to bankrupt them, he'd have to fight them, right? He can't just sit back and turn the other cheek in that scenario because he's got a leadership role. He's got a responsibility to defend kids' jobs, the entity, all of it. Trump is the president of the United States. You can't just turn a blind eye to this level of corruption because then you're complicit in it.
Not only that, but they tried to kill him on Tuesday. Him and his first lady. Like, it's ridiculous. Of course he's gonna fight back.
Yeah, I do think the Secret Service maybe is correct in assessing that whole escalator thing as a threat for sure, but it is
Not
pretty petty
not
overall.
just not just that, but the bot farm that they found in a 30-mile radius from foreign entities such as like China and cartels were suspected to be involved. It was more. It's not just a remote control issue. It was actually real technology that was behind that hit or the attempt.
You're talking about the Sims, the Sim farms? Is that what you're referencing?
They found it in some type of office building. It was a bot farm of. It was supposed to take down the communications network of the entire United States. They were going to overload the bandwidth while he was visiting, making a speech.
Yeah, I do think I don't know. Dark Side, did you see that Puncher, Grant? Anybody else? Like, I do think that some of these things can be overblown, but like I think you're making a good point here. Like most people are not really taking these things seriously, and Maybe we should. Maybe it'll come out later that this was a bigger conspiracy all at the same time. Maybe not. I don't know.
Here's what I think. I think whether or not the escalator thing was a mistake, or the microphone, or the teleprompter, the only thing that matters is at this point, Trump thinks it was for real, and Trump thinks it was a threat, and that's all that matters at this point.
It's interesting when I listen to Puncher talk. This is a guy who flew F-16s, who had Hellfire missiles, right, and could, with the press of a button, basically eviscerate different targets. And I think when you've been in that position, you have a different approach towards these situations. It's a huge responsibility, right, Puncher? I mean, I've heard you talk about this, right? You don't take lightly to deploying a weapon, do you?
No, and to all my army buddies, I didn't have Hellfire missiles, but I had other stuff.
What'd you have? What'd you
Joint
have,
directed
brother?
attack munitions, that, depending on what I was flying, 500,000, 2,000 pound bombs, had 20 millimeter cannon, had Rockeye and missiles, and I had a lot of stuff, but I didn't have Hellfire missiles.
Yeah, but it's also a heavy responsibility to have those weapons, right?
I mean, yeah, you've got your guys down there ostensibly fighting the bad guys. You've got innocent civilians everywhere. And, I said a prayer every time I hit that, and look, it didn't happen that much. But when you hit that pickle button or you pull that trigger, I would just say, God, please let these weapons go where I think they're supposed to, where they're supposed to go. And God bless anybody who's in the way, and get them out of the way. I mean, yes, it's heavy. It's a heavy burden, and it's happening sometimes very, very quickly, where your heart rate's jacked, things are happening, screaming, you're not quite sure exactly what's going on, the fog of war type thing, and there's people depending on you, and it's life or death. So yeah, it's a big deal. It's been a minute, but it's a big deal.
Yeah, and I think Trump's in that position right now. Maybe even a more complicated, complex position, right? They're trying to kill him. He's trying to administer justice. Um, it's a tough spot to be in, man. It's not an easy spot. Not at all.
There was a
I just, yeah, go ahead, Punch.
there was a situation called Tarnak Farms in Afghanistan, and it was a guy who'd been a weapons school instructor and a Top Gun guy out there flying. He was a wingman, but he was the most experienced guy in the flight. His flight lead was a senior to him, but like an airline pilot, over reserve guy. And they had seen some fire rate, firing down on the ground, and he's like, they're shooting at us, and it's hard to tell sometimes. And he might have been a little bit aggressive. So he rolls in on it and he drops a weapon, and kills a lot of people. And then come to find it was Canadian troops down there just doing target practice. You don't want to live with that, right? So, and there was court martials and everything else. I mean, your life's destroyed, their life's destroyed, their family's life destroyed. It's heavy stuff. So, but sometimes it's so foggy and it's so urgent that you're just doing what you think is the right thing at the time, and just you're kind of hoping that your training takes over, and but you never want to see, like, somebody else get hurt. Some other person wanders in the time you hit that pickle button, and they wander into the frag pattern of whatever's happening. That's tough to live with, and that's why a lot of guys have PTSD and have real problems, because they're good men, but they just are in shitty situations.
Oh, man, all the love in the world to you guys, to the servicemen that give so much to protect us. Um, can't say
Well,
thank
listen,
you
that's a
enough.
whole other
Let me,
conversation about, a little deeper on that as well, right? I don't know that we were always doing the
yeah,
right thing at the right time for the right reasons. I didn't know it then, but thinking about it quite a bit now.
yeah, in hindsight, right? Hey, Attorney General Pam Bondi statement was out a while ago, but I'll read it. No one is above the law. Today's indictment reflects the Department of Justice's commitment to holding those who abuse positions of power accountable for misleading the American people. We will follow the facts in this case. I don't know if I trust her to follow the facts, but here we
Where
go.
are you seeing that?
That's on X.
Is that her account?
Pam Bondi's account. Yes,
Awesome.
her account.
I always felt like she was the weak link in the chain. I don't know if that's fair or unfair. That was just the vibe I got.
Hey, Dark Side. Trump signs an executive order directing the Attorney General to fully enforce capital punishment in D.C. and across the country for all applicable cases, meaning treason.
Is that breaking? Is that
Here we
breaking
go.
news?
Let's go.
Is that breaking news?
Yeah.
Is that new? Is that a new thing?
It's as of an hour ago. He just did it.
Wow.
Make treason punishable again.
That means, Hillary just made my death pool.
Wow.
People don't find any accountability in their actions. They tend to just continue to repeat the same bad behaviors. That's what I've learned with my 8 and 10-year-old anyways.
Well, it's so true, right? I mean, we're in the position we're in today because there was no accountability. And whether that's political or financial, I mean, look at 08, 09. None of the people at AIG who sold insurance on bonds that did not exist went to jail. Think about that. Like, that is the most obvious crime. Not only is it a crime, but we, the American people, were forced to pay $800 billion to bail them out for the crime, and nobody went to jail. And you're wondering why we're 37 trillion dollars in debt and 160 trillion in unfunded liabilities. Like, it's not just the political side, it's the financial side. I would love nothing but these Federal Reserve governors one by one and take them out into the town square, and let's have some trials, man. Let's have some open trials. Let's audit the Fed. Let's figure out banks, the member banks of the Federal. But I want answers. Peter Schiff, I see you down there, man. If you want to come up, just request. Love to have you up and talk.
I remember Comey. I remember when he came out in 2016. I was down in Seattle City, New Jersey on vacation in the garage of the house I was renting. And they had a TV watching him talk about Hillary and the investigation. And I'm like, here we go. And if you remember, the beginning of it, you're like, yep, she's going down. Yep, she's going down. And then, like, on a dime, he turns around and says, but no reasonable prosecutor would. And my jaw hit the floor. I go, they're going to let her get away with it. Son of a bitch. And, like, he's a guy who's got this smooth, soft-spoken way, right? And people gravitate toward that. And I'm just looking at this guy like, man, he's a criminal. He's in on it.
He was definitely very careful about his words in that particular blurb of his.
I literally I lost a lot of faith in a lot of stuff when that day I went upstairs. My wife's like, "What's wrong?" I go, "Man, we don't have justice in America. We're kind of screwed."
And that's what makes our system great, or at least made our system great, was accountability, right? And you could just see it, like, it's a slow rolling, cascade of events that get you away from it. But I have this. I talk about this quite a bit, right? That movie, The Untouchables, that as powerful as the mob was, they thought they could never get touched, right? And one man, Elliot Ness, brought them to their knees. And you just get the feeling, man, that these crooks think they're untouchable, right? They've reached positions of power, head of the FBI, head of the CIA, Brannon, Clapper, Comey. and then it goes all the way up to Secretary of State Clinton, and eventually to the presidents. I don't know if anyone saw the OMG piece that was put out last night, but I wanted to get sick to my stomach. This was one of the Epstein investigators talking about the fact that there were girls raped on the plane when Clinton was on the plane. And man, and this is a guy being taped, without knowing it. Wow, that was pretty hardcore. Anyone else see that?
Yeah, I watched it last night. It was weird. He was on an airplane. I don't know who he thought he was talking to, because the person he thought he was talking to was some girl maybe in a seat in front of him. He's blabbing like that. It was odd.
Crazy. But we got to bring accountability, man. People got to go down, and they got to go down hard. This Epstein thing, like, we got to blow this wide open.
I think it's interesting that Trump was talking about George Soros having RICO charges too. That would be nice to see.
He's probably a dinosaur at this point. Get his son, Huma Abedin, all of these people. Anthony Weiner. That Anthony Weiner laptop story that's been buried, that's one of the weirder stories out there, man. I don't know what was on that laptop, but what they said, like 9 cops saw that laptop, and they all ended up either committing suicide or being suicided or something along those lines. Now, this is crazy times we live in, man. Crazy, crazy times.
Hey, they're showing Comey shaking Trump's hand a couple times on Fox News. I always thought that I sensed disdain in Comey's mannerisms whenever he was in Trump's company. Shook his hand, looked at his eye, walked away from him. Always. I sensed it.
He knows. Trump knows. He knows too much. He probably knows a lot more, man. Here's the question, man. We got Dan Bongino and Cash Patel. Not sure what to make of Cash. I still trust the guy. Um, I think he's been put into a position where before he could strike, he had to build sort of the support. He had to win certain battles, right? I'm getting the feeling they're getting ready to strike, and it's going to be much bigger than just Comey. Comey's a small player in all this.
Yeah, well, think about Cash Patel, man. He became the captain of a pirate ship where everybody, you know, probably hated his guts, or the people that were close to the, you know, 7th floor knew he was a threat to them, and probably wanted to do everything they could to undermine the guy. It's like when I first took over the line division as a junior officer coming out of flight school. The guy prior to me, like anything went, they ran all over him, and you show up and you're like, all right, I'm the new guy, and you're gonna get tested in ways, you know. And these are good people who just didn't have the proper leadership. The FBI was rife with these hangers-on who somehow, and you see it a lot in government, incompetent boobs who know the right egos to massage, the right school to go to, the right person to suck up to, and they just kind of climb their way through this ladder. And all the really truly competent people are like, oh yeah, he's just a game player. He plays the game. But it just happens. It works, and the next thing you know, they're in real powers of position, and now you're subservient to them, and you're like, how the hell did that happen? I'm here doing the right things for the right reasons, trying to be a good a good public servant. But these other guys, man, they just sneak their way through the system, and then they end up the heads of stuff, and it's kind of bizarre to think about, and it happens quite a bit.
It's not just politics, man. That's true of Wall Street too. I witnessed that firsthand. I mean, it is absolutely insane. I mean, the best people get marginalized by the most corrupt. I don't know how else to put it. And at some point, your stomach just turns.
Yeah, and the good people go, they leave, they get out. They're like, you know what, I'm out of here. I'll go do something in the private sector, because they get disgusted by what they see. And you know, I wish they would stick around, but I don't blame them for bailing out for greener pastures, because they're not equipped to play that game. They won't do it. They won't kiss the ass. They won't kiss the ring. They won't do the thing that's ethically challenged. And so they just realized, I'm in a situation where I can't prosper here. I'm going to go.
Hey, Dark, did you ever trade on the trading floors?
Yeah, so I was a market maker. I started in '89 on the floor of the Philex, moved out to San Francisco, traded on the P Coast options floor again, and then landed in Chicago on the CBOE. So I was on the trading floors for let's see, '89 through pretty much about 13 years, and then I kind of moved upstairs, eventually building Dash and bringing that company to market.
Oh wow. Did you ever meet the Nigerian brothers? Do you know who they are?
Of course I did. Yeah, yeah. I traded on the floor with Pete and John. Yeah.
Man, that's pretty cool. Okay.
That's your only question? Did I meet the Nigerian brothers?
Well, I mean, I don't know. I mean, I've got a ton of questions, but I'm
Go
a big
ahead,
fan
man.
of
Fire
theirs.
away.
I'm a subscriber to their services, and you know, they just seem like some really good dudes. So I don't know. I just thought I'd ask.
Sounds good, man.
Hey, Dark, did you have any activity with Direct Edge back in the 90s?
Of course.
You did.
Yeah, so I built Dash Financial, and Dash was an electronic order routing algorithmic platform for options. So sure, you know, I mean, before Direct Edge, you know, I've watched what I would call the proliferation of options exchanges and ATSs and all of the dark pools. The whole thing is just one gigantic criminal enterprise.
So
You know, when I started in the business, there were 4 options exchanges, and by 2009, there were 14. Now, ask yourself why you need 14 options exchanges.
well, I was gonna get to this. My second question, and that had to do with what the SEC approved in 2004 with the Auto X Trade pilot. That was right after Direct Edge started to blow up. So I was
Yeah, I think it's something else, man. So I'll tell you what I think. Well, what I know, right? So many of you are familiar with what we call the best price rule, the best execution rule. And the best execution rule is very clear that if I buy an option on my exchange, on the Picos and the CBOE, it doesn't matter where I buy it. If the price is $1 on all 4 exchanges, then I've met my obligation under the best execution rule. The problem is that if I buy it on the CBOE, they're going to give payment for order flow. If I buy it on the Picos, they're going to charge a fee. If I post it on Direct Edge, they're going to give me a credit. Okay, so you're able to trade the same option at the same price, but the 3 different exchanges all have different economics.
right, and Direct.
So what happened is that all of the people that owned electronic platforms were routing your order where it was most cost efficient for them, where they got the best kickback. It had nothing to do with getting you best execution. It had to do with capturing the most profit for the broker dealer. That was the genesis of going down the high frequency trading rabbit hole. It was the loss of agency, where the person representing you could care less about you. What they cared about was capturing the most profit for themselves. That that started with the decimalization of the markets back in 2001. Right before, when we were in fractions and trades were conducted human to human via open outcry, we didn't have this problem. But once you introduced this problem into the equation, then the criminality kicked off to a whole new level. I mean, it became a mad rush to loot the fuck out of your clients. Pardon my language.
Right.
But that's really the answer to your question. I mean, I don't know how else to put it to you. I lived through this. I watched markets go from, look, not that the open outcry system is a perfect system, but there was real accountability. If you screwed somebody, you had to look at them the next day, right? So the concept of ripping somebody off or taking advantage of somebody really wasn't there because if you did it, you only got to do it once. But once we became anonymous in an electronic system, then it was screw everybody as fast as you can for as much as you
Right.
can. Because then you never had to look at
That
it.
was the point of the ATS, ecosystem. It was all to support that ECN so that all participants could connect to it. And the whole game is
Mhm.
speed, right? Whoever could get the order fastest or whoever could fractionalize it, right? Fractionalize the share and keep the volume up, they could collect more on fees on the other end.
There you go. But then we can get into the payment for order flow
Yeah.
scam. I mean, it's one scam after a next, and what happens is you layer these scams on top of each other, and eventually you got a real problem, because then the entire market is one about screwing somebody, and it's not an honest marketplace.
Well,
That's where we are
well,
today.
yeah, the prime brokers don't get failures to receive or failures to deliver data
Don't get me
that's
started on
accurate,
failures to deliver.
right? They don't get accurate data because it's outside the CNS system and it's designed to be a laundromat. That's basically what it is.
You're not wrong. But that's just one of the when we're talking about the CNS system, which by the way, that's the stock loan platform, uh, and the delivery system. The whole thing is just it's such a fraud. I mean, I've touched on this earlier, um, and you'll just get me fired up again. I'm trying to wind down here. We've been going now 5.5 hours or 5 hours, getting tired. But let's focus back on Comey, and then we'll kind of round it up and get relaxed and watch some football tonight. But Grant, what are you thinking, man? It's crazy. Not sure he's there, but anyway, it feels like this is just the first shoe. I'm kind of getting excited. I want to see this thing like really go down. I want to see it accelerate. Some people that out there that aren't sleeping well right now. When you say so, Puncher, I bet you those lawyers in D.C. are getting rounded up. They're
Yeah,
licking
the
their
white shoe
chops.
boys are got cha-ching, cha-ching, cha-ching. It's gonna get ugly, but I don't know that. Look, the rules. If these are if it ever gets to treason charges, they're not going to be brought in a court of law that can drag out for years on end. This is a military tribunal, and the same rules don't apply. The rules are much different.
So, do you think that's why these generals are being brought to DC? I mean, I speculated that earlier today with Gary. I really do think something's afoot here that's much bigger than anybody's paying attention to.
If it's not that, look, Donald Trump is not going to war with Russia. Donald Trump is not starting a war. He's just that's not him. So I can't think. When you said it, it rang true to me, and we could be wrong. Um, but that rang true to me that they've kind of purged the military, not purged the military. They've de-wokeified the military and got rid of this DEI culture and all these political actors. And now they're bringing everybody together, saying, "All right, this is 1776 again. The enemy is within. They're inside the tent, and your job now is to go back and prepare for, whatever military tribunals. This is the plan. This is what we're going to do, and kind of, you swore an oath to uphold, to protect the United States against all enemies, foreign and domestic. We're in the domestic phase." Now that sounds really scary to people. Like, oh well, he's just persecuting his political enemies. No, no, no. That's already happened. The other side did that. The deep state did that. And I do think that I hope that this is a cleansing of the rot that is the deep state inside our government. And if not, man, we're in.
Is there any chance that they just do Comey and then they stop there?
Now we know they've got grand juries for Brennan and Clapper too. So this isn't just the
Yeah, I was thinking earlier. I'm really worried for his safety at this point because it would be nothing for them to take one last shot. It's not that hard, because they're desperate. When you back someone into a corner and they're desperate, it's amazing what they might do. So we'll see.
Which brings us full circle back to Charlie Kirk and that bullshit story that we've been peddled. I think that's going to come unwound. I really do. I think there's something weird going on. There's something super weird going on. What was that spy plane doing there? I don't know. What were those drones doing up there? I don't know. But something's not right. You see the Ryan's piece from last night?
No.
Talking about that microphone that he had on his
Wait,
shirt?
Ryan who?
He had a
Ryan
small
who, Doug?
mic. I think is it Mata?
The guy who's former Navy SEAL, that guy?
Yeah,
Oh, yeah. Oh,
yeah.
it's not. Yeah.
So he did a space last night with some really somebody paid for some raw footage that was taken in front of Charlie Kirk. So they, instead of having uploaded, because once you upload something or you put it on social media, you lose a lot of the quality of the video. So they paid for some raw footage, and it really, I mean, he made an unbelievable case, not just from the footage, but you can clearly see before the wound in his neck. To me, like the mic was attached to a broadcasting device underneath by like a magnetic clip. So the mic is sitting on top of his shirt. Underneath his shirt is what essentially is like probably some type of broadcasting in Hezbollah's pager explosion. And it looks to me like after that explosion, a projectile comes out of that device and hits him in the neck. That's what it looked like to me, man.
Let's
That's as good as an
dial in on
explanation.
this. There was obviously somebody on that roof, a kid, ostensibly the kid they caught. Forget about the fact that it's just very hard to swallow that, he set up a tripod with the weapon he used that somehow didn't penetrate Charlie's neck and his bone stopped it and all that happy horse shit. You'd have to be, I mean, would they be just listening for the shot, the ring of the shot, and then detonating it simultaneously? And then where's the
So
round?
I
Where's the
guess
other round? What's the crime scene look like?
I don't think that. So I don't think that kid ever shot anything. I don't. Matter of fact, I'm not even sure he had a rifle on the roof. Um, this gets kind of like, first of all, we've never seen anything with this kid with a rifle, right? We've only been told about the rifle. It certainly doesn't make any sense that he brought the rifle onto the roof
Well,
in a
he is
backpack because that
walking
barrel
weird
would.
with the rifle, apparently down his leg to
Yeah,
get there.
but well, that's after he jumps off the roof, and I think he's walking weird because he broke his ankle. That's my
Oh, I always
personal
thought that was
opinion.
prior. I
Look,
thought that was his ingress.
no,
No.
no, no. Look again. Remember, with AI and the technology that these criminals have, we could be made to believe anything, right? Like, you can tell us a story, but to me, they're just stories, right? I believe nothing of what I see or nothing of what I hear and only half of what I see. Um, I'm kind of in the camp that the shot was probably taken by a drone um, as a distraction, just shot into the lake, and that device was probably triggered by the shot, right? By the sound effect of the shot, and that's the only reason you can explain no exit wound. As you know, Puncher, I mean, there's just no chance you're shot with a 30-06 from 145
Yeah,
meters, and
that's
that
that's
yeah,
not
I mean,
even
come
in the
on,
realm of. believability. But
It's not even in the realm
but
of
now you
possibility.
get into
Anybody's ever shot.
how many people must be colluding? Like, why would Cash Patel look? There's obviously a ballistics trail here.
Oh,
Why
I
would you?
mean,
Why would you not?
yeah.
How would this not be uncovered when they do? You know, when they investigate the crime scene, and how do you know? It just seems crazy to me that many people are colluding on this, and that's the people who, after the fact, come in and investigate the crime scene would have to be on board too.
And or maybe they're not, right? Like, remember, we don't know. Again, if you have the coroner on your side and you have a bunch of investigators on your side, then you can contain the kind of the web of knowledge. Like, the truth never gets to Cash Patel. But again, there's other things happening. There's other evidence out there. Someone just posted, let's see, Puncher. Let me read this. So it looks like he was shot in the side of the head with a 5.56. Um, I guess maybe I don't see an entrance wound in the side of his head. The exit wound that would obviously look a 22 cal, which is a 5.56 round, coming. Would leave an exit wound that size. So I guess that story is somewhat believable. But we don't see a shot being taken. We don't see any video of a muzzle flash. It's just hard to believe, man. Possible. Look, anything's possible. I'm going with more. I think like I'm going with the pager kind of thesis, but it doesn't matter. The reality is that the story we're being told is bullshit, right? The story we're being sold is bullshit, and anybody who's ever shot a 30-06 knows that, and is not buying it for 10 seconds.
If you don't mind me asking, what's the pager theory?
So similar to the pager detonation in Hezbollah's case, the device underneath the microphone that's on his shirt appears to explode. Now, you could put a small type of piece of shrapnel in there that's designed to travel towards the neck, right? Like that could be designed that way with a particular explosion. That would certainly explain an entrance wound without an exit wound.
But wouldn't there
Hey,
be-
Dark.
Sorry.
Sorry, go ahead.
I was just gonna say, wouldn't there be more impact like his torso area then, or
Depends on how the device is designed. Right, you're thinking it's a bomb. It may be more of a gun.
It's a shape, like
mean,
a
you
shaped
can divide-
projectile, like almost like a IED, but at a miniature level, right?
Very small, right? And just designed to shoot an 8-inch, an 8 millimeter, steel ball to the neck. Bullet. They stopped a 30-06, basically a 30 cal, high velocity bullet from exiting his neck. It's not a believable story. It's absolute garbage.
I'm putting
So, I
some
mean,
posts from Ryan. It's Ryan Matta, Matta, and he's got all manner
Yeah.
of like posts in slow mo and all kinds of stuff from things you haven't seen in the regular
Yeah.
press. And some of it's it's pretty gruesome, but it's seems to be legit.
But all I know is that the story that we're being told, that some kid who's troubled and dating a trans fury and all this crazy stuff ran up on a roof without a tripod, without apparently any type of gun mount, right? Like at Puncher, you know what I'm talking about. He would have to have like either hunting bags or something to stabilize the gun up on the roof, right? Took a 30-06 shot with his heart racing probably a million beats per minute and delivered it on target, right? One shot. It's not that part is unbelievable. Now let's just talk about no exit wound with a 30-06, which by the way, I mean, this Mauser is a pre-World War II rifle. The rifle that was shown in that picture had no serial number. It's old. This is not a sniper rifle. It's not the type of rifle you would choose for a sniper event. Anyone who's ever shot one of these old Mausers, and I have, they're just brutal weapons. I mean, it literally black and blues your shoulder brutally, right? Like they're nasty recoil weapons. Something in this story is complete bullshit. I don't know what the real story is. Is it the pager concept? Is it something else? I don't know. But that story that we're being told is bullshit. By the way, on the drone side, John Cullen's done amazing work on this. John Cullen's the guy who did all of the ballistic work at Butler. And what he's saying is that there were two shots, not one. And he's done that from sound analysis. There was one shot and then a second shot suppressed subsonic and he isolates the distance at 75 yards. So there's a lot of stuff going on here, right? Like, of course, this flies in the face of the exploding pager theory, but his theory is that the drones killed him with a subsonic round from 75 yards. Now, that's possible. And if you use the right type of munition, you could have a munition that tore up inside the neck, right? It's not a 30-06. But more something along the lines of a 300 blackout, right? Something subsonic. Go ahead, Vinny.
Hey, what's up, guys? Great space, of course. Been listening in and out throughout the day. Just wanted to toss this out there and get your thoughts. But what if, say like the CIA, for example, caught wind of this Tyler kid, plotting something, right? And they saw it as an opportunity to create like a false flag. And, if Tyler wasn't able to complete the job, they'd do it themselves because they saw an opportunity to basically rile up the right to galvanize and then galvanize the base and then obviously have the support to now go after, James Comey and all them and all that. I don't know. I'm just tossing it out there. I'm more of a, independent that like leans right. So it's not like I have a horse in the race, so to speak, but could that be a possibility?
Anything's possible. I just don't think it's likely. Look, this smells to me very much like a very high-end operation. Let's go back to the Hades airplane, right? So we now know from flight radar that a CIA spy plane, a Hades Gulfstream 650, a Bombardier G650, left Kalispell, Montana that morning, flies 3.5 hours somehow right over University of Utah, that UVU campus over Lake Utah, which is not Salt Lake, it's a separate lake, drops down to 600 feet, flies at 120 knots, pretty much, I think 105 knots is stall speed. Okay. Comes all the way down, does a full pattern around the lake, then departs for El Paso, Texas. Then, weirdly enough, it leaves El Paso, Texas. I'm not sure where it's headed. It comes back to UVU, drops this time down to 325 feet. Okay. And drops its speed down to, I believe it was 118 knots at 325 feet. Now, nobody can explain what the hell is the plane doing now, right? The requests for the communications from Provo Airport have been denied on the basis that they're confidential. So what the hell was going on with the CIA spy plane? Both 3 hours before the assassination and a half hour after. What is it doing at these altitudes? Puncher's already told us this is illegal. You can't fly down at 300 feet. Not at 108. I mean, look, and very close to stall speed, like really close. And if you stall at 325 feet, if you catch a tailwind, Punch, what happens?
I mean, it depends on the aircraft, but nothing good. I mean, what do you mean coming in like, for landing? Like, look, he could be
Well, he's not
gear.
landing. He's
Look,
flying over the
they
lake.
could have gear up, flaps down, you know, but it's not. You're not. You would never in a million years do that unless you were operational, doing something. They're not. They're not. They're not
There you go.
transiting the area. They're not coming in for an approach. They're operational at that altitude, that speed, whatever they're doing. That's an operation.
And you can look up the G650. This is a major business plane. This particular model is an 80s spy plane, and it's a CIA spy plane. Not the type of plane you or I were Grant's flying around in. But wow, yeah, there's a lot of shit going on here that's unanswered, and I mean, hopefully we're going to get to the bottom of it. But I think this all ties into Comey and Butler. I think all of these things are connected, and hopefully, all lies will be revealed. That's all we can hope.
I have a question.
I don't know what to say. Go ahead, bud.
Do you think that the plane served as a elevated amplifier?
Don't know. Is it possible the plane was dropping off the drones
It's possible. Just
and then picking them up?
think.
Because remember, it dropped them up. The first time it came in, it flew down to 600 feet. On the way back, it flew out at 300 feet. It came down to 300 feet. We know these drones were flying at 150 miles an hour. So something crazy is going on at this event at UVU. We don't know what it is, but something crazy happened.
What I find crazy is that there's no time prior to Charlie getting shot. If he's at 300 feet, if an airplane like that flew overhead, and I mean directly overhead or anywhere close, every eye would look up and look at that thing.
Well, it was not overhead. It was over the
Okay,
lake.
gotcha.
So would it be in a position to deliver some kind of drone, right? Drop off drones and then do some type of midair capture of those drones? We know that there was a request put out at some point for the ability to deploy, and I would assume capture drones from an airplane. But I assume that technology has been designed. Is that what we were witnessing, and is that why this is such a special spy plane that's being used?
I don't know that you
I
would
don't know.
need to do that. I mean, drones are pretty simple. You know, you go a mile away, you
Well, but
launch it
these are
up, GPS,
150.
you put it where you need it, it flies back, you put it back in the bag, you take off.
Yeah, these are 150-mile-per-hour drones.
Well, that's
so these
not an
aren't your
average
average
drone. You're
drone.
right.
Right? There's something else was going on, and I just don't know what it is. I mean, again, this was 3 hours before and 35 minutes after. Who knows? All right, Punch. We've been at this for over 5 hours. We got a football game coming up. Maybe we'll take a couple last questions and we'll wrap it up for the night.
Hey, Dirk, can I ask you a quick question?
Go ahead, Feather.
Hey, so this is completely off what we were just talking about, but maybe in Wicked Space or something, you were kind of talking about putting stuff on the block or on Bitcoin, whether it be governments putting sensitive data on there, or whatever it is. So my question is, though, I can kind of wrap my head around, like,